Good morning, everyone, and welcome to day 2 of the Mining Investment Event of the North in beautiful Quebec City. Bonjour et bienvenue à la deuxième journée de l'environnement à la belle ville de Québec. My name is Joanne Jobin, and I'm delighted to welcome you to the National Bank Financial Markets Critical Metals Day. Today's moderators include Thomas Bachand, Mary Zhang, and John O'Sullivan. And before we continue, I would like to thank our sponsors, and in particular, our key sponsors, the Government of Quebec, Laurentian Bank Securities, and of course, National Bank Financial. And now, to kick things off for the Critical Metals Day, please help me welcome Managing Director and Head of Global Mining and Metals Investment Banking, Elion Turner.
Good morning. Okay, perfect. All right. Hey, thanks for coming. Thanks for being out here this morning. Let's start by first thanking Joanne and her team. An amazing event, an amazing effort of logistics, planning, herding the cats. Thank you, Joanne. Also wanted to thank the Quebec government and other government officials that are in attendance here, companies and other participants in supporting this event. Also wanted to acknowledge my colleagues and partners that have joined me on this trip today. I've got Andrew Gilbert, Christina Lopez, Greg Doyle, John O'Sullivan, Mary Zhang, Sam Gibson, and Thomas Bachand, all from National Bank, all from different areas, equity capital markets, sales and trading, and investment banking. So hopefully you get a chance to speak to us later today. We all know that the world is accelerating to a low carbon economy, which means mining companies need to find the minerals that will fuel this shift. Governments need to create the right policy framework that simplifies permitting rules, introduces appropriate incentives to attract investment and build necessary infrastructure. Canada is very well positioned, as we all know, to support these new supply chains. We've got an abundance of critical minerals, and we've got companies with the expertise to define and develop these mining projects in a sustainable way. We in Canada are known for our mining equity capital markets. We've got sophisticated capital markets. We've got highly skilled and experienced advisors. We've got broad and deep institutional retail investor bases, and we've got strict mining regulatory regimes, all of which has accumulated over many decades. And the headline statistics are indeed impressive. 40% of the world's public companies are listed on the Toronto Stock Exchange. Over the last 5 years, these companies have raised some $45 billion in almost 7,000 financings, representing 50% of all the money raised on the TSX. Again, this year, mining's been a bright spot for the TSX. Approximately $2.5 billion has been raised, and miners have dominated 8 out of the 10 largest transactions, including recently the Capstone secondary transaction from Orion, which National Bank led. However, contrast this with the facts as we understand them today, that there's going to need to be some $500 billion of investment over the next 7 or 8 years to meet the supply demand in critical minerals. And so I want to spend my time today talking about these capital markets that we're so proud of, and diving into their ability to finance the needs that I just outlined. The surge in demand from critical minerals does represent an unprecedented amount of capital that needs to be invested by mining companies. And my thinking is that the capital markets will not be sufficient in and of themselves to support that investment. And by definition, we'll need to see other pools of capital, whether they be private equity, OEMs, and such, which I'll talk about, to help fill in that gap. So just starting with some background, level setting, the discussion Here is what is seen or projected by the sources we found. I'm sure people have different views on this, but I think they're all trending in the same direction, which is we've got large growth rates expected in the key five, if you will, critical minerals. Copper, nickel dominating right now, but you can see lithium's growth rate at 200% is significant. And if you assume a price for lithium where we've had it in just the last 24 months, the size of that lithium market does start to approach the copper and nickel markets. In addition to the capital that's going to be needed, as I said, we estimated somewhere in the range of 500 billion in the next 7 or 8 years. We do see a lot more M&A transacting, and that's really for two reasons. One is the capital requirements. So companies being bigger will have access to more capital and therefore be able to fund bigger projects. But there's clearly a desire for these critical minerals in the usual suspects. Think about a BHP Oz transaction. And then, as rumored last week, think about a Barrick and First Quantum transaction. Lots of attention, as you know, on this space. We've seen a corresponding increase in prices as well to start to match what we think is going to be the demand dynamic. And while this is strong, it does appear that higher incentive prices are still required to really get some of the projects that are needed to fill the gap started. And mining companies and mining entrepreneurs, which there are a lot of in this audience, are driving that. Again, you can see the growth rate in lithium at the bottom of this chart and how significant it is and how it could become one of the more critical of the critical metals in the next 7 or 8 years. So the state of the capitalization of the global capital markets is interesting. So you can see here it's grown from 2020 from just over half a trillion, of global value to now it's at $1 trillion of global capital markets value. Now, interestingly, though, you still can see where you can see the copper and the diversified shading. So really the bottom part of these circles, they still represent 85% of the total market capitalization. So that's the diversifieds, the Rios, the BHPs, et cetera. And then the whole copper suite, names like Antofagasta, First Quantum, Southern Copper, et cetera. 85% of the world's capitalization. Lithium has had the biggest growth of the others, and you can see it went from 15 billion to 77 billion over this time frame on a global stage. So almost 4 times growth. If we look at it on the TSX, you see a similar trend. So you can see lithium there at the top. It's grown from, call it just under 2 to about 8 billion of our market's value. So 4 times growth as well. But interestingly, if you look at the other two, the two big shaded areas, it being the diversified, we only have one, of course, that being tech, and then copper, we can see that we've gone from total market cap percentage where those two sectors accounted for 97% of the market's capitalization back in 2020. Today, they're about 90%. So lithium has definitely grown and is now, as I say, about 10%. But interestingly, if you think about the copper just for 1 minute, the 5 big names in that copper bucket are First Quantum, Ivanhoe, Lundin, Capstone, and Filo. So what do those all have in common? None of them have Canadian projects. They're all, TSX champions. They've done well. They've grown. They've raised money. They've done M&A. Yet none of their assets are in Canada. Then, of course, Teck, who, there is a corner of Teck waving the Canadian flag. They themselves don't have significant copper assets in Canada. So our market, while an excellent funder of copper generally, and as I just outlined, global copper, doesn't have yet its own domestic copper champion. But that's hopefully going to change. Here's a map of where lots of companies are exploring across the country. And you can see it really captures every province pretty much and every commodity. And so this map really represents a development map more than anything. And that's what the TSX has been very, very good at funding. So to that end, again, the TSX, we fully believe in the TSX, see it remaining as a very natural destination for mining companies. But its total market cap of half a trillion, divided over some 1,200 companies, does suggest that, as I said from the start, that there is going to be a gap that's going to need to be funded by other sources. Given that the vast majority of these 1,200 companies are development stage, smaller stage, and the market itself hasn't shown the ability to potentially fill in half a trillion of issuance over the next 7 or 8 years, which I'll explain in a minute. This is a dive more into the actual mining deals. And so you can see this year we've done some 2.5 billion of mining issuance, call it, for the first 6 months of the year. If you X out Capstone and Cameco, that's $1 billion. So that's $1 billion of total mining money raised in the first 6 months. If we extrapolate that for the year, it's 4 to 5 billion. And remember, I said we need 500 billion by some estimates by 2030 to fund what is required. Also keep in mind that in 2009 to 2011, give or take, the average issuance during that time by year was about 15 billion. In fact, there was a 20 billion year in there. So our market has shown the ability to raise very significant pools of capital to support mining. But there have been lots of structural changes to that marketplace, including the funds that have access to resource money and that have traditionally played. So again, there will have to be a reset, a refilling of those pockets, either in mining investors, traditional mining investors, or other sources of capital, which I'll talk about. This is just one more dive. So we went from all mining to critical minerals. Now we're going to critical minerals, And so again, you've got about 1.1 billion, which includes Capstone, which was a secondary by Orion. So that didn't go into the company, didn't go into the ground. So if you X that out, we're really talking about 800 million so far of capital raised this year, which again is keeps a lot of people busy and keeps our markets fluid. But in the context of what's required, does start to open the eyes of what is going to be needed. Here we just dived one more time into the exact metals and the type of issuer that was issuing this past year. And so copper being the most active, about a third of those deals were developer co, followed by nickel. And then it starts to get pretty skinny when you talk about cobalt, graphite, and then lithium. This is the list of companies that have raised more than $25 million since 2022 on the TSX. You can see that, again, the biggest deals in our space were the Capstone secondary by Orion, the lithium royalty IPO. So that's a different beast, if you will, but obviously funding development, lithium and other critical minerals development by taking that type of instrument back. And then the Ivanhoe Electric, which is the Arizona project. Otherwise, the nature of our financings have been smaller and have been focused on more development stage PA and even earlier stage financings. Just thought I'd put this up. This is for development stage capital. This is just a summary of the key deal terms we've seen in the last year and a half on the TSX by commodity. So you can see, averaging about 5, 6, 7 deals per sector. Average deal size, some $25 million. Just the share discount is anywhere between 8 to 10%, and then there's usually a warrant on these transactions, which will increase the ultimate discount to the investor. So with all that said, it just becomes quite obvious that new pools of capitals are required. And not to say that they aren't here, but I think there is still, to some degree, a misunderstanding of some of these pools, how they work, what their relevance is in the food chain. and how early they can get involved. So clearly, equity is the baseline, and we know that we've seen equity investors, not necessarily always the same equity investor, be able to invest from exploration all the way to mine. And now we're starting to see strategics like corporates want to come in earlier. There's some, very good examples of groups like that, whether, you talk about Agnico Eagle, obviously that's on the precious metal, Tech on the base metals, has a reputation for early stage investments, Hudbay as well. But more often than not, groups like the Japanese trading houses or sovereign wealth funds, they can't come in that early. So they'll come in later, usually feasibility stage. Streaming and royalty companies have really filled in a gap and have really changed their business profile over the last decade. Again, if you aggregate the total market cap of streaming and royalty companies, we're probably talking 60 or 70 billion of market cap. And remember, I said the total market cap of the TSX mining group is about $500 billion. So, they're somewhere in between 15 to 20% of all mining capitalization, and therefore do represent a very important source of capital, who are active and can invest across the value chain, and more recently have shown flexibility on terms like buybacks, like step downs, other forms of terms that help alleviate the burden of those instruments over the life of mine, which is usually the biggest sticking block when miners are thinking about that form of financing. Project debt and bank debt is something that has changed over, again, the last 10 or 15 years. There are fewer banks that are doing it. In National Bank, we do single asset project financing. Our most recent example would be the Artemis Blackwater deal, which we were lead on. Before that, Atlantic Gold. And we've just invested in some technical folks to join our team so that we can ramp up our project financing, and certainly are looking for opportunities in the critical mineral space. But there's still this missing link of fresh capital, as I've said, and that really is this emerging sources at the bottom of this slide. So first, as I said in my opening remarks, the governments have realized what is going on, what's needed, and are certainly making strides, whether it's in policy or subsidies or other forms of inducement to bring players to the table. And those governments are Canada, the US, Europe. So that's a very positive endeavor, and helping to allow countries like ourselves to catch up in this critical minerals race. But then you've got folks like the non-traditional strategics like auto OEMs that are going downstream, and really taking the place of what should be the traditional mining companies, the diversified ones for sure, like BHPs or Rios. But these groups are still not fully comfortable investing early stage for what would appear to be growth investing for the long run. They're still very much returns driven, and so it becomes difficult for them to get engaged too early. But that's where the auto OEMs and others are starting to step in. And then finally, just touch on some of the M&A activity we've seen in the critical minerals space. This is again since 2022. What we're flagging here is our deals over $200 million, and you can see that in the last 6 months the trend has certainly been lithium. That's where the bigger action has been, but copper certainly makes up the balance of it. One thing I'll just note, just an interesting thing I've noticed in the sector over the last 2 years, if you think about the bigger deals that have done in the sector, they've all started with what I would call a public approach, not a full hostile approach, but discussions that have manifested or found themselves in the newspaper before a deal was ever consummated. So just think about BHP and Oz, how that started. Articles started circulating about BHP's interest in Oz. They were all ultimately successful. Rio Tinto and Turquoise Hill, again, their interest in consolidating their ownership started in a very public manner, taking the discussion straight to shareholders, if you will. Newmont Newcrest, again, started with a public reveal and ultimately did consummate in a successful transaction. And then more recently, we've seen Teck and Glencore has been pretty vocal about its interests in Teck. And that's just been playing out, in front of our eyes over the last 4 months. And then last week, we now learned that Barrick has had discussions with First Quantum. So I find that interesting. Obviously, that's at one part of the ecosystem, the very largest part of the ecosystem. But trends usually filter down. And will be interesting to see when it does, and it will come into the intermediate space, come into the junior space, where discussions that couldn't get consummated and fixed in management discussion or boardroom setting will come out into the public domain and really allow the shareholders to decide and push their respective management teams to one way or the other. And so those are my remarks. And I just thought I'd spend a minute just talking about National Bank. There's been a lot of changes over the last 18 months. But I thought it was just appropriate to just give you a sense of what we've been up to. It's been a very busy 18 months across our practice, which is essentially centered in Toronto and Vancouver, and then we've got colleagues in Montreal that also are focused here locally in the Quebec market. So we boxed in our critical mineral deals. You can see them there. Metal Acquisitions Corp was the McMullen transaction, the SPAC that had a long gestation period to buy the Cobar asset from Glencore, but finally got done. We raised some money for Bravo, a Brazilian polymetallic story that went public last year. So this raising was at 100% premium to the IPO price. And then, as I said earlier, we did the Capstone transaction where we were the lead book runner on selling about 7% of Orion's position in Capstone, which they acquired when they sold Mantos into Capstone back in March of 2022. We're currently in the market marketing Peter Maroney's new vehicle, Allied Gold, which is a West African portfolio that's been put together backed by Orion over the last 5 years. We did El Dorado a few weeks ago, and you can see the rest for yourselves. Just wanted to highlight our research coverage universe and our research team. We've got 5 analysts covering a very wide swath of land. And then vis-a-vis critical minerals, we've got Lola Aganga at the bottom there, who has picked up coverage on the lithium names and some others. And then we've got copper covered by all the analysts across their coverage universe in one way or another. And then this will be the final slide. This is our loan book. And I guess just wanted to leave you with this idea. Obviously, National Bank, very important institution in Quebec, very dominant franchise. But what people don't appreciate is that there's been a very concerted effort to grow this business westward. And it's been grown on the back of a corporate lending strategy. So just for context, in 2015, National Bank's lending book would have been a paltry $500 million total to the industry. At the time, the market leader would have been somewhere in the order of $20 billion. Today, we're approaching $5 billion. We've been deploying capital across the spectrum from single asset names, project finance names, as I said earlier, up the chain. And the top of the food chain would be somewhere in the order of $9-10 billion of lending. So there has been a contraction by the Canadian banks, at least in terms of lending to the sector and where they're focused. We are going in a different direction, which is growing our book, building relationships, and it's been a successful strategy that we're going to continue to deploy in our business. Thank you very much.
Thank you, Elian. That was very interesting. I'm Thomas Bachand. I have the pleasure of working with Elian at National Bank. I'm a managing director based in our Montreal office, and I do focus on the mining sector. I'm pleased to be your host for this morning's session. So to kick things off, I'm pleased to welcome Mr. Guy Belleau, CEO of Sayona, Quebec. Sayona has been very active over the past few years, acquiring a number of permanent lithium assets in the province. They have recently restarted the North American lithium projects and are currently producing spodumene concentrate. As they work towards the development of additional opportunities, the company recently completed a $200 million Australian financing. Guy?
Hey, bon matin tout le monde. Thanks for hosting us. Good morning, everyone. So I'm glad to be here in beautiful Quebec City to tell you a little bit about the latest news on Sayona. I want to say a few words on our leadership team with tons of experience building and opening mines across the world, but also mainly in Canada and here in Quebec. Our team is led on a day-to-day operations are led by our managing director, Brett Lynch. Our Brett, if Brett will be here today, we'll be talking about speeds and tons. And talking about speed here, we see our asset on our Abitibi hub called North American Lithium. This asset was purchased and put in operation within 2 years with $200 million, which makes Sayona one of the only major hard rock lithium producer in North America. This asset is located in La Corne, which is north of mining town of Val-d'Or in the Abitibi region, northwest of the province of Quebec. Of course, ESG is at the heart of everything we do. Our approach with the communities is to have build strong relationship with host communities as well as First Nation based on mutual respect and transparency. A few words about our project here in Quebec. We couldn't think about a better place to have mining operations and projects in a top-tier jurisdiction. With government that has a very clear vision about developing the battery ecosystem from the mine all the way to the battery and downstream with green hydroelectricity, with the mining schools, pool of talent, and mining, a great mining jurisdiction close to the market, great infrastructures, road, rails, and access to deep ports. So a great place to be here in Quebec for our projects and mines. Our strategy is based on a dual hub approach. So we have a hub in Abitibi-Témiscamingue, the other one in James Bay. Both areas are well-known mining jurisdiction. There were mines in Abitibi and also in northern Quebec, Chibougamau-Chapé area for many decades. And when we talk about speed and tons, so this one speaks about tons and volumes, where our North American Lithium and OTA project together hosts about currently 39 million ton of resources, while our James Bay hub now sits at 50 million tons at 1.2% lithium. And we also have our Tanzim property in the Témiscamingue area, just southeast of our North American Lithium asset, where we're going to be conducting exploration in the upcoming years. So together with the James Bay and the Abitibi hub, we currently have about 30% of the known hard rock lithium resources in North America. So this is our DFS results that we unveiled in April, so a few months ago, where North American Lithium now sits with a 20 years reserve and our nameplate capacity is at 226,000 tons of concentrate a year. The plant operates at 4,200 tons per day. And we have lots of room to expand the resources. We're going to see it a little bit later on. So our plan this year, we are well ahead of the of our plan to produce. We currently sits at 27,000 tons of concentrate produced so far. About 23,000 tons is already at the port of Quebec City. So we're doing what we said that we would do. We are looking at our first ship in July, and we're going to be shipping between 85 and 115,000 tons in the coming quarters. So the Abitibi hub, I think there's a lot of room to grow the resources there. We have, as mentioned, we already have 39 million tons of resources there. Looking to expand that further. We currently have a 35,000 meter drilling program at NAL, so it's within and right outside the pit. And also we did the strategic acquisition of the Jordan Valley, which are claims just east of our property at NAL. So we're going to be drilling our properties and also the earn-in property with our partner Jordan this summer. So we believe that there's a lot of room to grow resources, and we are currently doing a lot of drilling at this time. So the plan for the Abitibi-Témiscamingue, so first concentrate produced on time and within budget. We're going to do some shipment. We're going to start the first 30,000 ton shipment later in July. During that time, we continue to grow the resources, and we're definitely gonna go downstream at NAL, directly at NAL, where we have a plant with a half-built carbonate plant there. So we believe that we could be in production with carbonate somewhere in 2026. A little bit about James Bay. We bought that property 2 years ago, and the property had 14 million tons, and within 9 months we grew the resources from 14 million tons to almost 50 million tons through 37,000 meters of drilling. So we believe that Mont Blanc has the DNA to become a world-class deposit. And we're currently drilling a campaign of 60,000 meters on Mont Blanc in order to grow further the resources. And just like now, we will also go downstream at Mont Blanc. So Mont Blanc is located 135 kilometers just north of Chibougamau, well-known mining town on the Route du Nord, and just next to the road. And we have hydroelectricity nearby, and the access road, as I just mentioned, and a great jurisdiction, a great mining area with a pool of talent around Chibougamau, Chapet area. So that's so lots of drilling there. We're going to be growing the resources over there, and we're going to have our DFS ready by October, November this year, and that will give us the path towards the next steps to build a concentrator and a mine in Chibougamau. So just next to the Mont Blanc project, we did also acquire the Troilus claims. So this is almost 1,000 square kilometers just east of Mont Blanc. So we believe that this is quite strategic, and we believe that Mont Blanc will give us a lot of room to grow Mont Blanc, grow the resources further at Mont Blanc. So again, this is another demonstration of tons and volume. So for Mont Blanc, we are working on the DFS. We'll be ready somewhere in Q4 this year, and I'm going to be producing in around 2027, and we will also going downstream. So the concentrate will go through a second transformation to produce hydroxide in 2027. So great plans for Mont Blanc. at our James Bay hub, and lots of opportunities to grow further the resources. So speed and tons, a lot of ground, 200,000 hectares for exploration. We currently have 30% of the known hard rock lithium resources in North America. We have started production within 2 years and $200 million of investment. We're going to be shipping concentrate in July, and we're going to be shipping around 120,000 ton in this year. So a lot of milestones have already been accomplished, and we're looking ahead. We're going to be growing resources at both NAL and North American Lithium, and also Mont Blanc property. First shipment scheduled in July. We're going to continue drilling in our earn-in joint venture with Jordan this summer. And we're going to be showing our PFS for carbonate production very soon in the coming days. And we're going to also see the Mont Blanc feasibility study also somewhere in October. So that's us. That's us. Speed and volume, and pleased to be in Quebec, top tier jurisdiction, and I think watch us, Sayona. We have many great milestones to come ahead of us this year. So thank you very much.
Merci, Guy.
Thank you, Guy.
I would like to welcome Natasha Garout from Patriot Battery Metals. Natasha will be interviewed by Matt Gordon. Patriot, as many of you know, is a hard rock lithium exploration company focused on advancing its large-scale discovery at the Corvette property in the James Bay region. The company has recently completed sizable equity financing and is fully funded to execute on its exploration and technical studies. Natasha?
Good morning, everyone. Thanks for coming. Thank you also to all the organizer, and thanks for being available this morning.
Yeah, delighted. Well, one of the stories of the last 12 months, for sure. So it should be a good conversation. Why don't you start off and sort of tell people perhaps not aware of the story, a little bit about yourself and the background.
Okay, myself, my name is Natasha. I used to be the CFO of Champion Iron and Quebec Iron Ore, which has a successful iron ore project in the Fremont region. Prior to that, I was involved in Roxgold and Semifo as well. So I've been in the mining industry for a few years. Patriot. I joined Patriot 4 months ago, and Patriot, as you said, has had a quite extraordinary route so far. So we own 100% of the Corvette project. It's a 50-kilometer long trend, and we're located on the Greenstone Belt in the AU-Itchy James Bay region in Quebec. We've made a significant lithium discovery over the past year, and right now we are releasing our maiden resource in July. I think the market has been watching us, and there's a lot to unfold. We believe that the CV5 discovery that we've made has the scale and the quality to potentially feed an hydroxide plant for 20 years with an annual capacity of 100,000 lithium carbonate equivalent. And to give you the context, that's the size of this is essentially the lithium that would be required to feed annually the gigafactory that Elon Musk is looking to build. We have an amazing leadership team. We finance built and operated mines successfully in the past, including operating spodumene hard rock deposit, which is probably one of the most famous hard rock lithium in Australia. If you are here today to include some EV battery exposure into your portfolio, I really believe that at Patriot, we have an interesting investment thesis.
There we go. Thanks for that. Look, I think with the extraordinary growth, we're talking in the last 12 months, going from $3 to $17, a lot of happy shareholders in there, right? Also some advantages in the sense that you've been able to raise, I guess, some relatively cheap capital as a result to advance the drilling. We've seen a lot of high grade results coming out, headlines, exciting the market for sure. Pros and cons with that, obviously. Start with the pros. So when this extraordinary rise, it's been good because people noticing you, having good conversations?
Yes, I think especially in Australia, I have to say that 60% of our shareholder registered is Australian. We're now listed on the ASX as well as the Venture, and there's definitely a lot of interest. Investors have made a lot of money in spodumene hard rock lithium in Australia. And now I think that we're educating North American investors to jump into the story because it's only the start. I think that Guy just highlighted the potential that Quebec has, and we really believe that we have a project that has only uncovered a small portion of its potential.
So you're describing yourself as an exploration company at the moment, right? A $2 billion exploration company.
Yes.
Sounds nice, doesn't it? It does. So you're quite far from having those sorts of conversations with automotive manufacturers, I suspect, or OEMs, despite the narrative going on in the US market. So are you surprised internally? You must be a little bit surprised at the reaction. I mean, it's been extraordinary.
Yes. We are not having formal conversation with the OEM, but everybody is looking at the Patriot project, and a lot of people are knocking on the door. People want to secure generational raw material, and this is what we have to offer. This discovery is quite unique in terms of scale with respect to what have been uncovered so far. We're not saying that there's not going to be another Patriot nearby, but at the moment, we believe that we have a source of raw material that can answer some of the challenges that those EOM have, and we'll probably enter into partnership over the next coming years.
Okay. So the flip side of that is maybe people think you're overvalued. Maybe they think they've missed the boat. Maybe they think you've got to backfill some of that valuation with whatever you're going to be doing this year. So how do you feel about that?
You're correct. I meet with a lot of investors that look at our stock price chart and see the hockey stick. But if you look, for instance, at other hard rock lithium producer in Australia, their stock chart over 5 and 6 years or 7 years is composed of multiple hockey stick. The CV5 discovery is only a small portion of our district. Last year, the summer program uncovered CV13, and the market hasn't quite reacted to that, although the Australian investors are now more focusing on CV13. There's also CV9. So out of the 50-kilometer trend, there's probably half of it that we haven't set the foot on. So if I look at the valuation and I compare it to hard rock producer that are currently shipping in China, I say, look, we're close to North America. There's going to be an amazing supply chain there, and there's no way that our valuation is going to stay there. So I think it's really the time to come into the register.
Well, the valuation is one thing, share price is another. Okay, so you've raised a lot of money recently. I guess people would say, right, that better be growth capital. So how do you grow the value of a company? How do you drive that share price with the money you've raised recently?
Right now, we're halted, unfortunately, because of the wildfires, but we have a very aggressive summer program. We intended to do 30,000 meters worth of drilling at CV13 and CV9, because as I said, these are areas that we haven't really touched. If we think that right now the valuation is on CV5 CV5 only, because most of the analysts don't give us value for CV13. If we continue to drill successfully at CV13, and if we continue to drill at CV9, there's a potential that all of these areas are connected a little bit like they are in Australia, and then the valuation can double and triple. And as we progress our development towards the production, then we're going to get some re-rating from just being a producer.
Right. So well, let's talk about that. Let's talk about timing the market and obviously competition. There's a few other lithium players out there talking a good game. Some of them are seeing a little bit of a reaction, some not yet, but nevertheless, a lot of lithium supply apparently coming to the market if the CEOs are to be believed. The demand seems to be there. I think we conversation in DC at the Battery Metals conference there, OEMs, automotive manufacturers, CEOs claiming extraordinary numbers that they're going to need. How do you plan to time your arrival in the market in terms of the production? Because you can get big, or you can get much bigger, and kind of never people delay the inevitable production problem. That kind of capital raise requirement. So how are you planning this out?
We want to be in production in 2028. We think that we can accelerate that. And you're right. Some people are saying, are we going to miss the boat? I don't think so. It takes probably 2 to 3 years to build an hydroxide plant, another year and a half to commission it. So that's already 4.5 years. If you think about our project, 5 years to production, we'll be there in production, commission. At the same time, the hydroxide plant and the supply chain will be a little bit more mature in North America. And now we're planning to do that. Well, there's the capital market, but there's a lot of support from the government. There are potential partnership with players that are downstream. And we really believe that as the supply chain will develop in North America, it's going to give us the time to ramp up to our production. And we will be there in time to service the demand that will be there at the time.
Right. Okay. With that accelerated plan comes a lot of financial demand. So you referenced something there, which I think a lot of companies in Quebec are beneficiaries of, which is provincial government assistance on the debt side of things, even equity. We're hearing. Have you had initial conversations there, or do you understand how that process works in terms of getting, whether it be state, federal, government funding?
With respect to the experience at Champion, I was involved with the government. So IQ and CDPQ were huge supporter of Champion and Quebec iron ore. So I do know all of the player. ADC was also a huge supporter within the project finance. These are envelopes that are still available, but now there's also additional funds available to support the critical mineral industry. We need to have a PEA to really start engaging with them. Last week, my chairman, Ken Brinston, was here. We've met with the Minister Fitzgibbon. We met with all of the government employees. And although we didn't want to do a PEA initially and go straight to pre-feasibility study, we're now rethinking this, and we're on the radar.
Why the change plan?
What we're seeing is that a lot of people are just asking about the economics. And I mentioned earlier that we believe CV5 can potentially feed a lithium hydroxide plant with 100,000 LCE. We have to have a document to prove that. And a PEA can be released earlier than a pre-feasibility study. We've already working with engineer, already having some detail engineering actually being drawn. And if we can have a catalyst earlier than later and then jump to the feasibility study, this is what we're going to do. We're a flexible team, and we're hearing what the government wants. And if we need to do a PEA, we will follow the government instruction.
I guess the PEA is a little bit looser. It's a little bit more fluid as well in terms of kind of feeling your way to the end solution that you desire. Is there that in the back of your mind? Because PFS is a little bit more robust.
Yes, but we're going to still progress to a PFS. Our goal is to deliver the best feasibility study and the best ESIA that the government has seen. We're working closely with the Cree Nation on almost a monthly basis. And what we want to do is accelerate our project to production. We're going to deliver a feasibility study. And in the meantime, we're going to do all of the steps that are required by our stakeholder to support the project.
Okay. For companies, kind of other CEOs watching this or listening to you, what do you think the company's done right? Is it all just about grade out of the ground? And quite frankly, that's all down to luck. But or is there kind of some components that you guys weren't? I know you've only just got your feet under the desk here, but along with a few other new joiners. But what did they do right at the various points up until now?
A lot of things. You're right that the drill bit is a drill bit, right?
Yeah.
So we are lucky because we're in a location where the geology is amazing. However, there's a number of things that were done right by the team that was already in place. Blair and Darren, when they did the first drill back in 2021, started to engage with the Cree community of Chisisibi from the get-go. There were the Talley family that were already involved. And because they knew that this discovery was amazing, they already started to work with the community on environmental baseline, which was done in 2021. And most of the time, people wait for a resource to be released prior doing the permitting work. And we've started that at the onset of the drilling program. I think as well, we've engaged with the government and we were very present with the investors who understood the story.
What do you mean, understood the story? Simple story, isn't it?
I think that in Australia, because of the success, it was a little bit easier to convince them. And if you really want to showcase your project, you need to gain momentum. And in order to gain momentum, you need to have followers. So the followers in Australia came first, and now we're seeing way more North American institutions coming in and paying attention to us. And I think that now we're most of the time the talk of a conference.
Yeah, there is. I thought it was also quite an extraordinary success because, lithium prices were falling off the edge of a cliff from October last year through to quite recently. But despite that, it feels like there's on a strong fundamentals basis, you were kind of, blasting your way through that. So I thought that was quite interesting that the market recognizes fundamentals over pure momentum play. So I appreciate you saying there's momentum there, but it's the different type of non-promotional momentum that I think is interesting.
No, you're right. You're right. You can only get the momentum if you really have something that is solid, And what the investors are seeing, and I think what the stakeholders are also seeing, is that this can be a multi-generational asset in Quebec, in a great jurisdiction, very close to a supply chain where the EV battery penetration is going to accelerate over the next decade. So the fundamentals are there, and everybody is looking for raw material in North America and Europe, and we have the right address.
And do you think, given the success today and the ease of access to capital, relatively cheap capital, you feel you guys can get this over the line yourselves? Because I've been adding to the board, etc. Most companies at this point reach out and look for a strategic partner, but have you got that confidence of delivering it yourself?
Yes, Blair has built a team that has permitted project before, financed, built, and operated, and we have the benefit of having Ken Brinston as our chairman. He operated one of the most successful hard rock lithium story in the world, being the former CEO of Pilbara Minerals. So we believe that we can do this, but we never know. This market is very buoyant, but we can take this to production. A number of people within the leadership team, including myself, have taken greenfield project to production.
Brilliant. Well, look, thanks for telling us the story.
Thank you.
Good luck. Okay?
Thank you. Thank you. Thank you.
Thank you, Natasha and Matt. That was very interesting. Our next speaker is Eric Desaulniers, President and CEO of Nouveau Monde Graphite, and we will be doing a fireside chat discussion together. Eric.
Morning, Eric.
Morning.
Nice to be here with you. I was mentioning you just had your general annual assembly yesterday and did an extensive update on Nouveau Monde and all your various projects. Do you want to start by maybe summarizing where you guys stand?
Yeah, super happy that forced you to watch all our AGM and update yesterday to be ready this morning. And also very fortunate to be here in a place where I worked 8 years, like in the Blanchette de Quebec. So it's a great event and thank you for inviting me. So NMG, what we're doing in a nutshell, we're developing the most advanced and largest natural graphite operation in the Western world. Graphite being very important in the EV transition. For every tons of lithium that you need in the market, please, Patriot, please, Sayona, please, everybody, bring as much lithium in the supply chain because you need 1.5 tons of graphite to do the other side of the battery. So it's quite important. So that's what we're doing. So we have 3 assets. First of all, a mine north of 12 hours north of Montreal in Saint-Michel-des-Saints, very advanced. We started investing in the CapEx and pending project financing will complete in 28 months the construction of the project. We have also a second asset where most of the production of the mine will be sent into Bécancour and called now the new Battery Valley. So that's where we'll transform the product into anode material, the specific product purchased by the Panasonic of this world that we announced already one large customer, which is Panasonic. And the third asset, it's the phase 3. So that's our partner, Mason Graphite. We've acquired a 51% option on the previous La Guerre deposit that you know very well, now called Watnan Mining Project, where we've published a PEA earlier this year at 500,000 tons per annum, being on paper the largest natural graphite operation being developed in the world, including China this time, bigger than China, which is, I like to say that.
That's great. That's great. So that's obviously very ambitious. Like, how do you go about prioritizing and de-risking this methodically?
Yeah, you're right. So what we've done since the last few years is a phased approach. So first of all, if we want to be successful where China is since 10 years and over, so they are really the market today. It's 100% coming from China. So we needed to do a phased approach. We've invested around 125 million so far in the phase 1. So we are currently operating 2,000 ton per annum capacity for transformation. We've built even a small mining 40,000 ton bulk sample that we're mining since 2018. So we've produced about 2,000 ton of concentrate that we are now transforming, doing all the steps to make sure the Panasonic of this world and all other customers receive samples manufactured at scale, providing a quality material, a consistent product, and demonstrating that the cost that we are estimating is based on facts on real machines. So that's the phase approach. And now using the phase 1 knowledge that we have, we are in the process of financing the phase 2, which is the project that will provide the profitability, hopefully by 2026, pending project financing before year end. So that's the phase 2. And now we're building the phase 3 because, the geologists were bored and needed more stuff to develop, I guess. So we're sending them to develop the phase 3. So the phase approach is quite important. All the phases are important. Phase 1, it's our business card with customer today. Phase 2, obviously, is providing profitability. But phase 3 is very important because we're sold out on phase 2 in our discussion. So the customer to invest a large amount of money and to take a lot of their resource to work with us on the qualification of our product need to see that they have a growth plan within our company that follow their own growth plan in cell making. So the phase 3 is quite important today as well.
Absolutely. That's gonna be the long-term future of the company once the initial project is built. You mentioned Panasonic already a couple of times. When we talk about de-risking, having that anchor customer for your for your product is a key variable. You know, working with many companies in the critical mineral space, like financing always seems like it always hinges on those offtakes or key customers when you're talking about the larger project financing. Like how are discussions evolving with Panasonic?
Yeah, Panasonic, you know, today there's 387 last month, 387 battery plant in construction. Over 1 gigawatt hour. Panasonic was the first one with Tesla. So when I started the company, I thought, okay, let's start this company to feed Tesla one day, but it's Panasonic, the supplier of cell. So I guess it took 12 years to get to this thing of having a deal with the first big gigafactory in North America. So Panasonic knows more than anybody what is required to run a large gigafactory. Only for the gigafactory in Nevada, they purchased 48,000 tons of our product. We're planning to produce 42. We're the most advanced, and now they're building a new plant in Kansas, and they have many other, they announced 200 gigawatt hour of future growth only in North America. So Panasonic is really committed to helping their supplier getting there. So they need local supply chain. They want carbon neutrality in their supply chain. So that's, for us, it's the ideal customer. It's not about only providing a purchase order. It's about providing resources, technical supports, and making sure that we understand what they want. And they come night and day. They are in our plant for weeks. They introduce us into their factory as well in Osaka. So for us, it's a transformative relationship with them. So where we are now is really getting everything organized. It's not only developing the processes, it's also developing the capital market to finance that kind of project. So we need at least 5 years offtake agreement for a significant portion of the production. We need investment from them to support the bankability of the offtake. So this is all things that are necessary to finance the project, and we are getting there, but it takes months. Yeah, but it's, as our chairman said yesterday, I will steal his quote. He said, it's not about being fast, it's about being right, because it's an agreement that will last for a long time. It's probably the most important deal we'll ever do to finance the project. Yes.
For sure. That's for sure. Eric, so obviously graphite, key to battery, key to electrification, decarbonization, but not only is your product gonna help solve the carbon crisis, but at the same time, Nouveau Monde has taken a very different approach and a very proactive approach in terms of, you know, its own ESG standards. The operations of the mine is going to be all electrified. Can you share a bit about this approach that you've been taking?
Yes. No. Yeah. In 2017, we were already taking a big bet of developing 100,000 ton per annum flake graphite mine, when we are mining in the Western world about 20,000 tons since a generation, and that's enough for our traditional needs, I would say. So we were already taking a bet, but the bet was, if our mine is needed in the future, it means the future is all electric. In 2017, it's only 6 years ago, but it wasn't clear yet. Tesla wasn't fully successful yet. So we thought, okay, so if everything goes electric, for sure, Caterpillar and Komatsu and everybody will go electric. It took us a few years to convince them, but now we're getting there, and we have announced our definitive agreement with Caterpillar. So we're very fortunate to not have to convert ourselves the fleet. That wouldn't be super realistic. But now Caterpillar is not only the fleet, so all the 4 different, the dozer, the wheel loader, the excavator, the haul truck. I was fortunate to go see in Tucson recently at their testing site the first 793 240 tonner all electric, very impressive. And also all the charging station, the charging infrastructure, the software, and also the solution. They call it the job site solution, because they also need to demonstrate that they will make money in the future in that business, you know. So that's quite interesting to be at the forefront of this change within the industry of how they will make money. So they will charge per hours. They will keep the ownership of the fleet, and they will charge per hour. But that's phenomenal, the transition. So our goal is to make sure, and if anybody want to develop an all-electric mine, at the limit of what Caterpillar can say. So I used to say I will tell you everything, but now it's Caterpillar secrets as well. But we want to help as much as possible everything to be electric, because there's a ton of graphite per truck. So that's also very important for us.
Yeah. If your mining trucks are using your same graphite, I'm sure that you'll pop some champagne. Eric, coming back to ESG again, so electrification of your full mining operations, the communities is also very important. Obviously, there's a First Nations at both your mining sites. There's also the local communities. I think you have the curse of your blessing, in the sense that, Matagny is very close to Montreal, as you said, very accessible, all access to all of the infrastructure, but it's also close to human populations and lots of villégiateurs in those areas. How are things progressing on the social acceptance side of things?
Yeah, so during the development of the project, obviously it was one of the highest importance. It's to make sure we have the social acceptability. And what it means, social acceptability, it's not a social unanimous. Everybody will like a mine in their backyard. That wasn't the goal. What wasn't the purpose? It was really to make sure that we cannot, with our judgment, see any loser in our project. Anybody that would lose in our project need to be compensated properly. So we offer in a radius of 1 kilometer from our project, any private owner the chance to sell to us. So we purchased about 4 million of real estate this way since 2016, since the PEA stage. Probably that 4 million now it's worth 8, I don't know. It's very valuable now in Saint-Michel-des-Saints. However, social acceptability always been very important for us. And honestly speaking, I wouldn't change the deposit location by an inch. It's really well located. Like, it's about 7 kilometers from the village on the crown lands. Yes, there are people that needed to be compensated, but overall, we are every survey we do, we have over 80% people supporting our project. We are benefiting a lot of people. So when you're in the middle of nowhere, yeah, you don't bother anybody, but nobody benefits, only the fly in, fly out people, So now we make an impact in Saint-Michel-des-Saints. We make an impact, hopefully, more and more in the future for the Manawan community. So we have a training program right on site. We were able to build a phase 1 plant only because we're close to infrastructure, like 5 kilometers from our deposit. We have a next Louisiana Pacific oriented strand board facility. Anybody who had visited our project knows that without this, we cannot build a phase 1 plant that is very effective, So this is, for us, being in Saint-Michel-des-Saints is key. But there's a lot of work for the industry to do, for all the other graphite development projects that are even south from us. And that's something close to my heart. Is like, we need to, because I'm living in Outaouais. So when I go in Lac-Simon playing volleyball, I see every village have a sign, So we need to be better as an industry to explain where we are in terms of projects, where we want to go, and we never hide the fact that we'll blast a rock. We even put on our website for a while the first blast we did. We need to make a homage to the rock. No, the rock is beautiful, a mine is beautiful. So we need to make sure that we are the PR agent of mining somehow. Yeah.
The right approach. And what I take away is that comment that acceptability is not unanimity. I think we should remember that in different areas of our policies. Eric, maybe just to finish, you did mention, like, for every ton of lithium, 1.5 tons of graphite. Yet we've seen the markets been all about lithium in the past year or so. Graphite is relegated to the second stage. I would say there's obviously less advanced projects than lithium. But what do you think will
pricing? Pricing of graphite. Obviously, lithium now it's very very attractive for any investor. When the price, I remember in 2019, companies were having difficulties in lithium. It was about 8,000 to 10,000 tons per ton for the lithium hydroxide and carbonate. That's where anode material is today. but suddenly it did tenfold boom. So for sure, the money goes where the commodity price goes up. So graphite, it's still weird, the same valuation as 3 years ago. So we are up and down. But when we started the company in 2012, if you remember, the graphite pricing was 3-4 times higher than what it is today. So we need better pricing. And something is weird today is 100% in China. It's really a Chinese story. In China, they are building capacity to feed their plant over there. 2/3 of future growth of cell making is in China. However, there's a big third now in North America and Europe who will need graphite, and they want graphite outside China. So this is what we want to provide. But in here, it's not spot price. It's long-term agreement. We need to finance projects. So we need the price to build project, and the customer understands that, and we want to be the first example of much higher price than China.
Great. Yeah. Well, the opportunity is clearly there. Congrats on everything you've achieved so far, and good luck for the future.
Thanks, Mr. Cook. Thanks.
So next up, I'd like to introduce a wonderful keynote speaker and well-known author of Exploration Insights, Mr. Joe Mazumdar.
Hello. Yeah. Hey, this talk I've done before, and it's usually a half an hour, but I've got 15 minutes, so I'll go a little quicker. So the talk is really about why I think there's some issues with this plan to carbon neutrality by 2030. And I'm just going to go through some of the issues with, and it's a generalized talk about what's a critical mineral and some of the risks, whether they be supply chain, the sources of the actual minerals, which adds another risk, which becomes strategic, and the development risk, as we all know, and a loop with ESG in terms of promoting a carbon neutral environment at the same time as emitting carbon. And then the issue with the production of intermediate products versus processing capacity. In the end, my conclusion, if we want to just end it right here, is all of this needs more time, more thought, two things that leaders right now are bereft of. Okay, so what's a critical mineral? Basically, the long-term objective is this Paris Climate Agreement to limit the temperature rise below 2 degrees Celsius. The latest literature I've read is that's going to be next to impossible. And two of the big factors are the shift of energy sources and the reduction in the number of ICs on the road. The critical mineral, as Canada talks about it, is critical for this transition, and it is a transition. What people don't realize is it's going to take time. It's not going to happen overnight. The other thing is supply chain security. So with the war in the Ukraine and a little bit of animosity between the West and the East meaning China, that's generated a lot of angst, let's just say. And then for countries like Australia and Canada, they're not going to use all these critical minerals, but they want to be a sustainable source to partners. So periodic table. And so every region seems to have a different idea of what is critical because they are looking at it from their own perspective. So the U.S. Energy Act of 2020 directed the USGS, which updates this critical mineral list every few years. They put out 50 elements. But interestingly, copper and uranium were not included. Whereas Australia came out with 26 the last time they came out with one. And again, copper wasn't included. Europe and Canada, they came out with theirs, 22, but they did include copper. So it's hard to see how everyone's policies are going to align based on what they think is critical. And so basically here, you can see the usage versus the actual source. So electric vehicle cars, not the batteries, the infrastructure required, dominated by aluminum and copper. The batteries, that's what everyone's talking about mostly, nickel, lithium, cobalt. Solar panels, again, aluminum. Wind turbines, very much copper and aluminum. Hydrogen technologies, nickel and copper. And then the magnets is where we get the rare earths, the NdPrs. So the other thing is not only the volume of units, it's the intensity of usage that's going to drive demand. And so as you look at some critical minerals, whether it's lithium, cobalt, nickel, copper, or rare earths, the proportion of their growth related to clean energy demand is what you're seeing right now. So what is really levered, obviously, to this clean energy demand is lithium, cobalt, and nickel. Copper less so because there's a bigger demand base there, and rare earths, that's going to grow, potentially double. So one thing to take into account when the U.S. came out with their mineral policy and that, one thing that they were really concerned about in terms of what is a critical mineral is this undue reliance on critical minerals from foreign adversaries. And basically you could read China. And so most of what they're proposing is not only to source it, but to source it from particular jurisdictions, which also constrains the supply. So this US EV tax credit that they put out from the infrastructure policy or bill that they put out a couple of years ago was there was going to be a tax credit for vehicles. And this tax credit was split up between the actual mineral where you sourced it and the component. So half and half. And then your ability to get that becomes increasingly more difficult if the component or the mineral is not sourced from a jurisdiction they want. Right now, like when they first put this out, it was only the US and free trade agreement countries. That's changing because it's a bit of a constraint on the supply. So if you look at the world, they've come up with this mineral security partnership, and that includes Australia, Canada, Finland, France, Germany, Korea, important in terms of processing, Japan. And what they want to do is make sure this entire envelope can produce, process, and recycle for the separate countries. What we're missing is countries like Brazil, which is like Australia and Canada, highly endowed in critical minerals, and also Africa. Like I was in Cape Town in February, and the Secretary of State of the US, it just went to China, was there last year. It was in Zambia and the DRC, trying to make bilateral agreements. And so we might see a lot more of those. Even though they're not free trade agreement countries, they still need the cobalt and copper. And what we got to also realize that First Quantum has a smelting facility in Zambia, in Kansashi, which I visited. Brazil's another one, but Brazil seems to be very happy feeding both the East and the West and will not take sides. And so this is a graphic that's interesting in terms of production. So this is production of the raw material. So in terms of energy, the US and the West is well placed. Europe was not, obviously, with the natural gas issue with Germany and some Eastern European countries. But in terms of copper, a lot of it comes from Chile and Peru, which the US has free trade agreement agreements with. Nickel, a lot of that's the laterite from Indonesia, so that's why we're seeing a lot of nickel sulfide projects being developed in other places. Cobalt, the DRC, the issue there, again, is they're trying to make a bilateral agreement with DRC and Zambia, get more cobalt. But as you get into graphite, like our previous speaker, and rare earths, there's really a lot of dominance by China. Lithium is pretty good. Mostly Australia from the pegmatites, and the brines in Chile and Argentina is growing as well. And then platinum is South Africa, but that one is at risk just because it's South Africa. But when I say Chile about lithium and about copper, really, Chile has just introduced a new tax policy which might constrain investment in the country in terms of mining. But the other thing is that they are seeking to nationalize the lithium sector. So that adds a little bit of a wrinkle in terms of sourcing lithium and whether they get the kind of foreign direct investment required to build up their lithium capacity. I just read that also now Bolivia is going to see $1.5 billion come in from a state-owned agency in China, basically to build up the Salar de Uyuni, which is undeveloped and a very significant brine as well. So Canada, obviously very well endowed. The focus right now by the Canadian government is lithium, graphite, nickel, cobalt, copper, and the rare earths. But most of these projects, the infrastructure is just not there for them to come online anytime soon. So what we're seeing is, this Canada Infrastructure Bank. So they're trying to now support it through the public sector, meaning the government, to help build this infrastructure, whether it's roads, ports, clean power generation, so they're not using diesel generators, and wastewater tailings and that. And so they'll target $100 million investments in these companies, which will help some of these companies with respect to funding, because as we know, when we get into the development cycle for a junior company or a single asset company, that's really the orphan period where the equity market just walks away. So they still need to be funded. And this could potentially be a source. And to help with the payback on these big projects, if you start putting these things online starting in 2024, there's a tax credit available for 30% of the upfront capital directed to the processing facilities, which would help with the payback for these companies and potentially make them more financeable. So here's a big problem, is that we're in 2023. There's proposals to get to carbon neutrality by 2030. There's proposals to get to 2040. If we don't know the project right now, if it's not on our lips, there's a good chance it's not going to fall into that window, just because of how long these projects take from discovery to production, especially for nickel, but we've seen it for copper. How long those projects takes. These are multi-billion-dollar projects. They require a lot of infrastructure. There's a lot of permitting involved, and they could take quite a while. I mean, for example, when I worked for Phelps Dodge back in 2023, we had the Resolution mine, Superior, which they're developing in Arizona. We had that coming into production in 2010. It's now 2023, just so you know. Here's another problem. So this is the ESG loop. So you're trying to produce minerals that'll help the environment. But the problem is that as the price goes up, the incentive price goes up, people will build, and naturally, the grades are going to get lower. So if we just look at copper here, to produce concentrate versus a heap leaching solvent extraction electrowinning project, the intensity is much better for the SXEW. But SXEW deposits are basically going out because just naturally they're right at the surface. We've mined most of them. But if we lower the grade of the concentrate or even the heap leach, the intensity goes up in terms of emissions. So that's something else we got to be aware of in terms of permitting. So what we'll see with these ESG funds is not only will they look at your cost curve, but now they're going to look at your footprint. And so now we've developed a market for consultants that basically generate your footprint per ton of whatever product you're producing. So as you can see in the subset graphic for things like cobalt, producing cobalt is very intense. Also aluminum, because it requires a lot of power. Class 1 nickel requires a lot of power, and they can be very carbon intense. So in terms of ESG and in terms of funding, Can these ones be funded? This is really important because when we talk about copper, for Phelps Dodge, we slowly watched the smelting capacity switch to China. So the TCRCs, which used to be negotiated between BHP and the Japanese in Hawaii every 6 months, switched to China, basically dictating what the TCRCs are, because now they have 40% of the refining capacity for copper. And you can see that even if you do produce copper concentrate anywhere in the West, it's going to have to go to a smelter, and most of the smelting capacity is in Asia. So not only do we have to permit the mines, but we have to really accelerate the smelting and refining capacity of these minerals. Okay, and here's the other one why I think this is going to take longer is even the IEA, International Energy Agency, is just one component. Coal is still going to be more important in terms of revenue than the entire energy transition market still by 2030. Okay. Coal right now is about 30% of global power, and most of that's Asia. And so that's why the scope 3 emissions and your impact are so important, because most of that smelting capacity is in Asia, and they do run a lot on coal. All right, so I'm done. Critical minerals. Critical carbon neutral technologies underpinned by supply chain threats makes them strategic as well. Demand will grow to 2040, but I'll tell you that India's plan is like to 2070. Why? Because they have so much coal that they have to transition out of. Market segmentation, that's a big deal in terms of what deposits will get built. And then development timelines are a big problem if we're really concerned about building things in the West. Quality of the resources may suffer, and then we get that ESG loop with respect to creating more emissions. I think that's it for me. Thank you very much.
Thanks, Joe. That was a very interesting presentation. Next up, I'd like to welcome our next presenter, Mr. Francis McDonald, CEO of Lift Power. Lift is a mineral exploration company engaged in the acquisition, exploration, and development of lithium projects in the Northwest Territories as well as Quebec. The company is currently pursuing its flagship Yellowknife lithium project while simultaneously exploring 3 sizable projects in the James Bay region.
Hi, everyone. I'm Francis McDonald, CEO of Lift Power. I'll be taking you through the Lift story today. So I'll be making some forward-looking statements. Do your own due diligence. Lift is a relatively new company. We've been trading for about a year, and we are focused on the exploration and development of hard rock lithium deposits in Canada. The Yellowknife project is the flagship. This is located just outside the city of Yellowknife in the Northwest Territories. We have 3 projects, but I'll be focusing on Yellowknife today because I've got 15 minutes. The Yellowknife project is a portfolio of spodumene pegmatites that have average grades of 1.07 to 2.2% lithium. The thing that makes this project special is that there's nearly 100% outcropping exposure of these pegmatites. And so when they stick out of the ground, it's really easy to see how big this could be. Another great thing about Yellowknife is it's got great transport infrastructure. So we've got proximity to road, and we're also relatively close to rail. And starting on June 1st, we kicked off a 45,000 meter drill program. And so this is a lot of meters. It's a pretty simple strategy, though. We're basically just drilling underneath these exposed lithium pegmatites at surface. In Quebec, we've got a huge land position in the James Bay region. It's about 2,300 square kilometers. And this is a completely different strategy. We are looking for lithium pegmatites that aren't outcropping, and these are under some kind of cover. So glacial sediments or swamps or lakes or things like that. We've been out there for the last couple of summers. We've been taking a lot of surface geochemistry samples. That's got us into 8 targets for follow-up. And so we'll be doing quite a bit of surface work out there this summer. And then the third project is Cali. This is also in the Northwest Territories. This has been reported to be a 60-meter wide spodumene pegmatite that's outcropping over 500 meters of strike. And there's really only 2 old geology reports, not much information. I'm actually going up there right after this conference to go look at it. So I'm getting excited to go have a look at that. Just a little bit on the share structure. So we have about 39 million shares out, 39.9 fully diluted. We're trading at 9.30 today, so it's about a $350 million market cap. And we started June with about 44 million in cash. So we're starting to deploy that in Yellowknife. We'll be spending about $30 million on this drill program this year. And so cash is starting to flow out. Zooming into Yellowknife, so the city of Yellowknife is on the north side of Great Slave Lake. On this map, each one of the green dots that you see, this is one of the spodumene pegmatites that's in the portfolio. You can see to the east of Yellowknife, there's a road that goes out to the east. That's called the Ingram Trail. And that's a 2-lane paved highway, government maintained. That's the road that veers up to the north and services the diamond mines in the winter from an ice road. So you can see 7 of the pegmatites are along that paved highway. Going out to the west of Yellowknife is highway number 3. This is again a paved highway that goes down to the town of Hay River. And so Hay River is important because this is where the rail starts. And once you get things to rail in Hay River, you can get a spodumene concentrate down south to Edmonton. You can go out to port from there or go further south to the States after that. So when you look at the Yellowknife lithium project, this is really one of the better located spodumene projects in Canada relative to transport infrastructure. So this is what makes this project special. You can see the pegmatites from space. For anyone that hasn't seen pegmatites, they're big white rock masses. So that white veins that you see across the landscape, those are the lithium pegmatites. The Phi Main dike is about 2 kilometers long. And on the right-hand side, you can see it from the helicopter for scale. So when things stick out of the ground like this, it's just really easy to see how big this could be. You just start saying, okay, it's about 2 kilometers long, probably about 15 meters wide. We're going to drill these down to 300 meters depth. And so you can start doing back of the envelope calculations of what's probably there. And then the other thing, when you have outcrop like this, is that you can do a lot of detailed surface work. And so this is what's been done in the past. These pegmatites were discovered in the 50s. There was a lot of work that was done in the 70s. And so on the left-hand side of this map, these are channel samples that were collected in the 70s. Purple is above 1.5% lithia. And so you can see there's lots of high-grade channel samples across them. And all of the dikes have this similar scale of work that's been done in the past. The center pane is spodumene percentage mapping in the colored dots. And so spodumene is a rock forming mineral. It's making up 20% of the rock mass here. So it's pretty easy to see it. If you don't see it, then there's not going to be much lithium in the rock. The other thing on the center pane is these white squares. So these were bulk samples that were collected in 1987. These were done for metallurgy, but they got a head grade off of these. And so you can see the grades that were coming off, 1.4, 1.6 in that range. This map is looking at all of the dikes in the portfolio. So these are all at the same scale. Cluster number 1, this is along the road. It's about 60 kilometers outside of Yellowknife. So that would be Phi Main. That's what we just looked at from the channel sampling. Phi Southwest. Phi Southwest is 900 meters long, averaging 20 meters wide, 1.49% average grade on the historic channels. The Boya dike swarm, so there's no historic work that's been completed there, but we've walked parts of that and there's 20% spodumene. So you can picture some of those dikes blowing out to the widths that you see at Phi Main or Phi Southwest. Kai is also in that cluster, 1.5 kilometers long, 12 meters wide, and about 1.4%. And Shorty, 500 meters long, 25 meters wide, and 1.07%. So all of those dikes that I just mentioned, that's within a 3 kilometer radius, and that's definitely a center of gravity for the project. Cluster 2 is going back towards Yellowknife. So Big East and Big West are both dike swarms. They're about 1 kilometer of strike length. There's about 20 meters of dike material within those corridors, and the grades are around 1.4 to 1.5%. And Knight, 900 meters long, 7 meters wide, 1.46% lithium. So all of those ones, those are the road accessible group of pegmatites, and that's where we're focusing the 45,000 meters of drilling. There's been 23 diamond drill holes across the whole portfolio, which is really nothing for something of this scale. But what the drilling has showed in the past is that the pegmatites are similar widths and grades at depth. So here's another shot. This is what they look like. We're out there drilling. We started June 2nd. You can see a drill. We're just pointing the drill at these outcropping spodumene pegmatites. So it's pretty simple. On the right-hand side, this is the drill program. So you can see we're gonna drill these things out. We know there's gonna be a lithium resource here just based on the historic work, and it's just really a question of how big and what grade it'll end up being. Last week, we put out a press release just showing some visual results from the core. And as I was saying before, spodumene, it makes up 20% of the rock mass. You can see it. So in the photo, those white crystals are spodumene. And so locally, we're getting up to 50% spodumene. Across that interval in that hole, which was about 40 meters, we're seeing 20 to 25% spodumene. So these first 6 holes, they all intersected spodumene pegmatite. It's similar widths to what we're seeing at surface. And so that's really just kind of proved the thesis for us, is that these things continue to depth. There is spodumene in them, and the historic work was relatively accurate. So you'll ask me, how do we get this? Why didn't somebody go and do this before? So the timeline of this is interesting. So the pegmatites were discovered in the 1940s, and it's pretty easy to see why as you fly an airplane over these things, and that's the discovery. In the 1950s, there was a run in lithium prices, and that's because the US government was looking for lithium to build hydrogen bombs. So there was an American company up in Yellowknife drilling and trenching for lithium at that time. And they actually wrote down their old resource estimates on their old geology maps, and it pretty much lines up with what we think the potential is here. The original vendor of this project, he got interested in lithium in the early 70s because his brother was a nuclear fusion researcher, and his brother said, go find lithium. We need it for nuclear fusion. So he was out all over the place. He was in Australia, South America, down in the Carolinas, and then he ended up in Yellowknife as what he thought was one of the best lithium opportunities out there. So he staked all the ground. He did a deal with Canadian Superior Exploration, or CANSoup, and they did a lot of the detailed channel sampling, mapping, and drilling in the late 70s. CANSoup was an arm of Superior Oil, which was a big US oil company. And Superior Oil decided to exit the minerals business in 1980. In 1983, Superior Oil was acquired by Mobil, which turned into ExxonMobil. And so Mobil ended up with this lithium project. They had no interest in hard rock lithium at all. So it went back to the original vendor. He did a deal with Ross Beatty in Equinox Resources in 1985. And so Equinox was up here taking bulk samples in 1987 for metallurgy. That was positive. They recommended a full feasibility study at the time. During those years, Equinox was all over the place. They ended up finding the Rosebud gold deposit, and that led Hecla to acquire Equinox. And so Hecla ended up with this project. They had no interest in lithium in the 90s. And so again, it went back to the original vendor. And so it sat in a private company since 1994 with no work done on it. So this guy was a geologist. At some point, he took a different turn in life, and he had a chain of restaurants. So he had about 16 restaurants in Vancouver. Was just ramping this up in the 90s. And so this was just sitting there. And he ended up selling his restaurants off. He had commercial real estate in Vancouver, sold that off. And so he never really needed money. And this was just a pet project of his from his past. So he was waiting for the right time. This is definitely the right time for lithium. And we convinced him that we were the right group to do it with. So just touching on CANSoup a little bit. So this is a paper that they published in 1978 in a journal called Energy. And they were summarizing all of the work that they did in the Yellowknife area. So they were talking about Yellowknife, the Yellowknife pegmatite province, as being one of the largest lithium resources in the Western world at the time. And they also published their mineral resource potential. So this is not 43-101 compliant. This is really based off of sparse information. But what they thought was that there was 49 million tons at 1.4% lithia down to a vertical depth of 150 meters. So our plan is we're going to be drilling these down to 300 meters depth. And that's because some of the pit designs these days for pegmatites are going down to 220 or 250. So you can do a back of the envelope calculation of what we think the resource potential is in the Yellowknife area. And just to hammer this home a little bit, I think a really good comparison for Yellowknife is Sigma Lithium. So Sigma has just started production of a spodumene concentrate in Brazil. And what Sigma is a spodumene pegmatite district, and it's got multiple dikes that are feeding into a global resource. So everything in green on the map, those are the dikes that feed into Sigma's resource, and everything in yellow is the Yellowknife portfolio that we have. So when you project the Sigma dikes to surface, there's about 85,000 square meters of surface area. Yellowknife is 158,000 square meters of surface area. Sigma has a resource of 86 million tons. And so we don't know what a resource will look like at Yellowknife, but just based on the surface expressions of this dikes, I think you can imagine that it could be as big or bigger than Sigma Lithium, which is currently trading at about a $5.5 billion valuation. So the timeline, so we have started drilling. We're building a camp out by right beside some of the pegmatites. We're going to start bulk sampling for metallurgy this summer, and we would expect to have the initial metallurgy probably by January next year. We'll be drilling all summer, and we have also started environmental baseline studies because we need 2 to 3 years of data to enter into the environmental assessment process. So there's going to be lots of drilling. First results are expected in about 3 weeks, and it's really going to be continuous from there. So in Quebec, I'll touch on these quickly. I've got a minute left. So in Quebec, we've got a huge land position. It's one of the biggest land packages for lithium in James Bay. And we are around the Nemaska or Whabouchi lithium deposit. So we're pretty much encircling Whabouchi. And then we have a parallel trend at our Pontax project, which is similar geological conditions to what we see at Whabouchi. And so what we've been doing over the last couple of summers is using till geochemistry. So these are really soil samples, and we've been doing it systematically across all of the properties. What we're doing is looking for small amounts of lithium in the soil that could be indicating that there's a covered source. And so we've come up with 7 anomalies in the eastern claim block, which we're calling Rupert. We're drill testing 2 of them at anomalies A and B right now, and we're doing a lot of surface work to prove out more drill targets for winter of 2024. And then at Pontax, same thing, same strategy, using till geochemistry to narrow down our search space. This was the first pass on this property, and we got into a huge lithium anomaly. It's about 8 kilometers by 7 kilometers. And so we're out there this summer trying to prove up drill targets within that area. And the third project, so this is Cali. This is on the Northwest Territories Yukon border. It's about 50 kilometers to the north of the Cantong mine, and there's a road within about 6 kilometers. So it's not completely in the middle of nowhere. This is another one that Kansu had in the 70s, and the geology map that you see on the screen, the pink is spodumene pegmatite. So they were describing a 60-meter wide spodumene pegmatite that's outcropping over 500 meters of strike in that hill slope. The triangles on the map, those are pits that were blasted, and they were looking for the strike extents of that dike. They thought they were in bedrock, and they were pulling out rocks that had 20 to 30% spodumene at the base of those pits. So when you put this together, it could be up to 1.2 kilometers long, been described as 60 meters wide. There's one chip channel sample of 12 meters at 1.14%. So this one in itself could be a company maker. We're not really pushing this too hard because we haven't been there yet, but we will be up there setting foot on these outcrops later this week. And there's definitely spodumene pegmatites up there. These are rocks from the original vendor's rock collection, and pink crystals are spodumene. So we just have to get up there, set foot on it. If it looks like this, then this is going to get really exciting. So as highlights, we think this is one of the most exciting exploration portfolios for lithium pegmatites out there. I think you can see there's world-class potential in the Yellowknife area. We're well financed. We've got a tight share structure. We'll be drilling multiple pegmatites this year, and there's a whole portfolio of things in the background getting worked up to additional drill targets. Thank you very much.
Thanks, Francis. I'm now pleased to welcome our next speaker, Mrs. Alison Dwoskian, Director of Investor Relations for Arizona Sonoran Copper Company. The company is exploring and developing a copper deposit in Arizona, the Cactus Project. And Mrs. Dwoskian will conduct a fireside chat discussion with Joe Mazumdar, which I'm welcoming again.
Thanks everyone for joining us today. Joe, thanks for joining me today. George couldn't make it. He sends his regrets. And as top pick of Exploration Insights, I've coerced Joe to come up on stage with me to help me with the presentation.
All right, so we got about 15 minutes. So Arizona Sonora Copper is basically in Arizona, southern Arizona, and it's between Phoenix and Tucson. And this was an old operating mine.
Correct.
Yeah.
Correct.
And Osisko had it back in.
Yeah. So in 1974 to 1984, Osisko operated this asset. They operated it as a concentrator in a float circuit. It was an open pit mine, and they pulled out about 400 million pounds of copper during that time. It's a porphyry, so there was some silver and some gold credits as well. They closed. They were considering going underground. They closed due to the copper prices back in 1984, as about 65 cents, and so it went on care and maintenance. Fast forward, Osisko ran into some other financial issues, and so the company ended up going bankrupt. Their operating mines went to essentially Grupo, and the ones on care and maintenance went into state trusts. So in 2020, we were able to extract that property from the state trust. And since then, we've been fast tracking development, and we expect PFS in Q1 of 24. And we're hoping for a feasibility study at the end of 24, and really hoping for first cathodes by 2026.
And for those of you that may not have heard of Arizona Sonora Copper, ASCU on the TSX, you guys probably know Ivanhoe Electric. And so Ivanhoe Electric obviously is Robert Friedland, one of the bigger IPOs. A couple of years ago, one of their principal assets, the Santa Cruz project, abuts Cactus Park Salyer to the south. So the area is of great interest to a lot of people, and not just to Arizona Sonora. When I showed a graphic before about concentrate versus SXCW, and I said that there's not a lot of SXCW projects out there, yours is SXCW and would produce cathode, which is important because you don't have to go send anything to a smelter.
Yeah, so what we're considering is we've got a sizable resource. We're actually the third largest copper development asset that's independent in the States right now, and that's just behind Pebble and Santa Cruz, which is Friedland's property, of course, just to the south of us, and then ourselves. So with our resource, we're actually considering about 75% of the total resource into an oxide and enriched heap leach operation. And then the remaining 25% of the resource we're considering, we're testing right now with Rio Tinto's Newton technology for the inclusion into a mine plan.
Yeah, so let's get into people say US is a low risk jurisdiction, but obviously a lot of people know that permitting can be problematic there. So how have you mitigated that risk?
Yes, we're actually with private land in Arizona. It's a very streamlined process. We're lucky to have our permitting streamlined to the state, county, and city offices. So it's private land. We have a defined timeline is what that really means in terms of permitting. So our Cactus project is essentially shovel ready at this point. We've received all of our major permits. We have the aquifer protection permit. We have water rights up to 3,800 acre feet per year. I think it's about 120,000 gallons per acre foot. That's a conversion. So we're permitted for 3,800 acre feet per year for over 50 years or up to 50 years. So we're in a very unique position. We also have our mined land reclamation permit, our industrial air permits, and all for our cactus PEA. We have minor permits remaining. And then when we have a line of sight on site characterizations with regards to the PFS that's expected in Q1, of course, we'll start our permitting for the major project. So with a defined timeline of give or take, it's approximately 9 months. We'd expect that by the time the feasibility study comes in line, then we should have all of our major permits and minor permits in place.
What was transformational recently, several months ago, was the addition of the Park Salyer.
Yes.
The maiden resource from that. How did that impact the development timeline? Because you had a scoping study that was released a year or two ago, and that did not include Park Salyer. So
that's correct.
So what does Park Salyer do in terms of change your development?
Yeah, so it's a good question. So we had a PEA come out as the qualifying transaction for the IPO. For those who don't know, Arizona Sonoran went public in late 2021, and we used the PEA on the Cactus project. So that showed us a mining operation that was 18 years, approximately 28,000 tons per annum. And that's really what we're being valued on at this particular point in time. In September of 22, we delineated a new resource of 2.9 billion pounds at 1% copper. It was transformational for the company in that we were going to initiate on a PFS on the Cactus project, and we saw this chance to essentially double our mineral resources. And so we pivoted and we said, we're going to put the PFS on hold. We'll put out we'll put out the resource on Park Salyer and then layer that into the resource, layer that into an upcoming PFS. So we're at the stage now that we've got the PEA base case. We're going to layer in Park Salyer on top of that. And that's really a 2.45 billion pound, 1% leachable copper resource that's going to go on top of our Cactus PEA. So we're, with this new PFS, we're targeting an operation that's going to be up to 50,000 tons per annum.
So for those that were watching my presentation when I had SXCW versus copper concentrate grades, the average grade right now globally is around 0.5%. So we're talking almost double the average for their SXCW grade. And you're basically focused on the oxide and the enriched for the upcoming PFS, but most of the drilling previously stopped at the sulfide because that was the focus, but now the sulfide has become something of upside. Why is that?
So we're looking at that as upside or beyond the base case. So again, base case is going to be that 50,000 ton per annum of the leachable oxide enriched from Cactus West, Cactus East, and the Park Salyer. It's a 2 underground, 1 open pit. And that would be 75% of the total resource. What we're looking at right now is, and we're well underway with these studies right now, Rio Tinto approached us in May of last year and said, we would like to test your primary sulfides, so 25% of our total resource. We'd like to test those to see if we could leach that primary sulfide. We've got a new technology called Newton. And so we accepted it was a $10 million investment for 7% investment into the company. And we sent them some material, and the material went through a computer modeled program. So they had 30,000 some odd lines of code, and that computer program showed in excess of 72% recoveries on the primary sulfides. So with that, we went exclusive with them, and we sent them additional material to actually column leach the primary sulfides, and we just put out some preliminary results on that. And what we're looking at is a range. It was a preliminary result, so 61 to 82% copper extraction from the sulfides using their leaching technology, which was, we understand it's a bioleach of some sort. And so after 75 to 150 days, the preliminary results are looking positive for us. And so now the company is working through a commercial framework discussion with Newton to discuss, what a phase 2 might look like and how that might be able to fit into some kind of technical report in the future for us. And
so I guess importantly, the Newton technology and other technologies that are being put forward right now, we'll see how they work, but the idea is to avoid the smelters, the whole refining capacity issue that we have with sending these things overseas. The preference would be to produce the copper cathode in the US and keep it in the US.
Yeah, that's right. And I think one of the important things to note about the Newton technology is that it would fit into a simple heap leach flow sheet. So their pregnant leach solution could go through our SXEW plants.
Okay, so right now,
demonstrate scale. That's it.
Arizona, Sonora, you're infill drilling, or you finished infill drilling Park Salyer to get that up to indicate it, to put it into the PFS, I believe. Are you still producing results
we
from
finished that? The results were exceptional. It did exactly what we wanted it to do. Every time we poked a hole in between one of the inferred drill holes, we got 500 feet or 250 meters. About 200 meters of about 1% copper, in excess of 1% copper. So we're showing that our conversion rate in the PFS for the resource should be quite high.
Okay. And then the PFS will really put a marker, and you can fully fund it to deliver this PFS, I guess?
Yeah. We're expecting to deliver in... Oh, yeah, sorry, we're fully funded, to deliver the PFS.
Okay.
Yeah.
And so in the background, we should see the Newton technology results as well as your own MET results coming?
Our MET results are on site. We're working on those programs in an on-site factory. It's called the True Stone facility. We're running 20-foot columns led by our team on site. We're actually building that owner-operator team right now. So it's great. So the MET work is on site. The Newton work is ongoing in the background. I don't know if it'll go in. I don't know how it's going to go into the PFS at this point. We're working through the various scenarios right now.
Okay.
Yeah.
All right. So, I mean, just for an investor looking outside in, Arizona, Sonora, I guess technically now it is low risk jurisdiction because you're all on private land.
All on private land.
And Casa Grande is really supportive of development.
Yeah, actually, that's a good point. That's a good point. We've done some polling. We did polling in 2020, showed we had 85% support for the company to restart the mine. We did polling a year later and showed that we still had a low 80s, 83% support for the mine to get reactivated. So Democrats were supporting us about 67%. There's a high levels of support from the city, from the state, and I mean, the mine itself is sitting in the industrial park of Casa Grande. So we're in good company with Frito-Lay, Abbott Labs, Lucid Motors actually has a plant right there. Same with Nikola Trucks. So there's a possibility that once we produce our cathodes, that the copper doesn't even leave Casa Grande.
Yeah.
Which is really a neat story. And in terms of even some of the infrastructure that we've got in the area, we have with the former operations, they had the United Pacific Rail line that is right along the highway that's our access road is from. The access road, it connects in with the I-10 that connects up with, of course, Phoenix and then down to Tucson for about 45 minutes south of Phoenix. If you go up the West Maricopa Casa Grande Highway, the United Pacific Rail line actually runs parallel. And so we have a rail line from the past operations that would have shipped out and received inventory to the mine at that time. So we're lucky to have that rail line, the water wells, the water pond. We have roads, buildings. The infrastructure is pretty unparalleled on site and really helps us really develop the asset in this accelerated rate.
All right. Well, I guess to summarize, we have Arizona, Sonora. This is a development copper project in the US on private land, making it easier to permit. You've got your last significant permit. You've got access to water, which is important nowadays in that part of the world. You're funded to deliver your PFS, which should be a major catalyst. You're right next to Robert Friedland with his Ivanhoe Electric.
Correct. Yeah.
So, great. Thank you very much, Allison.
Thank you, Joe. I really appreciate you coming up here.
All right. Cheers. Thank you.
Thank you, Allison and Joe. Now it's my pleasure to introduce our first panel of the day, which is going to be moderated by Terry Orsland from TSO Associates.
Good morning, everybody. We chose the title talk this morning about geopolitics, but a bit more specific, we call it polarized geopolitics for the industry that we have. And I have three distinguished guests here to share the podium and their views with us. Geopolitics has dominated the discussions this morning: critical metals, transition metals, battery metals, and rare earths, and so on. An issue for us is that, in summary, everything is a critical metal on the periodic table at one point in time in their lives. And it is now the topic of the critical metals a bit more sensitive than before. The issue of critical metals is nothing new, by the way. It goes back to the after the Second World War, when the Cold War started. A lot of metals became critical, scrap became rare. And in the meantime, we had reliance on some Russian metal, some metal coming from Eastern Bloc countries under Soviet republics. And as well, the West world was the key. Our consumption models were based on the base of Japan, Korea, Europe, and United States. In the early 80s, it became evident that China became a big critical player. And from early 80s to today, Chinese GNP per capita is up by 25 times. And in the meantime, China has become almost half the world's consumption and production of metals. So the new player in the equation has become actually quite geopolitical at this moment in time. So from Cold War to today's world, we took a sabbatical for approximately 10, 15 years, when the world of mining had no political boundaries. We went everywhere. We tried to develop deposits and invest in many countries. Today, we have a lot of headwinds, with some tailwinds being in the consumption side. My distinguished colleagues next to me are quite well known for the industry, and we're all good colleagues, exchanging opinions, decisions, issues all the time. So we're focusing today, however, on the geopolitical issue, how polarized the world is. And by the time you leave here, we all want you to have some ideas of what the future is all about. And number two, what to do as investor, as corporations, as organizations, as governments about these topics. Okay. Immediately on my right is Keith Spence. Raise your hand. Keith is the CEO and partner of Global Mining Capital. He's a geologist. He's engaged in private equity investments, strategic investments, project finance, and M&A globally. His company has a significant relationship in China and in Asia. Spence is a co-founder and the co-chair of the world to recognize Canadian mining valuation standards and guidelines for the mining projects, which is referenced by the Toronto Stock Exchange and also Hong Kong Stock Exchange and Singapore. And he worked through BC, the RBC, Scotiabank, and BMO in his professional career. He's won many awards, and I'm very pleased to have him next to me.
Thank you.
Gord Bogdan is chair of the advisory board and a senior advisor of Origin Merchant Partners. Chairmanships and responsibilities go through many companies and directorships, from Royal Gold to Allegiant Gold, IM Gold, Nexen Energy, International Royalty Corporation. Advisory is on Tamarack, Black Loom Group, and so on and so forth. is a corporate director, strategic and financial advisor, investment banker, senior mining executive, and geoscientist from Queen University. And as well, he worked in the industry quite a period of time. He won numerous awards. His investment banking practice from pre-2012 through RBC and Rothschild and all as $20 billion in M&A activity. And he's very active in the industry. You'll see his name everywhere. He's not very, very visible, but behind the scenes, he's quite active in the industry advisory capacity. On my far right, John Pasalacqua, international MBA and CEO director of the First Phosphate. He kind of jumped the equation we're trying to develop here. He's already made decisions. He figured out the strategic metal. He will talk less about the geopolitics, but he figured out the conclusion for his company. He's got the First Phosphate as a CEO director. He will tell us about how he got into the First Phosphate and why is he doing that. The first topic I want to talk about is, and ask my colleagues to contribute, is the world geopolitics has three components. There's the host countries have the resources, consuming countries, they need the products for the integration and the better economic environment. And there are the intermediaries who actually make this happen, the corporations, the organizations, the trading companies, and various government agencies can actually make it happen. So the first question is that world geopolitics from a host country point of view today is probably the most intense in accommodating the mining companies to operate, from permits, fiscal regimes, and so on. Where are we, Keith, with respect to the world geopolitics in terms of as a host country and your experience in Asia and China and what they gone through? And we can't even invest in China, for instance.
Yeah.
Okay.
Yeah.
So their views are that how do they integrate their economy into the commodity markets?
Yeah, in the context of host countries and intermediary, I just want to step back a little. And the way I see the world, and it's changing quite rapidly, changing into two major polarities. One polarity is what I call the Anglosphere, which is Canada, Australia, the UK, and I'll put the EU in that group. And then the other group is the China sphere, basically China and Russia. And these two polarities are competing for the non-aligned countries, i.e. Latin America, Africa, Southeast Asia, and to some extent Central Asia, which is in the orbit of Russia. What that means for our business, it's actually, I think, the most significant headwinds that's hitting our business. Because you have to remember that China is the principal consumer of our materials, including critical minerals. China is the principal processor of our materials. And China was one of the key financiers in mining. So the funds in terms of investments in the last few years, that's a significant portion of alternative financing. So what does it mean for us? One of the things that I am seeing, because most of my money in the past have come from China, and now if you're looking at projects in North America, for example, or the Anglosphere that I described, you'll find that the future is going to be such that people are going to say, well, you know, you have China money. I'm not sure we want you to be one of my funders, one of my supporters, etc. And because of that, now we are looking at a significant fund that we're raising would be only North American money and Anglosphere money. So
what you're dealing with is about 50% of the financing in the world is on one side and 50% is on the other side. There's some other aspects I want to talk about, but I'll let Gord comment.
Thanks, Keith. Gord, we learned a lot the last year or two with respect to energy situation in Europe, for instance, and alternative energies and the sources, but the metals are no exception. People are learning a lesson everywhere, and they try to understand how the metals fit into these great expectations of the EVs and transition metals and all this stuff. Now, we have some big projects, okay, in the world. There's no shortage of projects, incidentally, and there's no shortage of resources, but there's a capital issue. First, for this to happen in terms of a production supply, again, come back to host countries. How would you regard the host country policy at this moment in time and the capital needs of the industry?
Sure, thanks, Terry. I think just to step back for a minute and on the theme of geopolitics and geo-investment risks, rather, have always been a prominent value and opportunity engine for our business. Mm-hmm. We have to go where the minerals are. Mother Nature didn't recognize borders when she laid down the rocks. So notwithstanding, in our own backyard, of course, we have a wealth of minerals. We've got to go out and find them. If we're trying to meet the demand of $500 billion, as we heard this morning from Elliot Turner at National Bank, we've got to find them. So we've got to go out and go to other countries, as we have done. Mining has been, at the forefront of international exploration and development for decades. But right now, the geopolitical pendulum, the risk pendulum, has swung. I don't know if it's swung hard right or hard left. I guess it depends on which side of the pendulum you're looking at it. But it has swung tremendously. And how do companies now move forward to work with these governments as we bring on and develop the necessary minerals that we're trying to bring for the next 20, 30 years? And you've seen this. I'll use some examples. You've seen what Freeport had to do with its renegotiations with the Indonesian government at Grasberg. You've seen what Barrick's been doing over the past 5-6 years. Mark Bristow's been renegotiating agreements in Papua New Guinea, in Tanzania, in Saudi Arabia, down in Chile, and now in Pakistan. Remarkable. You just, of course, you all well aware of what First Quantum went through with the Panamanian government not a few months ago, just actually still being ratified. These types of agreements, though, what are they doing? They're very different than the agreements we had with governments for development 20 years ago, 30 years ago. And there's an element of economic sharing in that it underlies the ability for these companies now to be able to move these projects forward, to bring in the capital, to satisfy the lenders and investors that they're going to get that return that they need. 15% hurdle minimum. How do the project lending banks get their money back without political risk insurance? So what's happening, and we've seen it, and I had lunch with one of my Barrick pals the other day just to talk about how they've been doing, what's the model they've been using. And notwithstanding, you've seen ownership maybe 50% on top. Well, gee, you're giving away half the project. Optically, for the politicians, they can tell their constituents, yes, we're keeping these resources for ourselves, or a big half of this. Underneath that, it's a much more complex in terms of how the capitals come in and how that capital is being returned to the investors that are coming in, to the companies that are coming in too. And what are they also doing in exchange for that to help move things forward? Unlike back in the 70s and 80s when the World Bank was going around, putting billions of dollars of capital to work along with the IFC and helping to write the mining codes for all these various countries in Africa and South America. This was more of an aid process. Capital was coming in, aid money gets dispersed. Once it's in there, you have no idea where it goes. So a lot of it was misspent, let's say. It's interesting to see what China's doing with its Belt and Road Initiative. It's where is it? 600 billion, 700 billion, it's coming up to $1 trillion. But they put it into infrastructure directly. Anyway, as this capital's coming in, what are these companies also doing? And they're actually creating a big element of economic sharing is to not just, and I'm not being trivializing it, not putting assisting in education, building schools, building hospitals, and local infrastructure around the mine sites. It's helping to create businesses. How are they doing that? And I've done it myself with one of my own companies. Volta years ago, we had a exploration project in Burkina Faso. Every year, the nomadic farmers would come in with the rains, grow some food, and sell it to the local artisanals. And so we said, gee, we need to feed our staff at the mine. We have 180, 200 workers here. How about you guys, plant some crops, feed our mine and our project. And well, we don't have any capital. Okay, so what we did, we went down to the Standard Bank in Ouagadougou, and we put together a loan agreement where we were the guarantee. It was for a few $100,000 on a guarantee. So this group then went out. Next year, they had equipment, they had tractors, they had irrigation, and they were growing food. They were hiring artisanal workers to work there. And they built a business that actually went further, and not only just supplying our mine, but all around the region. That's economic sharing. That's how you move things forward. That's the development that we're moving into. And companies need to be doing with these agreements, with these kind of countries going forward. Done it here also in Canada, actually, with the First Nation out in BC. One project I was CEO of for a private equity group, and we needed a snowplow contract. We needed, for our mine, and talked to the First Nation. Well, guys, we'll contract you. And again, we went to the Royal Bank in Terrace and set up the same kind of agreement, three-cornered agreement. It's their business. Here's your contract. We'll back it. They went out and leased their equipment, and they had a business. And it wasn't just for our mine. But that's a very powerful tool. It's very simple. Doesn't cost us much. But that's an element that is critical to moving development forward, not only here, but globally, as we move into working with these countries all around the globe. So just as a background.
Thanks, Gord. John, you've taken a shortcut. You figured this out, critical path. You identify that lithium iron phosphate batteries need the material. You focus on phosphate. And all phosphate are not equal, like all metals are not equal. They got different specifics, different impurities, and different reasons for application, different end uses. How did you decide on that in the first phosphate? And what do you see the competition look like? Because phosphate, only about 4% of the world production or world phosphate is considered to be pure for battery purposes. And the other 96% used for fertilizers. So what are the steps you've taken, and where are you on the project?
Yeah, so I guess to begin with is, how did we get into phosphate and why did we get into phosphate? We were told not to get into phosphate. We were told it was an oligopolistic industry. We'd be crushed. The big fertilizer guys own everything. When you look at an industry, you have to look at it from two perspectives, right? Glass is half full, glass is half empty. And you got to realize what you're up against, but you also got to be able to take chances. You got to be able to find opportunities as well. So the fact that it was a tight industry was actually an opportunity to us, because when you look at sedimentary rock, phosphate rock, which is 95% of the world's phosphate, it's all for fertilizer. And only 10% of that can be converted to purified phosphoric acid, which is the precursor for LFP battery. So if you're on sedimentary rock as one of these larger companies, 90% of what you produce will always be a fertilizer grade acid that then goes into all different types of fertilizers. And only 10% theoretically, maybe a little bit more, maybe a little bit less, could be for purified phosphoric acid. So right away, light went off in my head. Said these guys will never be able to serve the downstream client, which is fundamentally a technology client. You're not going to be able to sell that purified phosphoric acid off the back of a fertilizer truck. They're always going to have 90% of their business focused specifically in fertilizer. So something goes wrong in one of their quarters, they're going to dump the LFP production or they're going to dump the PPA production. So what the downstream technology client needs is somebody that's going to be specifically focused on the battery. So that's what we went after. And then we started looking at different types of phosphate, found that there's 1% of the world's cleanest phosphate sitting just 2 hours north of here. in the Saguenay-Lac-Saint-Jean region of Quebec. Can't find that anywhere else in North America. North American phosphate is already depleting. There's not even enough for food or for fertilizer. We're sitting on 10 to 30 years of phosphate in the whole Western world, every single country other than Morocco. It's going to be a huge problem just on the level of food, let alone LFP battery. So it's going to be a problem, right? So already we don't have enough for fertilizer. We don't have enough for food. It's vertically integrated and it's controlled by fewer companies. So how on earth are we ever going to be able to get enough LFP battery, enough phosphate for LFP battery? And how do we do this without competing for food? So we looked at it very differently. We saw that the igneous rock in Quebec can create a very purified, very pure phosphate that can be converted, 90% of it can be converted to purified phosphoric acid. So we said, bingo. We looked at some numbers. We said, okay, well, what would happen if we looked at the demand numbers for LFP, about 2 million tons of LFP cathode active material required by 2030, 600,000 tons going into smaller EVs, 600,000 to 700,000 tons, another 600,000 to 700,000 tons going into buses and commercial transportation. We got that from China. We also took a view of China leads. We don't lead. We're behind. So we didn't come into it with the arrogance. We came into it with the humility of, okay, well, where do they lead in the rest of the world? What do we got to do to catch up? So we're up to 1.2 million tons, 600 say for EVs, 600 for buses and the rest of commercial transportation, and then about another million tons for large-scale energy storage. Large-scale energy storage and smaller-scale energy storage, that being anything that comes off of a hydro dam, a wind farm, or a solar farm has got to be stored, but also the smaller batteries for people's houses, like smaller wind or solar panels in houses, right? So when you look at that, you get up to 2 million tons. Well, how much phosphate do you need to do that? So you need about 1.7, 1.8 million tons of purified phosphoric acid to do that. And so if you do the numbers, we would need 70 new purified phosphoric acid plants in this continent that are derivative from sedimentary rock. You don't even have the sedimentary rock to do it. Even if you had it, where would you dump all the fertilizer? Because 90% of it would go to fertilizer. But if we take the igneous rock, we only need 7 of these. Okay, we're going to try and start to build 1. We'll see how that goes. But so you've got a fundamental equation that doesn't work with the sedimentary rock. If we hadn't taken the time to look at that box from another perspective, or look at the box from the outside the box, we would never have gotten to that conclusion.
Okay, John. Thanks for that. Like you really illustrated very well. Any commodity has specific uses and differences in many application and different consumption. And this was not in the cards many years ago, obviously, in the battery business. Come back to the second and third topic, kind of combined. You two guys talked about it in the backdrop discussions you had. But reality is the world where the mines are, where the concentrates are being produced, where the smelters are, not in the same geographic region, and where the consumption is another region. That will not change in our lifetime. It probably will never change in anybody's lifetime. So the issue is we need to have the metal coming off the ground, okay? Or recycle or not use it, period. And probably it's going to come to that. You're going to have selective uses for the metals instead of the numbers that we're talking about globally around the world. Now, second thing is that recycling will definitely improve a lot. And there's all kinds of reasons why it can, physically and chemically. And come back to the first level, as the corporations actually at $13 billion a year exploration spending a year, we all argue that it's not enough. However, we have lots of projects around the world which are not being developed because of the policy issues and money becoming very complicated. Yeah. Okay, let's take the example. Let's talk about that. In the Andes, we have great discoveries the last few years on copper. High altitude, no water, infrastructure issues. Grades are okay. And just a quick number that we did a few years ago, in fact, a few months ago as well, is that we need about $50 billion in the Andes to develop these deposits. First of all, you don't need enough trucks and shovels to get going in the timelines. There's a backbone. And two is that capital issues, third infrastructure. So, but the biggest issue is that we have these policy issues. Like at TSO, we're very busy doing policy mitigation between companies and everything. But what is the policy issues that you see to accelerate this, and where the capital going to come from? We talked indirectly a bit
Okay, just one point when you're talking about the smelters are one place and the consumption is in another, and the production is in another place in the world. One of the things that I think we've forgotten, and this is in terms of processing, most of the rare earths and the key critical minerals are still being processed in China. And, we're talking about reshoring here in North America and in the Anglosphere that I described. But it will take a considerable length of time before we stop sending other stuff to China. So we have a lot of companies here. Everybody say, oh, I have lithium and I have vanadium and I have all the graphite, etc. And when you get behind everything, most of them are going to China to be processed. And the little secret that nobody talks about is, why has China developed a strong processing industry? And it has because processing is quite dirty. It's a very dirty business. It demands a lot of skill, but it's also quite dirty, and it's not easy in terms of the environment. And so if you look down the road in the next, I would say, certainly in the next 10 years, despite bifurcation, all the stuff is still going to be going to China.
So what are you advising the corporations in rare earths, critical metals to pursue?
Well, the logical answer is to bring all the processing to North America, reshore the processing technology. You have to accept some of the environmental issues. And I'm not sure the countries in the Anglosphere, i.e. Canada, Australia, the US, and the EU are prepared for what it means to process these critical minerals. It's a dirty business. I've gone to just a place in China called, the Chinese call it Nemonggu. That's Inner Mongolia. And there's a couple of cities, years back, Hohhot and Baotao. And you go to those cities, you come back to your hotel and all your shirt is gray.
That's great.
Yeah.
Good.
Yeah.
It just quickly, and yes, I can be quick.
Yeah.
In terms of policy, and we just heard it earlier from Joe, countries don't have a consistent policy on critical minerals. The list varies all around the globe.
Yeah.
Every mineral is critical to our economic prosperity, not only here in Canada, but globally. Every mineral, including gold. Gold's not on the list. Gold creates wealth, created a huge amount of wealth in this country, huge amount of employment. It's one of the biggest employers in the mining space in this country, in this province, across the country, yet it's not on the list. If you want countries to go after all of these things, in 2021, we produced globally $240 billion worth of iron ore. We produced $210 billion of copper, and we produced $190 billion of gold. Yes, nickel was about 50 billion. Lithium, it's tough to get the accurate numbers, was about 12 billion.
Gord, that's a really good point, that gold should be on the critical list. Because if you look back on the original strategic minerals, which the critical minerals is a reincarnation, gold was seen as very strategic. So there's no reason why it shouldn't be, and now things have changed for industrial purposes, the critical mineral list.
They got less than a minute.
Yeah.
Can we put the slide up, please?
Yeah.
Slide.
The slide, guys. Oh, okay.
I just leave it with that, but it's good to have the final.
That's Shanghai in 1990. In 1990, China was consuming about the same amount of copper as Italy.
Yeah.
The bottom slide is Shanghai, same shot in 2020, when every other ton of copper was going to China, produced in the world, 50%. They've moved from that to this. That's what mining does. That's what mining does, guys. And that's just not critical minerals. That's all minerals. That's what we're driving for. Sorry,
we came to an end. Thank you for the last slide. Just the message essentially is that there's a future with that, and China is not the only country that can do it. There are other dragons and tigers in Asia. There are other countries in South America have aspirations to reach the consumption. Doesn't matter if it's motorcycles, doesn't matter if it's the storage batteries, doesn't matter for electrification. They want to move ahead. And how to close the gap for the next meeting, we'll talk about it. Thank you very much. Thank you.
Thank you.
Thanks.
Thank you so much, gentlemen. That was very insightful. Next up, I'm pleased to welcome Mr. Mark Selby, President and CEO of Canada Nickel. The company is advancing its Crawford Nickel Sulfide project in the Timmins region of Northern Ontario. Mark?
Mike's on. It's a continuation of our weekly battery show.
Exactly. Live.
Live from Quebec City. Right. Lots to talk about when it comes to Canada Nickel and what you've been doing over the past 3 years. But more recently, in fact, I tell you what, start off, give us a summary of you and Canada Nickel.
Sure.
Say that one.
Yeah, Canada Nickel, company founded in September 2019. In just over 3.5 years, we have unlocked the largest nickel sulfide discovery since the early 1970s with Crawford. We're advancing it with the feasibility study out this year. We're more than a third of the way through the permitting process, and we're on track for production in 2027. On top of that, we're unlocking what we think will be a very, very large nickel district around Timmins with multiple Crawfords in the area. And most importantly, all these deposits have the ability to store carbon. And so as part of our feasibility study, we'll be designing in a 1 million ton per annum carbon storage facility as well.
That's the bit I want to talk about, because that's super. I think you've done a good job of describing with multiple discoveries, the scale of the opportunity. Nickel sulfides, lower grade, but I think you've done a good job of explaining why low grade is not an issue.
Yeah.
Process and engineering. But the nickel, the carbon storage component, capture storage component, that's a new thing. That, well, why don't you tell us a little bit about it, and we kind of work out what the numbers can look like.
Sure. I mean, so ultramafic nickel deposits all have this great quality that they're hosted in rock. 99% of what we mine are minerals that will spontaneously absorb carbon over periods of time. We had looked in my past life at another project, and everyone has looked before at how much your tailings can pick up after they've been deposited. What we figured out is, why wait for the tailings? As the material is going through the mill, you basically hit it with full strength CO2. And what you're able to do is take a process that takes months or years in a tailings pond to get it into 6 hours as it goes through the mill. And as a result, we can store 1 million tons per annum of carbon. And to give you an idea of what that scale is, the largest carbon storage facility was built by Shell in the oil sands for $1.3 billion US, and it'll store 1.2 million tons per annum. So we will be one of the largest carbon storage facilities in Canada that also happens to be one of the largest nickel sulfide operations.
Okay, let's talk numbers, because people will be hearing that 1.3 billion number and be slightly terrified.
Yeah.
So how does that get funded?
Yeah.
And when you've done that bit, tell me, what would the cash component be? How much money can you generate from that facility?
Sure. So we're designing the operating capital cost now, going into the process plant. That's the beauty of it. We're basically building a mill. We're going to add, effectively additional mineral processing tanks that you would see in any mineral processing operation. And instead of sparging oxygen or some other gas, we're just going to be sparging CO2 into that slurry. So it'll be, very cheap. You're talking low tens of millions of dollars to add that. Carbon prices in Canada are going to be $170 a ton by 2030.
Says who?
Says the Canadian government.
Okay, I believe them.
They mandate that. So
Right,
yeah,
okay.
that's that. Now, how many people will pay it? We'll still have to find out, but there will be a pile of people paying it. And so of that $170, people need to spend money to capture the CO2, but they will also have to spend money to store the CO2. So again, storage facilities will be relatively limited. And so, we think of that $170, we're going to get a percentage of that, as an annual payment. So take whatever per ton value of that 170, multiply that by 1 million, and that's what we're looking at.
Okay, but sticking with the how do you finance it? I appreciate it.
Oh, right. Yes.
We'll deal with that.
Okay, so the big reason we wanted to integrate it in the first place was in the March 22 budget, the federal government created a refundable investment tax credit of 37.5% to 60% of the expenditures to build a carbon capture and storage plant. By integrating it into our process plant, we would assert that, the big rock sitting outside the process plant doesn't capture much CO2. By the time it comes out into our tailings, it will have captured a fairly significant quantity of CO2. And so, we are going to be pushing to get the entire process plant there. So in terms of the capital, almost half the capital to build that process plant should come from that carbon capture and storage.
And how do you finance the rest of it though?
In terms of the overall big project, again, in today's, the government, again, investors need to realize that most critical minerals projects are trading at a discount to the free money that the government has attached to each of our projects. So in the March 23 budget, the federal government created a 30% refundable investment tax credit for anything mining or processing of certain minerals. That is almost that'll be 15 to 20% of our capital. We've got the carbon capture storage credit. And then, right now we're in discussions with OEMs, we're in discussions with battery supply chain. So, like the kind of deal we saw with GM and Thacker Pass, where they provided capital to get in return for offtake, we expect to see that, from those guys in terms of getting offtake from our project.
Right. You're going through a process at the moment to qualify for this. You haven't yet.
No, the carbon capture and storage you have to qualify for. Yeah. And we still have to go through that hump, but we're pretty comfortable.
But you're doing the work before you apply, before you qualify.
Exactly.
Right. So is there, how much certainty is there around this? I mean, because a lot of people are, applying.
Yes. Yeah, no, there are thousands of academic research in terms of mineral sequestration using the kind of minerals we're doing. There's a company called Carbfix in Iceland, who's the largest mineral sequestration thing, who's, harnessing the same effective approach. We're doing it not in solid rock, but with tailing. So yeah, I think the chances would be very de minimis that we would not get the money.
Okay. And how do you time that? Because it's such a nascent space.
Yes.
Right.
Yep.
Things will change. Technologies change. Governments change. Policies change. Availability of money changes. You've got to get there quick.
Yes. Yeah. So as soon as the feasibility study is done, the relevant departments in the federal government.
When's that being done?
It'll be in September.
Okay. There we go.
We will be, marching up to Ottawa to say, here's the research. Here's what's going to happen. Please qualify us for this time.
And how long do they have to look at that?
That I don't know. It'll probably take months. Again, they're in the business of basically wanting to stimulate investment, and there's a fixed time frame on the stuff, so they're not going to spend too much. They're not going to take a long time.
Right. So we're going to treat that as a nice add-on to what is a big nickel business, but financially meaningful,
extremely lucrative.
Extremely lucrative. Okay, but not core, but lucrative.
Yeah.
Let's get back to the nickel. Obviously, at Crawford, again, remind people the scale of that.
Yeah. So 5 million tons contain nickel. 3.5 million in a measured and indicated. It's the 5th largest measured indicated resource, and it's the largest discovery since the early 1970s. So it's pretty big.
And you have more.
Yeah. So, the great thing is the geophysics for these type of deposits really helps you identify what's there. So we have about 5 million tons of nickel on 1.5 square kilometers of target footprint. We did 27 deals from 2021 through the early part of this year. We have 40 square kilometers of this target footprint. Now, not all 100% will hit, but we've had almost close to 100% hit rate on every single target that we drill. And so, we're expecting a, pretty sizable proportion of that, to convert, into a nickel resource. Just for reference, the entire total nickel endowment on Sudbury was 18 million tons. We already have 5 at Crawford, and we've got, 25 times, 30 times the footprint that's there. So stay tuned. and just watch how big the district is. Aston Minerals in our area and EV Nickel have also published 2.5 million ton nickel resources. So this Timmins nickel district, we believe has the potential to be, if not one of the largest, potentially the largest nickel sulfide region ever.
That's going to be important because you went to a conference recently down in DC, and I want to talk about that in a second, but here's an anecdote I got from a conversation with a fund manager. He was talking to CEO of unnamed US automotive, one of the big boys, asked him, well, how much lithium will you require by 2030? A number was given that was 60% of the world's current production. As one automotive company. And the same conversation happened when it came to nickel, when it came to copper, and that was one automotive company. He then spoke to another 3 similar sorts of numbers given. The demand, I don't think we can question it. It's there. It's supply. Lots of people talking a good game, but not so many people are going to be able to time that right into the market. So I thought that was really, really, really interesting for me. Now you were invited to a dinner, with some quite interesting people.
Reception, yeah. So again, I think there's several key things there. So one, in terms of the demand forecast, I would say there, almost no analyst, is really reflecting the kind of ramp up in demand that exactly those car companies are expecting. One of the other guys as part of Team Nickel summed it up best. He said, I wish I could take the conversations that we're having with the car companies and the battery companies and just like release that. Because again, I'm having those same conversations. And again, it's this, we need 4x, 5x, 10x the amount of metal in very short periods of time. And I don't think people realize just how desperate these guys are starting to get for material. The people who do get it, are surprisingly the governments. They see this as a critical national security issue. So I was very, very lucky to be one of 6 mining projects that were invited in for a discussion with some senior U.S. administration. There's somebody from the State Department, somebody from the National Security Council, somebody from the Treasury Department, and somebody from the Council of Economic Advisors. And so, again, getting China out of the supply chain, basically domesticating the supply chain for critical minerals, is really a national security issue. And they see it, as a critical underpinning that they need to fix. If they want to have, basically make sure they can, have the economy that they want to have down in the U.S.
Right, and I guess the flip side of that conversation around, they want the certainty, but they're also making the money available. They're making the money available at the moment primarily to industry. I think we talked about last week's show, 147 billion into industry, but it's slowly starting to trickle into the miners themselves, because that's where it's most needed, because the capital is, well, not dried up, but it's harder and more expensive at the moment for miners.
Right. Oh, no, I mean, the great thing between the Canadian, where we are, between the Canadian government, between the Ontario government, between the US government, it's not too far-fetched to construct a scenario where, effectively almost 100% of your equity capital comes from government sources. So, despite where the equity markets are today, they want these things to happen in a timely basis, and they're making that capital available. Again, one of the funds that was some funds in the US are available to any of the allies. Some have to be on US soil. So, there was money awarded. This was one of the US soil programs, but it was great to see Talon Metals got, $100 million to help build a mill in South Dakota and North Dakota. So again, the governments, there's not just talk, they actually are writing checks.
Sorry, people might have missed what you said. There's this potential scenario where government funds 100% of a mining company's needs. You think that's a likelihood?
Yeah. I mean, and if you can't get to 100%, maybe you get to 60 to 80%, and you throw in one offtake deal, and away you go.
Well, I hope that's the case. Mark, great update. Good luck.
Always good to see you.
Cheers, man. Thanks.
Thank you.
5 seconds. Good. Thanks.
Thanks.
Thank you, Matt. Thank you, Mark. It's now my pleasure to welcome Mr. Robert Wares, Executive Chairman of Brunswick Exploration. The company is an exploration venture company conducting grassroots exploration for lithium in Canada using state-of-the-art exploration technology. Robert.
Thank you. Morning, everyone. So I'll introduce Brunswick Exploration. For those of you who are not familiar with our company, essentially a startup in the lithium space about 2 years ago. I spent the pandemic period compiling the country, literally, because we have land positions now in over 5 provinces. And the idea was to get in a reasonably early stage, at least we got in before the current boom, in order to secure key ground in Canada, which has now become ostensibly what is Canada's largest grassroots lithium initiative. So exploration for lithium in Canada since about 2015 is essentially summarized. Companies going back to showings that were known for 20, 30, even 50 years. And it's already been successful. There are 4 deposits now, real deposits in Quebec, about 2 or 3 smaller ones in Ontario, with at least 2 significant discoveries in Ontario. So the discovery rate and development rate is accelerating very quickly. And given that Canada has the largest Precambrian shield in the world, it's already becoming pretty clear to me that the hard rock lithium potential in Canada is unsurpassed anywhere else on the planet. And in the next 10 years, we're going to see many more discoveries, world-class deposits and hard rock deposits, and production of at least 3 of them. So we're well on our way to becoming probably, I believe, world leader in lithium production. And the timing is great because the demand for lithium is skyrocketing. Whether you look at benchmark or S&P Global or WoodMac, the consensus is that the demand for lithium is going to keep increasing because of electrification of transportation systems. And any time between 25 or 30, depending on the demand curve, we're going to be seeing a deficit, and a deficit which is into the foreseeable future cannot be met with developing supply. Would Mackenzie always include possible development in their curves? By possible, they intend to include deposits that have resources, but have no feasibility, no permitting, very, very early stage, many of them in questionable jurisdictions. So we'd like to ignore the possible category and just stick to what is base case and probable. And so if you look at the WoodMac statistics next year, we're entering into a deficit space for global lithium production, which can only lead to sustained, strong long-term prices. Don't think it's going to stay at the $7,000 a ton we saw for lithium con last year. It's settled back to around 35 or 4,000. But long-term, we're very comfortable with $3,500 a ton for a spodumene, standard 6% spodumene concentrate. And for those who believe in recycling, this is from BMO. This is what we're looking at potentially in the next 7 years, maybe 10% of recycling. The only metal on the planet that is very well recycled is lead, because lead batteries go, of course, into every conventional vehicle, and very few people know actually that most EVs also have a lead battery, which is necessary for starting up the vehicle. So the demand for lead with EV production is not going to drop, in fact. So the acquisition of our land package, which now covers north of 500-600 pegmatites across the country, is based on the standard model for lithium pegmatite generation. It's a well-established model, quite reliable. And the fact is there are hundreds and not thousands of suitable pegmatite fields in Canada that are sitting out there that are virgin. and have never been explored for lithium. So given the chance that any pegmatite field, we estimate you only have 1 or 2% chance of actually finding a spodumene mineralized system or individual dike, then it becomes a numbers game. You got to bang off as many pegmatites as quickly as you can, and that's been the core of our strategy, is to focus targeted acquisitions on visible pegmatite fields. And with any decent satellite imagery, you can actually see them. And so you can cover a lot of ground very efficiently by remote sensing techniques. So the first large field acquisition was in James Bay. So we have a large land package in the James Bay area where many, many companies are active, for which now there are 4 to 6 known deposits. Also in the Hearst area of Ontario and northern Saskatchewan and Manitoba, and a few properties in the Maritimes, but right now we've put those on the back burner to focus in the James Bay and Ontario areas. In the James Bay area alone, we have 58 properties covering over 250 pegmatites. We started field work 3 weeks ago and then had to pull out because the forest fires were still on standby, but we hope to redeploy the crews in the next 1 to 2 weeks. And the main areas of interest, of course, are geologically of interest around the Corvette discovery by PMET and the Mirage property further to the east and down further south, and Nettekau property, which is adjacent to Alchem's Galaxy deposit or James Bay deposit. So the Plex area is very interesting because the Corvette discovery is along a structure called the Lagrange Shear Zone, and that extends westward right onto the Plex property. And this is not a coincidence. These are old Virginia gold properties. And of course, Virginia was focused on shear zones and fault zones because that's where the highest potential for organic gold occurred. Well, it turns out that many parts of the James Bay, the same fault systems also contain pegmatite dikes. So the PMET or Patriot battery metals, a fantastic discovery. Everybody's waiting for their maiden resource estimate. And that's going to drive more excitement, we believe, in the James Bay area. Going further south to Nettekau, this is an option of our sister company, Osisko Development. So the James Bay or Galaxy deposit is about 43.3 million tons of 1.4. We had, and we still have the boundary claim to immediately east of the deposit sitting right here. We initiated a small drill program this spring. The yellow areas are the dike intersections of mineralized spodumene. So it was an instant success. Essentially, what we discovered is the extension of the James Bay deposit, with the most notable intersection being 26 meters at 1.5%. So the system is still mineralized as it goes east. However, we already know as a standalone, this will not be a mine. Eventually, this will probably have to be integrated into the Alchem operation. So we've put that on standby for now and we're going to move east to further advance the project towards our main block. In the Mirage area, which is located immediately east of Corvette, this was announced last week, actually, after a couple of days of field work before the crews were pulled out. They found a very significant large boulder trains of huge boulders that are just literally loaded with spodumene mineralization. The crystals are up to 0.5 meter long. It's a pale gray spodumene, which means it's iron poor, which is good news. And this is an example. The crystals here outlined in green, some of those boulders are just absolutely loaded. And given their size and distribution, we believe that this is glacial erratic extracted from a very nearby source. Up ice direction, we've got 18 kilometers covered on our property. So we're 99% certain that these boulders were scraped off from a nearby source on our property. So we're very excited about this. As soon as we can get back in the field, we're confident we can find the source. which should be significantly large dikes. And we've already applied for a drill permit to start popping holes into this, hopefully as soon as August. Moving on to Hearst area in Ontario, we initiated a small drill program on a small showing called the Decoy Pegmatite. This is a property located right on the Trans-Canada Highway. Again, easy access. We popped 2 holes, limited success. It's a narrow dike, 5 to 10 meters. So right now we're prospecting the rest of the property to find better targets. Again, we're not chasing after small thin dikes. The objective here is to find something that is a minimum in the 20 million ton range to have a significant impact. So we're sticking to that plan, and the advantage of having a large land package, but the exploration technique that we're using, which is inherently heavy use of a portable XRF unit to qualify the potential of an individual pegmatite dike. The objective is to cycle through as many dikes and as many dikes as quickly as possible. So we have no intention of maintaining our position on these dozens of properties across the country. In fact, the objective is to wipe them out as quickly as possible and move on, and then replace them with more acquisitions. So it's a continuous process that's going to allow us to efficiently bang through a very significant number of properties, whether we're Saskatchewan, Manitoba, and Ontario, and evaluate the potential, and knowing or being cognizant of the fact that we only have 1 or 2% chance of hitting on a large pegmatite system. Maybe we'll be luckier and we'll have a higher rate. But the point is, it's a numbers game. With over 600 pegmatites in our portfolio right now, the objective is to zip through those as quickly as possible. And you have to realize lithium exploration, hard rock and pegmatites is unique. I can't land an outcrop with BXRF and within 10 minutes determine whether the intrusion's got potential or not, and yay or nay. You can actually do that in lithium exploration. Within 10 minutes, you can write off an entire pegmatite dike based on this geochemistry. PXRF does not detect lithium, but it detects associated elements which can determine the potential, such as rubidium and cesium content. So that's it. It's the biggest grassroots initiative in Canada, and in the current market, it's very exciting. I haven't seen so much excitement for a commodity since the 1980s. So we're going to proceed diligently, very quickly, and of course, we're extremely confident, especially with the Mirage discovery, that certainly within the next year, we have excellent chances of bringing in a new significant discovery into a Canadian portfolio of discoveries. Thank you very much.
Thanks, Robert. Next up is Fireweed Metals. So Fireweed is a mineral development company focused on sustainably exploring and developing critical minerals project. The company is currently pursuing a number of projects in the Yukon and Northwest Territories, and I'm pleased to welcome its CEO, Mr. Brandon McDonald.
Hi, everyone. Happy to be here today. I would note, every time I come to Quebec, I'm reminded how much the Canadian school system failed me because my French remains effectively non-existent. So je m'excuse for the Quebecois people in the audience today. It's all going to be English. We're happy to be exploring in Yukon Territory, Canada. It's the company that we built in 2016, took public in 2017. A team that, in addition to myself, former geologist, former banker, came back to industry, also working with Chairman John Robbins, who you may know from Kaminak, Great Bear Royalties, et cetera, tremendous amount of success in his career. But it's not just, the team that we assembled that's, the Fireweed team itself. I think you look at the caliber of backers that we've put together in this company, and look, nobody bats 1,000 in this industry. Nobody's perfect at picking projects because it's a high risk industry. But when you're able to boast the likes of the Lundin family, who just invested $20 million in us in December, when you have them in your share registry, when Teck, the world's third largest zinc miner, has committed repeatedly to your financings and owns almost 10%, when you have several other PE funds and high net worths with a long history of success in this industry, when they're backing you, when they believe in your projects and team, it suggests a lot, and it's a strong validation for what we've been doing. And I would note that financing that we did in December, there was a $35 million financing. That leaves us set up for this year with a truly massive cash position going into our biggest ever drill program. And we have 3 projects. We're going to focus on 2 today. So McMillan Pass and Mactung, these are our 2 flagships. These are both in Eastern Yukon Territory, Canada. A Yukon Territory known for the wilds, but we do have road access to these projects. It is, we're able to bring in heavy equipment. We're able to bring in a semi and trailer, which makes a huge amount of difference when you're looking to advance a project, when you're looking to permit to have existing roads. And the project that we built the company around, McMillan Pass, which you can see there, this is a project that the core of which in the lower right there, you can see the Tom and Jason deposits. That's what we bought off Hud Bay. This is a project that had been in Hud Bay's portfolio for decades and decades that they hadn't done any work on for 20 plus years when we bought it off them. We published a resource in 2018, 11.2 million tons indicated, 3.5 million tons inferred at about 10% zinc equivalent, which was already enough to place this as one of the world's largest undeveloped zinc projects. But what we recognized was that there was more in this district than just Tom and Jason. There was an underappreciated potential here. So we did a series of land deals to grow the position from 50 square kilometers to 940 square kilometers. And I just want to highlight a few things here. And I'm not going to, touch on every single drill intersection here, but what you'd notice is every single one of these drill intersections is pretty incredible. And so I'd highlight one, at Boundary West, 12.3% zinc, 1.3% lead, and 46 grams silver over 124 meters. That's not only the best hole on this project in terms of grade width, that is the best zinc intersection for a greenfields project for at least 15 years. And, when we expanded this land package and when we started, understanding more how to explore for these style of deposits, what it meant was that we got better. We started to vector towards the higher grade. And this is a project that's been drilled for, like I said, decades and decades. There's 300 plus drill holes on it. 6 out of the top 10 drill holes all time were last year. So when you think about that 2018 resource, the 5 years of drilling we've done since then, the drill program we're going to have this year, which is as big as the last 4 years combined, you start to understand the scale of opportunity to increase that resource when we publish our next one. So in context, you can see McMillan Pass in the lower right of this. So, all the small gray dots there, which I haven't labeled, those are most of the zinc deposits in the world. McMillan Pass already, 4.5 million tons contained zinc plus lead, which puts it, like I said, in about the top 25, 30. But we feel pretty comfortable signaling that the next resource update, which is going to be next year, is going to be a triple-digit percentage increase in the size of this resource. And so I think broadly, it's going to be, punching with the rewards, the Zawar, the Oizernoyas, and the Taylor Hermosas of the world with the next resource update. And I've highlighted Taylor Hermosa there because for those who remember, in 2018, South 32 paid $2.1 billion for that project. Excellent work by that team. And when we think that, okay, our next resource update next year is going to be very comparable to that. And as I'm going to touch on here as I get through some of the exploration upside in this project, why we think it's eventually going to be in our rearview mirror. So for a company now worth, with an enterprise value of maybe 100 million and a potential peer that was valued at 2 billion, you can see why we see some serious opportunity here. And a lot of this opportunity comes from a zone called the Boundary Zone, which was part of the project that we bought well after the 2018 resource. So Boundary Main was something that Kaminko had drilled ages ago, the 80s, and they would hit these broad low-grade intersections of zinc, sort of 100 to 300 meters of sort of 1.5 to 2% zinc. So clearly a system there, and they recognized that, but they were struggling to make it cohesive, struggling to understand it. We came in 2019, drilled 230 meters of 4.5% zinc, but critically, the first 100 meters of that from surface was almost 9% zinc, which is triple the average open pit grade for a zinc project in the world. So when you're looking at a potential big open pit system that has those sort of grades, it starts to get extremely interesting. But what we struggled with initially was we were looking at the mineralization at boundary zone here, and whereas Tom and Jason are classic, what would have been formerly referred to as SEDEX, now might be referred to as a shale-hosted zinc deposit. Boundary looked something different. It wasn't the classic stratiform. It was not finely laminated. It just didn't look like Tom and Jason. What it looked like was these veins, these breccias, and sometimes these veins got to multi-meters thick of pure sphalerite. And we were struggling to understand what the genetic sort of analog for this was. And until we saw that this exact style of mineralization existed underneath the main part of Red Dog. So Red Dog, they call that vein ore at Red Dog. It's not the interesting part of Red Dog. The interesting part of Red Dog is where you see chemical replacement of a barite horizon, and you get these massive zinc lead sulfides. So the theory was, okay, if we have the uninteresting part, maybe we have the interesting part as well. But what we need is to find a barite horizon that's been replaced by these zinc and lead sulfides. So understanding that massive sulfides and barite are both very dense, we did a gravity survey in 2020, turned around the survey, the field level map, the target, the drill hole, the discovery in 1 year. And what the discovery was Boundary West. And this is a cross-section from a year and a half ago, but critically, that red horizon there that you can see steeply dipping, that we call that Red Dog style. If you held a core from the main part of Red Dog and from that massive sulfide horizon at Boundary West, they very hard to distinguish between the two. So the initial holes in there are sort of 7% zinc, not a Red Dog. But what we found as we got deeper, 8% zinc, 10% zinc, and then that big broad intersection, the 124 meters of 12.5% zinc in that same horizon. And in fact, the core 60 meters of that huge intersection was 19% zinc. And as a total bonus, we found a parallel horizon above it. We hit that in 2021, 10.5 meters of 24% zinc. So these are truly incredible grades. And I would note one thing on this slide, NB8309 there, that light gray hole from the top left was a Kaminko hole that must have come within 20 or 30 meters of the high grade horizon there, and they must have stopped the hole, right? So sometimes, someone else's inability to discover something, LEAP provides an opportunity for future explorers. And this year, our initial drill program, our initial phase of the drill program this year, which is already underway, we're targeting the area between Boundary West and Main. We understand that Boundary West is getting higher grade as it goes east. Boundary Main is getting higher grade as it goes west. And so we're doing a bunch of holes in what we call the untested potential feeder zone there. One of the most exciting targets we've ever had on the project. And, that's really just the tip of the iceberg on this project. Tom, Jason, end zone boundary, known deposits, all subcrop or outcrop. The discovery of them, I would not qualify it as easy, was certainly easier. But we have 8 to 10 other, targets on the project, which could be deposits of that scale in their own right. So when I say that, comfortably, we eventually will leave, the deposits like the Taylor Hermosas and the Ozernoyas in our rearview mirror, it's because of these, numerous other zones and targets on the project. Our secondary project, or kind of a co-flagship, is the Mactung project, which by no coincidence is right next door. So this is a project that used to be in North American Tungsten, if people remember that company. This was their flagship asset. This was their big development project. They had a feasibility study on it. They took it all the way through the environmental assessment. They got a positive recommendation to proceed. They went bankrupt. And they went bankrupt because of their operating mine elsewhere, just couldn't keep up. And so both the old Kantung mine and the Mactung development project ended up owned by the government. The government repeatedly tried to sell them together, and nobody wanted to restart Kantung. There was an environmental liability there. The reserves were mostly depleted. The mobile equipment had been sold. The mill was old. And so eventually, after years of engaging the government, we convinced them to sell Mactung to us directly. Now, for tungsten, I think everyone's heard of tungsten, but there's 3 qualities of tungsten that make it extremely unique and impossible to substitute for. So it is the hardest metal. It is the highest temperature melting of metal, and it is, I think, the third or fourth densest metal, so just slightly denser than gold. So for manufacturing, for aerospace, for defense, there are no substitutes for it. And China currently controls 85% of mine supply, with Russia almost another 5%. This has given enough anxiety to the US government, for example, that recently they cited tungsten as one of the major concerns in their defense supply chains. So they've mandated that US defense contractors cannot source rare earths, magnet metals, and tungsten from China or Russia. Well, this has disqualified 90% of potential suppliers for that industry. And it also leaves US processors in a bit of a jam, because if you've got customers like Ford and Caterpillar and Lockheed Martin, and you have to make sure that there is no Chinese metal tainting what gets sold to Lockheed Martin, you're going to struggle to segregate that. So you end up having to buy significantly more non-China origin or non-Russia origin metal for all your clients. So this leaves us particularly well positioned. And I've got, just like the Mac Pass chart here, I've got sort of resource size versus average grade. And you can see with tungsten projects, by and large, as they get bigger, they get lower grade, and the high grade ones are very small. And that's where MacTung sits. So there is literally nothing like it. It is a tungsten project without peer. Anyone who's ever worked in the tungsten world knows about MacTung. When we announced the updated resource on this in like last week, we described it as the largest high-grade tungsten deposit in the world, and it is. I think I describe our McMillan Pass zinc project as an emerging, tier 1 zinc district. I describe MacTung as the best tungsten deposit in the world because it is objectively. So we are uniquely well positioned. There are no North American tungsten mines. This is a metal that is extremely in demand, particularly Western suppliers. And the scale of this project is such that we could meet the lion's share of the U.S. and more broadly North American demand for tungsten for 4 to 5 decades. So it's excellent to say, well, we have a fantastic resource, we have a robust project, but this is a strategic project. And this has given us an excellent amount of leverage to engage governments, both Canadian and foreign, to help us advance this project. So we've already had, we talked about the access road to the project. We've already had with the Canadian government commit $71 million to our access road. We're expecting a whole quantum significantly larger than that in the future as the Canadian government and their partners understand the strategic importance of MacPass and MacTung combined. So there's the resource statement from just last week. So look, in summary, I think we all hopefully appreciate that there's been a massive underinvestment in metals. There is a coming bull market that is going to be extremely strong. The recent fragility in the market has highlighted this. There are no great projects in a lot of metals, or the cupboard is pretty close to bare. We have a leading project in zinc. We have the best project in tungsten. We have backers who are extremely savvy, who understand what it means to have a great asset, who have been backing us. We're cashed up for our biggest ever drill program. And by extension of that, we're going to have our most catalyst-rich year in the next year or so. So look, I'm here for the rest of the day and parts of tomorrow. Happy to answer questions. Thank you very much. Thanks.
Thank you, Brendan. So we've got one last company presenting before, after that we'll have the Minister of Natural Resources of Quebec and then the lunch panel. So last but not least for this morning, I'm very pleased to welcome Jamie Levi, President and CEO of Generation Mining. Generation Mining's focus is the development of the Marathon Project, a significant palladium, platinum, gold, and copper deposit in northwestern Ontario.
Right.
I think we better kick off. Usual introduction. Introduce yourself and the company.
Hello, I'm Jamie Levy, President and CEO of Generation Mining, and thanks for listening to my presentation. Or
what are we going to talk about?
What would you like to talk about last night?
Well, give us a summary of the company, and then I can get into it. Last night, definitely not.
Definitely not. Okay.
Yeah.
Generation Mining, I was just hearing Fireweed. I think they began around 2019, same as us. This was a spin out of a company which Bob Wares, the earlier was talking about. We had a zinc project in the Northwest Territories called Pine Point. We sold it to Osisko Metals. We got a spin out of that company. We were looking for a different asset mix of commodity mix from lead and zinc. So we chose to look for some palladium projects. We came across this project that Sibanye had. So we reached out to Sibanye. We closed the acquisition in 2019. After that, we did an updated resource report. We put out a quick PEA because there had been 2 feasibility studies completed earlier. Then we put out a feasibility study in 2021. We just updated that feasibility study technical report in 2023. So we've done a fair amount on the technical side. We resumed the environmental assessment process that the Stillwater and Sibanye was in. We got that approved by the federal and provincial governments. Sorry, I'm babbling here. We got that approved in November 30th, 2022. We did do we completed a CBA, Communities Benefit Agreement, with our First Nation partner, Bidagana-Shnabeg. We've already done phase 1 of our financing. We've arranged $240 million with Wheaton. We just announced a couple of weeks ago that we have arranged a syndicate of banks of $400 million US. So it's been a busy almost 4 years coming up. Yeah.
It's been busy. You know, in a certain light, you look like Bradley Cooper. You know that?
I'm sorry?
Anyone? No? Bradley Cooper.
Oh, really?
Yeah. Let's talk about the money side, because I guess the problem I'm trying to address here is that seems to be a massive disconnect between what the market's valuing you at, the stage you're at, and what your economic study says you should be doing. Right? I'm trying to work out the why. Okay. You with the Wheaton facility, 240 million. You've drawn down what, 40 now?
40 million.
Right. Okay. So they understand what you're doing.
Yes.
You've got a consortium with this credit facility as well. 400 million?
400 million US.
Okay. Let's remind people of your market cap.
Under 100 million.
Okay. Right. So there's a slight disconnect. Most ICOs want to tell me that story, but I'm trying to work out for you. Is this something that you've not done? Is it something that you've done, or is there a misconception in the marketplace? What do you put it down to?
Well, I think another metric you can look at, our feasibility study had our net present value at 6% of just over $1.1 billion. So that's trading at less than 10% of our net present value. So I think that is the biggest discount we're trading at relative to, Wheaton. We streamed the gold and 22% of the platinum, which is less than 5% of our revenue for $240 million.
Did you pick the wrong metal?
And palladium? I don't think so. I mean, palladium has sold off a little bit recently, I think, with the crisis in Ukraine. Now they're selling it to China for cheaper. They never got sanctioned. So palladium's not performing all that well, but we do have a very nice, I don't like to call it a byproduct, a co-product of copper. It is a copper project with a palladium credit, just by size, but by price, it's obviously a palladium project with a copper credit. So we're doing over 41 million pounds of copper a year. So it's a substantial amount of palladium. Palladium, we're doing 163,000, or we will be producing 163,000 ounces of palladium a year. So, I mean, on a gold equivalent, we're almost at 285,000 ounces of gold. So it's a big, big project.
It's a big project, but it's not gold.
It's not
so people don't understand palladium.
Yes.
Clearly, there's a market for it. And clearly your backers understand that. So sorry, the financial groups that have kind of understood your story and bought into it, understand that. But what are people missing about the palladium market? Because it's been fairly erratic in the past in terms of pricing, and companies trying to insert themselves into that have fallen over. So why is now the right time for palladium?
Well, palladium had a little run up just before or just after Russia went into Ukraine. It went through $3,000 an ounce. Now it's trading, I think, around $1,500 an ounce. So it has sold off. Copper is performing quite well. I think at $3.90 now. Palladium it's an industrial commodity. It's used in your catalytic converter for an internal combustion car. I think there's a belief that we're all going electric cars in a couple of years. I don't think that's going to happen. And if it does happen, copper is going to shoot through the roof. So it's nice to have that polymetallic deposit that we kind of have some relationship. If palladium does fall because of everyone has an electric car, copper's got to go to $7, $8, and then we'll be for sure a copper project. But I mean, the natural transition that we see in the China news is that plug-in hybrids are outselling battery electric vehicles. And you know, there's increasing loadings in China right now, in Europe right now. So they really want to get rid of the toxic emissions. So, and the loadings have increased. So it's going to demand more and more palladium. And as a plug-in hybrid, you require more palladium than a straight car does. So I think that palladium is going to be here for a long time. And if it's not getting used in internal combustion car, there's other usages like pharmaceutical, but the big usages is in the processing side. There's a report that I read the other day. For AI, you need to have a very strong motherboard or processing power. And the palladium acts as a catalyst that can cool it down, so you could run whatever you want.
What are the numbers on all of that? Because it's well good describing the use cases, but if the numbers aren't there, you can't sell at the price that you want into this market, because you'll be a big producer, right?
Well, not that big. I mean, we'll be producing 163,000 ounces a year. The market is the demand is about 10 to 11 million ounces a year. 7 million is coming from supply, from mine production. The other differences come from recycles. And I mean, it's been in a deficit for 7 or 8 years now. A lot of that was the stockpiles from Norilsk. They have no more stockpiles. The supply side is a mess right now. The majority of the palladium is coming from Russia and South Africa. South Africa, as we all know, Eskom's got some power shortages. So those projects are at risk of not producing as much as they anticipate. And Russia, they were supposed to do a very large expansion at Norilsk, and that got shut down with the crisis because they can't import anything right now. So I think the demand is going to keep increasing. I think the supply is going to be falling, and I think we're going to fit in pretty nice, and we're not going to affect the market.
Right. Well, it'll be interesting to see how they're going to the Russia situation and where metals flow east or west. Probably not one for now. Just back on the money side of things, right? So you got some, 240 and 400. Great. You've also got offtake.
Yes.
With Glencore plus one other.
It's they didn't want to be named, but it's a smelter in Europe.
Right. Okay. So how do those contracts get formed? I mean, because given the discussion we're having around potential failure around price, 3,000 2 years ago, 1,500 now, how do you ensure your revenues going forward?
Well, I mean, you're selling it to the smelter at that price that it's at that day.
What does the agreement look like?
The agreement, it's in our feasibility study, but it would be 97% payable or 90% payable. Then there's a deduct of so many grams.
Right.
So it'd be 2-3 gram deduct that you would have off of that. So I guess it depends on the price. So
and what percentages off have you guaranteed with this offtake?
So 50% is going to Glencore, and the other 50% is going to overseas. So
how long?
Life of mine, or we can shut it off whenever we want.
Okay.
After a certain point in time.
Do you think people don't know that or something? Is that because I'm again coming back to the original point, is I don't understand the disconnect between your NPV, what the market's valuing at now. Is it something to do with your share register and buying? I mean, what do you?
So I think that there's the palladium market that I think people don't understand, and I think that there's a single asset development risk that some funds are a little skeptical about. There were some issues at Cote Lake and Magino just south of us. So we're learning from the mistakes that they made, and we're looking at a project just north of us, Greenstone, that that Equinox is working with Orion, and we're looking at the successes that they have on that project. So I think that that's part of it. And I think with the for the past year, when we were trying to get a new capital number, and we came up with a 26% increase in our capex, that we do have a bit of a funding gap. So that funding gap hopefully will get resolved later on this summer, early fall, and then we could tell the people, our investors, that we're fully funded. And I think a lot of people are waiting for that opportunity to be fully funded before.
And that would be an equity requirement.
It would be equity or equity-like. And we're trying to go equity-like, so it's non-dilutive to the shareholders.
Right. We heard a lot of conversations around alternative financing during this conference. So what were the options available?
The federal government of Canada, bless you. The federal government of Canada has mandated in their last budget $3.8 billion for critical metal projects. Some of that is going to the processing side through this fund called Strategic Innovation Fund. And the other fund is called Canada Infrastructure Bank. They just put a press release out last week that they're looking at mining projects, and they're looking for a minimum investment size of $100 million. So we're going to try to potentially tap into one of those to fund, to bridge the gap. Then there's prepays that you could do with private equities. There's partnerships that we could look with private equities, companies, or other strategic investors as well.
Okay. Any other long poles in the tent, like EA, EIS?
So we got our EA or EIS on November 30th. So now we're applying for the provincial permits.
Okay.
And Quebec is, if not the most mining-friendly province in Canada. Ontario is really picking up their game right now. I have the ability to talk to ministers right now, Minister Peary, Minister Piccini, Minister Rickford. They're all pro-mining. The Ford government is supporting critical metals. And if we're running into any roadblocks with the permits, the ministers are helping out with their chief of staffs, with their policy folks to make sure this gets resolved. I mean, if they want the Ring of Fire to be a success, this Generation Marathon project will have to be a success first. We got agreements with First Nations. We got government support, federal support. So I believe we're going to be fully permitted from the province to start a construction by the end of this year.
Okay. Again, to come back to the share register and also in terms of offtake agreements. So if, again, another conversation being talked about during this conference, like North American critical minerals lists, did you consider pure North American partners rather than European smelters? Do you think it would have helped at all?
I don't think so. I mean, the Horn smelter, Glencore, a lot of people are skeptical about them to begin with, but our risk profile to have all of our material to go to one smelter risk is something that you have to consider.
Yeah.
And sending it overseas to a European smelter, there is other benefits that they provide as well, with loan guarantees for senior lenders, certain working capital facilities, certain payables are a little bit better than other smelters. So there's a reason why we did it this way, and I think it makes the most sense. And at the end of the day, Europe is friendly with North America. So in Canada, we don't manufacture, we don't refine PGMs anyway. So it's got to go over to the US or over to Johnson Math at your European.
Right. And you talk about in your presentation, phrase, we're undervalued due to the phase we're at. So we're talking the Lassonde curve boring phase that you're in. And the timing for when you think this uplift recognition will be what?
I think when we're fully funded and permitting, and I think when the sentiment in the market gets better. I mean, this is a crowded room right now, and the sentiment, I think, in the retail market isn't the best right now. So I think once the sentiment gets better, we're fully funded with all our permits ready to go, then we'll get re-rated. I mean, analysts that we've talked to this week have been saying we should be trading at 50 or 60% of our net present value. So that's a $500-600 million valuation, and we're trading at $100 million market cap. So we do have some room to go. So we do have to do some work, and we want to build this project. We want to get this thing built for Ontario, Canada, and the world.
A good buying opportunity, eh?
Yeah, okay. I'm buying right now.
Okay, well, thanks very much.
No, thank you.
Appreciate it.
Thank you.
Jamie, thank you, Matt, once more. Our next guest is getting ready. So just a couple of things. I see a lot of people standing in the back. There's still a few limited chairs available up front if you want to move up. And also just to remind you, the next two sessions are going to be conducted in French. For 3 days of conference in Quebec City, we figured we could afford an hour and a half in the native language. So I would remind everyone there are some auto translation devices available in the front. If you need one, please go ahead because we're gonna need a minute or two here. So very insightful discussions this morning. Obviously, lots going on in the critical mineral space, lots going on in the province here. So we're looking forward to see what our next guest has to say about that. They said I'd have to tap dance a few minutes. Hopefully they're going to signal to me when she's ready. But all right. So without further ado, it's my great honor to welcome the Quebec Minister of Natural Resources and Forests. C'est mon grand honneur de vous introduire, de vous présenter aujourd'hui la ministre des Ressources
It's a great honor for me to introduce today the Minister of Natural Resources and Forests, the Honorable Maïté Blanchette Vézina.
Bonjour, bonjour.
Good morning, everyone. Thank you for your patience.
Donc, distingués invités.
So, distinguished guests, Ms. Lewis, Exim Bank, presenting Mr. Diamond, with whom I just have an interview, our friend Brisson, also my greetings, Jean-François Belland from Investment Quebec, and Mr. Guy Bourgeois from the AEMQ. I'm very happy to be here with you today as part of the second edition of the Mining Investment Event of the North. So a new event that has become a must already for investors interested in exchanging and learning more about the mining sector in Canada, and of course about the business perspectives and outlooks in Quebec.
To be here with you today for the second mining investment event of the North, a new event that has already become a must for investors interested in sharing and learning more about the mining sector in Canada, and of course about the business prospects in Quebec. À titre de ministre des Ressources naturelles et des Forêts,
as the Minister of Natural Resources and Forests, it's a great pleasure for me to welcome you in our home today, particularly in this wonderful historical sector of our national capital. I must admit that I feel very, very interested in today's theme, the critical minerals, because they represent certainly an unprecedented and unequal opportunity for Quebec, and they play a central role in our energy transition. In many countries, we've been observing for some time already a significant growth in demand for some minerals essential for the electrification of transport and the decarbonization of the economy. The impacts of climate change and the geopolitical situation in Europe, the fragility of the supply chains generate very sizable challenges that compromise investment and the predictability that the industry needs in order to operate.
This is what the Gouvernement du Québec is relying on in developing its relations in the mining sector. That is why there are so many business opportunities in Quebec, and that is why Quebec is the right place to invest in the mining sector right now. That is why we invite you to be where it's at, in the area of critical and strategic mineral that is here in Quebec. Le Québec est une des juridictions minières.
Quebec is one of the most attractive mining jurisdictions in the world, and we owe that to the most diversified mineral potential in Canada. We owe this also to full and well-developed ecosystem. The renewable energies, our innovative and economic policies and responsible practices, our openness to financing at each stage of the project, and a real will to reduce continuously the administrative burden imposed on the industry. And the success of our mining sector is based both on its vast mining history and on the tightly knit environment that it represents, which makes it easier to coordinate actions and the support made by various government bodies with promoters and investors. In English, we often use the proverb, small is beautiful. Well, that reflects very well the user friendliness which we're aiming for here in Quebec in the mining sector. Businesses are telling us that they very quickly feel included and they're well supported.
Is one of the most attractive mining jurisdictions in the world. And this is due in particular to the most diverse mineral potential in Canada, to a complete and developed ecosystem, to renewable energy, to innovative economic policies, to the funding available at each stage of projects, and of course, to responsible practices. The Quebec mining sector is primarily 21 active mines in our territory, and in addition to 30 mining projects under development. Our subsoil contains all the minerals needed in the battery production, like lithium, nickel, cobalt, graphite, and manganese. And when it comes to critical and strategic minerals, Quebec is truly a must. We are the first producer of niobium in North American Hemisphere, the first graphite producer in Canada, and the leading producer of high purity scandium oxide in North America. That being said, Quebec stands out particularly because of lithium. We have no less than 7% of the world's reserve. Half of the lithium projects in Canada are in Quebec. D'ailleurs, plusieurs projets miniers de lithium pourraient...
Several lithium mining projects could come into production in the next 5 or 6 years, with the potential of providing up to 10% of the world production of lithium concentrate. All conditions are brought together so that an integrated extraction, concentration, and processing of lithium should appear and emerge in Quebec. With the perspective of being a partner of choice in carrying out mining projects, Quebec proposes to the industry varied financial tools. In order to do that, we have Investment Quebec, which is the investing arm of the government. This is a crown corporation that supports the creation and development of businesses of all sizes with financial investments and solutions that are adapted to their situation. It already contributed financially to several active mines and mining projects. Businesses that benefited from Investment Quebec services reported their Quebec experience in terms of funding made the whole difference to make their projects move ahead.
To be a partner of choice in the implementation of mining projects, Quebec offers the industry a variety of financial tools. To that end, we have Investissement Québec, the government's investment arm. It is a government corporation that supports the creation and development of businesses of all sizes through investments and appropriate financial solutions. It has already contributed financially to several active mines and mining projects under development. The company that benefited from these services reported that their Quebec experience in providing support made all the difference in advancing their projects. In addition, Quebec has a vast network of well-established and accessible road, port, and rail infrastructure for the mining industry. Its location also makes it a strategic point for accessing the US and the European markets. It is also a place that provides political stability, which is to the advantage of investors by providing some predictability. Je suis très fière de pouvoir affirmer que le Québec est un précurseur.
I'm very proud of being able to say that Quebec is a precursor in critical and mineral and strategic minerals. In addition to a diversity of our mineral resources, we stand out by our initiatives. The Quebec Plan for the Valorization of Critical and Strategic Metals from 2020 to 2025 was the first of its kind in Canada. It meets the objective of the Quebec government to make of Quebec a leader in production, processing, and recycling of critical and strategic metals. Production, processing, and mostly also recycling. That's where we're at. Because the International Energy Agency predicts that the lithium demand could increase by 26% from now until 2050 to meet the decarbonization objectives of the world governments in the world. That's why we have to put in place concrete actions that will be efficient right away to increase the recycling of our metals. And this is what we're working on now.
I am very proud to be able to say that Quebec is a pioneer in the area of critical and strategic minerals. In addition to the diversity of our mineral resources, we stand out through our initiatives. The 2020-2025 Quebec Development Plan for Critical and Strategic Minerals was the first of its kind in Canada. It meets the government's objective of enabling Quebec to become a leader in the production, processing, and recycling of CSMs. Production, processing, and most importantly, recycling. That is where we are. The International Energy Agency predicts that demand for lithium could increase up to 26 times by 2050 in order to meet government's global decarbonization targets. Therefore, we must take concrete and effective action to increase the recycling of our metals, and that is what we are working on right now. La stratégie québécoise de la filière batterie est également centrée.
The Quebec strategy for the battery subsystem is also focusing on valorizing CSMs here. Its objective is to encourage the use of Quebec minerals for the manufacturing of battery components, as well as to develop the recycling of these batteries. We want to invest in the local production of electric cars, electric vehicles in general. As part of the strategy, I have to underline the advancements that were made in the implementation of a battery valley in the Bécancour sector between Montreal and Quebec City. The battery valley, the projects involved in this project, total potential investments of $10 million. Major players such as Costco, GM, Valley, BASF are already engaged in a development process here in Quebec. And to ensure that our batteries are made from safe source minerals with diversified sources that comply with our high standards, the Quebec government is focusing with several partners to accelerate the development of traceability solutions for minerals. Our objective here is that these supply chains be transparent and should testify to the responsible practices that are close to our heart in developing minerals.
In Quebec and the establishment of a battery valley in the Bécancour sector located between Montreal and Quebec City. The projects involved in this development have the total potential investment of $10 billion. Major players such as Costco, GM, Valley, and BASF are already engaged in a development process here. These projects will help ensure transparent, responsible, and sustainable supply chain. Et c'est ce qui m'amène à vous parler de développement durable et d'acceptabilité sociale. Deux valeurs qui sont primordiales dans la réalisation de projets miniers qui font du Québec un incontournable.
Making Quebec an essential stop, we say that we keep talking about the mineral potential and investment and expertise to invite and interest project proponents. So we talked about the mineral activity from extraction and valuing to make sure it has carbon, low in carbon, and in compliance with the communities' wishes of surrounding communities. That's why Quebec wants to take its place on the forefront of the world stage in mining. We have the respect for the environment and these mining and our offer with it will be in a complement to our offer of green and renewable energy, which means Quebec, such an interesting and essential place for the development of greener mining. This will be a fact to develop a contact for the approaches, different local communities that have stable steps that are that have social acceptance.
Talking about mineral potential, expertise, and investment is not enough to interest proponents. The expectations of companies and the population require the production of minerals with lower carbon extraction and development in line with community expectations. This is where Quebec has all the assets it It needs to represent a distinctive option of the greatest interest on the world stage. Our high standards in terms of respect for the environment and the reclamation of mining sites, in addition to our offer of green and renewable energy, make Quebec an interesting place to develop greener mining projects. And we want to do more and to do better. Last spring, I launched an extensive participatory exercise in which all Quebecers were invited to express their views on the mining future in Quebec. How we can encourage social acceptability. How can we optimize industry practices? How can the positive impacts of mining on local communities can be maximized? These are essential questions that will enable us to establish in Quebec projects that are aligned with host communities. A strong, efficient, and exemplary mining sector on the international stage. And above all, a mining future that will create pride, not only in the surrounding communities, but also in Quebec and in Canada as a whole. Make no mistake about it, our mining sector is on a roll, and we invite you to get on board with us. Merci tout le monde. Bonne journée.
Thank you, everybody, and have a wonderful day.
Merci, merci Madame la Ministre.
Thank you, Madame Minister. Avant qu'on se prépare
for lunch, and just give us maybe 5 minutes, and we'll be right back with you.
Rebonjour à tous. Alors, merci d'être avec nous ce midi, alors qu'on va faire un panel sur le sujet de l'importance des matériaux.
We'll do a panel on the importance of critical metals in Quebec. The participants in this panel, I have the pleasure of introducing you to Ms. Natalie Camden, Assistant Deputy Minister for Mines, the Ministère des Ressources Naturelles et des Forêts, Natural Resources and Forests, and Tony Brisson, CEO of SOCAM, Mr. Amir Choquet, Vice President, Investissement Québec, Jean-François Bella, Investissement Québec, and Patrick Beauchesne, Director of the Société du Plan Nord.
Un, deux. Et voilà. Alors, bonjour à vous quatre. Merci.
Hello, all four of you. Welcome.
Je pense que ça va faire un bel enchaînement sur,
this will be a good follow-up to the minister's speech that we just heard, and the theme of our subject is critical metals in Quebec, major issue in the mining sector. Every week we hear new announcements or developments. There's a high-scale project in Bécancour, which will become a large battery sector in North America, and Quebec made this a big priority. We've heard this for many years, and now with these announcements, we see this accelerating, so we have some exciting times. But beyond the electrification of transport, we're talking about critical metals as well. Critical matter in other sectors, and in the current geopolitical climate with China and Russia, we see the importance of all these materials that we couldn't even name a few years ago within the new sector, rare earth. We had another presentation on this this morning, so I'm looking forward to discussing this with you. Before we get into more specific questions for this sector, it would be interesting with many of the participants, and a lot of them are active in Quebec, and they know different players, but for the different investments which are more familiar with the Quebec ecosystem, we'll have different key actors in this ecosystem. We'll take some time and hear more about your organizations. What are your roles? What is your hunting grounds? What are your priorities? And then we'll talk about the collaboration in this ecosystem. So we have Ms. Camden, if you'd like to start things. My name is Natalie Camden. I am Assistant Deputy Minister in the mining sector within the Quebec Ministry of Natural Resources and Forests. So as you know, for most of you, Quebec is in charge of the management of natural resources and mines, energy. So this regard within our sector is that we're in charge of the mining regime. We're in charge of the Mining Act and its enforcement as well, and we make assessments on it as well. And in our team, we have Geology Quebec, that does the acquisition of data as well through all the exploration work. And for over 2 or 3 years, what's interesting is that we've added members to this team, and we've dedicated some funding to this to work on critical and strategic metals, because we didn't have this expertise or approach. And with the work from Geology Quebec, which is interesting in Quebec is that it's funded, it is stable funding coming from royalties that allows our activities to be more predictable. We also have a team that accompanies the proponents the best of our abilities, and some people are in mining policies. So basically that's what we're doing within this sector. We also work in collaboration with other ministries and our partners as well, our natural partners, to favor better mining development. Thank you. Jean-François, Investment Quebec. People know you a little bit more. You hold the wallet. I am the state banker. It's basically Investment Quebec at Osisko Resources Quebec. And promote foreign investment is not our role in Investment Quebec. It is the funding of projects, mining, energy projects, battery projects. And the portfolio of Resources Quebec is energies, mining, resources, forestry, the question of hydrogen, and also, as time goes by, the battery strategy. And we can go, this has continued for about 20 years. It's been quite a while. We've been involved in all of the mining projects in Quebec in partnership with all the people on the panel, namely Natalie's team, Tony's team, who works daily on this. So we talk about project funding, so equity and funding equity, and like a classic the bank to ensure that we can develop projects connected to public policy. As you said, we have industrial policy and with the battery strategy, so we can acquire all of these elements to have consistent value chain as well, and the creation of values for the betterment of our industry. We talk about the Plan Nord. It talks about a political event in 2000. We go up to 2015 where the legislators created a new Crown Corporation, which is the La Société du Plan Nord, where we have a sustainable development mandate. We develop in four main orientations: access to the territory, environment, create environments so which are viable. So which we see. So we're not policymakers, and the accompaniment of proponents as well. One is the maximization of local and regional economic spin-offs or benefits through our commercialization office, and then after this, and all we can do to bring in a project properly road access, telecommunications, fiber optic, namely, and a lot of accompaniment in the government ecosystem. We can say sometimes that we can play the role of a one-stop shop for promoters. Instead of knocking on 15 doors, they can just come and knock at ours, and we can integrate them into this ecosystem. The last function is enabled to describe what is the business environment in the north, the part of the territory that's under a treaty. There's First Nations, there's Inuit too, there's environmental regime as well, public hearings, when we can see what is the business atmosphere in Quebec. Well, this is important to accompany the potential proponents. Tony. I'll continue with SOCAM, so thank you. SOCAM is, for those of you who don't know this, it's a company that's existed in 75, which was founded by the Lesage government, and then following Hydro-Quebec, Quebec followed it to create SOCAM. It's the Quebec Corporation for Mining Exploration. So SOCAM is a state corporation that's funded by Investment Quebec, which gives us the advantage of being a little bit less vulnerable to the ups and downs of the market. With our main shareholder, SOCAM is an organization that works throughout all of Quebec. We're agnostic to commodities in the sense that we will go according to the effective policies or things that could give us the best returns or the best benefits. So we have offices in Chibougamau and Val-d'Or. We also have about 20-25 employees. It depends on the season. About a dozen geologists who will be doing the work on the ground. So our business model from SOCAM is basically starting from the generation of projects all the way to more advanced economic studies. And from this point, when we talk about mining building of mines or exploitation, is certain that investment in Quebec could also be involved even to an even greater extent. One important item in the SOCEM DNA, there's also partnerships, which are a key element. For a long time now, SOCEM has developed business relationships with the small and medium businesses as well, or major, junior or major companies. For example, we were in partnership with the Sayona mining, with lithium, with nickel, with Midland, in the Labrador Trench, and the base metals as well, and gold mines as well. So, and many more. So many of our projects and our portfolios are developed through partnerships. It's win-win. So I share the expertise and costs, and we share the risk, which is very important in our field of work. The SOCEM portfolio right now is about 15 projects, go from Nunavut all the way down to southern Quebec. Gold, base metals, strategic and critical metals, and it's these elements that we are working on a lot in the MCS in particular, which pretty much covers our activities. Patrick, you mentioned this, but proponent or a more junior player in exploration that doesn't have a processing team, or doesn't have a team that's really developed team. What is the coordination and facilitation that you can do if this person has to take their wanderers, they have to wander around to each places, or are you there as a sort of orchestra conductor to guide them? So, of course, in the government, there's no single window, and the promoter will come and see to one place, and they'll get all the services from beginning to end. That's not the way it's set up. However, the idea, one of the roles that the Société du Plan Nord plays is to bring together, there's 14 meetings. We try to have 1 or 2 meetings with all of the players at the table so that there's synergy shared on information. More specifically, for providers, for the commercialization office, there are specific activities that are organized, especially for the days of the Suppliers Day as well. And so it's a networking, those who provide work, Hydro-Quebec, the Ministry of Transport, and the providers, the local and regional suppliers, to hold bilateral meetings in order to match those who give work to those who can provide the work, and also allow the businesses to unite their strengths and to have a greater amount of clout and leverage when it's time to answer calls for tenders for work. And now we can add training the work, and then we train the promoters just on the fact that, you know, the system, this EIO, it's the public tender form. For someone who doesn't know this, can have some difficulties getting through this. So the accompaniment measure is in the first steps of some of the projects, all the way until we create knowledge networks so that the provider and the entrepreneur can exchange on their mutual services. And the objective is the maximization of a spin-off. So it's a big project on the North Shore, and there's more that we want a lot of these local businesses to advantage from this. Same thing, Nunavik, Lac Saint-Jean, or in Uichi, James Bay. Jean-François, you were also mentioning investing in Quebec, wants to invest in the context of supporting orientations. What's your level of autonomy? What kind of project or what scope of project is there, where the political support is necessary? We started with IQ. There's 2 funds. There's our own funds. We can do what we want. There are criteria, and we invest here. We get interested in projects, and the CRNA is a project that we can release with our friends at the ministry. So there's a more complex mechanism. There has to be a committee, and we have to submit projects and analyze them. But usually it goes quite quickly, and usually the projects have been aligned, discussed. Everyone was mentioned. Everyone's talking to each other. There's information is circulating, so there's no surprise. It's everything is ordered and methodical, and the orders are funded with a certain level of tolerance to risk, and it's up to us to assess this with technological and geological input. That will be with our other partners, the ministry. Usually we have a preference, it's not exclusive, for critical and strategic minerals and batteries. This fits with the strategy and the request. So we have a preference, but regarding classic projects, we're still there. And if this makes sense, if it's fundable, if the criteria are filled, investment in Quebec will say that it's present and it'll be different levels. The equity participation, anything, we can look into anything that makes sense to accelerate the setting up of the mining sector to create wealth and ensure that the projects proceed quickly. So this can go into different funding stages, and there's social acceptability and prioritization. So these are all elements that are involved. I'd also like to add to this, with what Jean-François said, is the financial support with the approaches that are different according to the needs of the proponents. But we also have other kinds of support, like different kinds of programs that exist in the ministry to try to diminish the risk of the project. So we have the exploration for minerals. We have projects to test the procedures, and we are targeting a research and development specifically for transformation, because we know that we have issues. This is complex, and we don't necessarily have this expertise in Quebec, so we need to support the companies to make these projects as effective as possible. So we look at the background of our ecosystem, and you have you here all here on stage. You have seen the projects go by in your career and your specific angles. So Tony, in your opinion, due to your experience, what is the facts for having success for a mining project beyond the resources that are high quality? Why is it that some projects work? What are mistakes that we should avoid? Of course, the fact that we're in Quebec, it's an advantage unto itself. Why? Because we have an exceptional geology, and the geological potential here is fantastic. Access to the land is also excellent. Access to energy, which becomes an important and increasingly critical element, we know, and manpower as well. The workforce, Quebec, is a worldwide standard as well. We're well known for this high quality throughout the world. The regulatory and legislative framework in Quebec is what's the best regarding infrastructure for environmental rules are clear for everybody. And you have to say taxation in Quebec. There's something that's advantageous. Regarding mining projects, I'm not going to teach anything, teach you anything new here, but when we talk about the quality of the vein as well, this is a key element. But through all of this, when we go through an operation, the quality of the deposit as well, you need money, and you need a financial breakdown that makes sense. You need people, you need a team, you need people who are behind the mining project. That's one of the most important elements. A mining project, the people who set up these mining projects will also support a particular attention for everything that's called ESG. That's the key. if we want to try to end up with a deposit and try to exploit it. We'll try to respect all of these standards. That is something that is very important. Definitely. That's pretty much what I have in mind. Then we have the traps or the pitfalls. There are some that is to underestimate the estimate parameters. If these are poorly built, it would be, you might have to take a few steps back. I'd have to work in about 10 mining operations, unfortunately. You try to work with the bad mining methods. We have the estimate, because the initial estimates were bad or skewed. So you might not pay enough attention, once again, to the number of the ESGs as well, to the greenhouse gas effect. So the timing is also a key element. That's also it's something that we must keep in mind. We have to convince investors at the right time and also start production at the right time, which isn't always easy. So that's what comes to mind off the top of my head. Thank you very much. For the greenhouse gas effects. Yes, I agree with that. And I'd also add in 2023, what happened was the relationship between the proponent and the host communities, be they local or indigenous. That has to be established from the beginning. Way at the beginning. Go talk about your project, which is being planned. Have your intent well known, even if it hasn't taken shape. That's what's key. Regardless of where you are in mining regions, people have concerns which are totally legitimate. And these are also opportunities for these communities, but they have to see them coming. So this dialogue is important to establish from the outset. We also have people who do this naturally, and those who do it less naturally or belatedly. Sometimes they have to catch up, and sometimes the damage is higher than we'd hoped. But sometimes we call this question social acceptability, but it can take all kinds of shapes. It's dialogue and collaboration to be established with the communities. That's clearly the case. It's so fundamental. That's an essential part of the social contract in Quebec. And no matter what the project, you must have the acceptance and the consent of our co-citizens and our friends, the First Nations. We have a key, let's say, key approach for any new project on the territory. And you know, without a doubt, that in governance, you have to identify risks as well with all projects and the mitigation processes as well, and the impacts of the risks and how we can act it. So in general, oh, here we go. The organization. And so if you have a bad publicity, you're going to have difficulty finding social license, social acceptance from your host community, about finding a certain level of funding, because we don't want to have people say bad things about us. So we have the reputational based risk, and that's the key to the host communities, is to develop a common language, which isn't that easy, because for the proponents, whoever they are, we see the ground, we see the territory, we see the project, we see the resources and the revenues. For the host communities, it's a living environment, a leisure environment. It's a place where they go to do their subsistence hunting or harvesting of natural resources. So there are two different ways of interpreting this territory. So as long as you haven't agreed on what you mean by territory, or you before you can share a common vision where both functions have their place, it'll be difficult to establish a dialogue. And the dialogue is fundamental to establish a trust relationship with the host communities. But without this, these projects will generate demonstrate resistance more than adhesion. And for the key success factors in the risk analysis before we bring a drill onto the land, take some time to talk to the people about this. And like Natalie said, explain the project and its scope and what the community can get out of it. If a community gets no benefits, it's all going to be the same ones. Well, that's not a winning condition to reduce the risks associated to the project.
Thank you. I think that was great guidance. Natalie, if we pivot now to critical metals specifically, as we say, Quebec is in the headlines for all the efforts we put in this battery subsector. And contrary to most Western jurisdictions who try to attract contracts, we have the benefit of having resources on our territory. What are the specific initiatives that the government is implementing to encourage the development of those critical and strategic metals? Well, let me repeat what the minister said. She spoke about the action plan on critical and strategic metals, but also the battery development strategy. But behind all that, there's our plan for a green economy. We speak here about energy transition. That's really the context in which we're evolving. And as we all know, we have the chance of having these minerals. We have the chance of having expertise in Quebec. We have a mining ecosystem which is robust and solid, a regulatory and legislative framework which we want to evolve and improve. Although I hear Tony saying we're among the best places in the world. Okay, great, but we have to continue to be good, and it's hard to remain at the front of the parade. And we have to integrate into all that the new societal concerns which we want to evolve to. So what we're going to do will be different from what we did in the past, and tomorrow will also be slightly different. We, as a government, we set for ourselves some priorities. There is a clear political will about developing those resources. There are opportunities which we can seize, but in order to do that, we have to do this collaboratively. And as Madam Minister clarified, what we did in this strategic plan on strategic and critical metals, and this was the first in the mining policy, what we did is to cover from exploration to processing to putting restoration of sites and circular economy and recycling, because we know that even if demand is exponential, even if we eliminate all possible sources in the world, we'll never manage to respond to the large demand that has been presented to us by large international institutions such as the International Energy Agency. To do that, part of it will be the circular economy, part of it will be metal recycling, and as a society, we also have a role to play there. And as part of our action plan on critical and strategic metals, we even have a program aiming for processing, but also recycling and circular economy. So it's another government-based approach. We're getting out of our comfort zone, but this is something that is more general, more comprehensive in order to meet and solve the issues. At the same time, we have a pretty short transition period. If we want to get involved in this, we need coordinated actions, we need consultation, we need political and administrative will to better support promoters in developing their projects. Support also means some dollars. Jean-François followed your social networks. I imagine you're getting an apartment for yourself in Bécancour. Yes, I was there last night in Bécancour in the new Battery Valley. What are the levers that you have to bring some financial support to the various projects? Well, I was going to say that funding is almost easier than operating. Once we're there, the project is advanced enough with funders and all that. But previous to that, there's so much work. I'll answer your question by another question. What will history remember of all that? the economic history of Quebec. This is a turning point where we see that everything is materializing at the same time. The stakeholders, the various parties. Financing is one piece. Project execution is particularly difficult. Many people want to come. Minister was saying in Montreal that we have 107 projects. That's totally true. The plans change every 2 weeks. They shift. The success leads to success. Why is GM going there? Why aren't we there? People ask themselves. And that leads us to a point where I spent more time in the last few months managing farmland, zoning, electricity, and transmission lines. That was not part of my job description initially, but those are all things we have to look at. In Bécancour, I was not supposed to spend so much time. I was going to Paris every month. Now I go to Bécancour every week, Paris every month. So it's a career progression. It's a career move. Funding is there. Funding is being articulated with specialized financing. Frederic Hugo Lacroix's team. This is a complex funding endeavor because in businesses, we're competing with the whole planet. Why would they come to Quebec instead of Tennessee, Michigan, or Ontario? Well, there's the whole environmental issues. We were talking about the minerals, which are there, but the ESG issues, the question of clean electricity, clean power, the Quebec battery will be clean. It's desired to be that way. If we compete with the battery done in Tennessee with coal, it's a bit different. The reality is that the funding has to be connected with the federal. You read in newspapers what is being offered in other jurisdictions. They tell us what's happening, what's coming. That's another point. And the elephant in the room, the IRA, the American elephant, when you put on the table $370 billion of US dollars for critical metals, for batteries, the pressure is there. And we get into overbidding. A Korean president was telling me recently that he's worked for 40 years in about 5 different countries. He's never been as well treated and received as he was in Quebec. Yes, the Quebec people is welcoming and friendly, but if you invest more, if they lose $3 billion in their plant, they won't come here necessarily. Those are all things at play. We take part, we're there. And my main role is to defend the higher interests of Quebec and of our Quebec taxpayers necessarily. And that's part of the questions. It's not an open bar on the taxpayers' money. That goes without saying. Related to that today and throughout the conference, we have lithium in Quebec. We find the lithium in Quebec. There's a craze for this sector. Lots of companies have projects that they are pushing and that are moving ahead. How do you prioritize all that? Will IQ support 10 or 12 lithium projects in the province? That would be a nice problem to manage if you get there. The answer is really applied tactics and strategy. We know every week what we have, what's missing, where we want to go. We know the number of vehicles we'll have in 2030 based on 2019 models. What happened in North America, what was manufactured in North America is 14 million vehicles. Out of that ratio, if we exploit what we're doing with the battery strategy, Quebec, with 8.7 million people, will have a participation in 20 to 40% of all vehicles built and manufactured in North America in 2030. Don't forget, we're 20% of Canada. We're about 8-9 million inhabitants. We're playing very high compared to what we actually are. That's interesting. Will we develop everything? Will we reach a limit in terms of capex, land capacity limits, or human resources limits? Of course, limitations we have. We will develop what we can. There are a few pieces missing in the chain, and I'm targeting on those missing pieces. But I can guarantee, get ready. In the coming weeks, announcements are coming. There's even what I call a Normandy landing with announcements for batteries that are coming. True, it is true, it is real. And you don't want to reveal any scoop today, but no scoop. Wait for the scoop. Wait for the press release. When we think about the mining sector, it's lithium that's required. There's also copper and nickel. Copper and nickel is a bit more historical. We're familiar with those metals. Graphite, Eric was there. He was talking about the Nouveau Monde project, which is moving ahead. Are there holes? Are there gaps? Can we hope eventually to be totally self-sufficient in battery production and be able to produce everything from A to Z? Tony is giving us the answer to that. From my point of view, we own all of the commodities required. Yes, we do. Is there anything else that will come and be added in near future, which are already in the subsoil, which we haven't looked at maybe, and could become a new lithium? That's possible. We know the history of the last 200 years. There was a time where we exploited pyrite to get iron and sulfur from it. Now pyrite is becoming sterile and it's no longer used. However, we can't predict the future. Will lithium ion and cobalt batteries, will they be the most popular thing in the near future? Currently, we hear a lot about phosphates. The answer to that, Tony, is that studies prove that we're there for 150 years. Technology will not change. There will always be lithium required for 150 years. The rest of the chemical mix can vary. Phosphates and cobalt is called upon to be reduced. Nickel is very costly, and ISO4 might be lower in proportion, but fundamentally, lithium will be there for the next 150 years. We speak about that during all our discussions. Something as trite and known for thousands of years, the copper will be out of it at one point. Wiring, there will always be electrical vehicles, but there are kilometers of wiring. We need copper for this wiring. I want to add something to that here. I know that lobbying is made and representations are made, but because we at the Société Planard were both shareholder and owner of the port and rail company in Sept-Îles, essentially, we empty trains and we fill up boats for export. What's in the train is high purity iron ore, 66%, even sometimes 69%. More than a year ago, last year, Mr. Fitzgibbon and Mr. Julien, Minister of Natural Resources at the time, also announced probably a potential project with Iron Ore Quebec for a restart of the pelleting plant. What I want to say here is that even if we think about using 100% of our potential, we at the Société Planard want to act where others are not acting. We want to avoid duplication. And a key factor for that will be access to land. And as you mentioned earlier, do we have everything needed to go to the maximum level of exploitation? The deposit is one thing, but you need the roads to evacuate the material. Maybe we need railways if we have enough volume. Why a rail? Because that takes away hundreds and thousands of trucks on the roads to do the shipping between the deposit and the primary processing, or even further. So in the general scope of the planning for electrification of transport, we have to meet several challenges at the same time. There's the one of having available electrical power for some projects to make the plant operate, the plant that will process the metals, which we will need later on. So let's not lose sight of that. True, in Quebec, we have all the tools to succeed, but at the same time, there are key factors that can become important triggers for the feasibility or for the non-feasibility of projects. So we have to work on all aspects. I'm just talking about the Billy Diamond Road, the James Bay Road from Matagami to Radisson. This is the road that dominates the UC in James Bay territory, where we have the main lithium operating projects at this point. And even if we want to renovate that road, if it's our only road for supply, right now it's the only road. So that becomes a risk factor, which we have to consider. I think we have everything to succeed, but let's not forget the logistical chains. We saw, unfortunately, with the forest fires, that some cities, they can be evacuated by only one road. That becomes a very significant risk factor. We have to share this with the industrial system. We have to meet those challenges in the right way. Yes, a few things to complement. Beyond the fact that it's the only road, it's because where is the capacity of that road to have an additional load from mining? So the capacity of this infrastructure has to be looked at. But let me come back upstream. I'm saying that, yes, there is potential, but access to the resource also becomes an issue because of government policies. It could be because of caribou protection or protected areas, there are additional constraints on the shoulders of promoters, and we should consider that. Yes, there is potential, but can we give access to this resource? That is something else. However, it goes without saying that what you've heard today is the market rules that will determine the results we get. I mean, it's up to the businesses themselves to do the first steps. We're there to support. The government cannot be a mining promoter. The government doesn't want to manage mining projects. We want to give a hand. We want to de-risk those projects to make sure that we have the best possible projects. But clearly, we're not going to nationalize the mining industry. We're not there at all. It's the last thing we want, by the way. It's really accompanying, supporting. We're there to guide politically and industrially, and to accompany financially and fund to a certain proportion. But really, the goal is for project managers to act. And first of all, does the project make sense? Is there a demand for these resources? That the rest is known. The recipe is well known. Before continuing, we didn't have a lot of success today with questions from the audience, but if you have any questions in the audience, I will get back to you in some 10 minutes. You can think about a potential question you might ask in the meantime. We just mentioned access to power, access to electricity. In Quebec, at one point, we didn't know what to do with it. At one point, we tried to export it as much as possible because we had big surpluses. But now, overnight, we end up in a situation where we will not have enough electricity. When we talk about developing the whole subsystem of critical materials with the battery subsystem with our clean energy, how will this allocation take place? And for a company working in this sector, how should they go about to have access to those electrons? I don't know who was to take this question. It was not forecast. It's a good question because it's a source of concern a bit to me. Essentially, there's a committee that's been put in place. We're analyzing all the inputs, the project, the criticalness of the project, the number of megawatts required, and the location. If you want to put this in a place where there are no megawatts, it's a no categorically. And there's really a rational process to go about doing that. Yesterday, you were asking the question about the orientation, political orientation. There's no policies involved. It's a case-by-case approach to each project. By the way, there were tens of thousands of megawatts required for megawatt. Now, in the meantime, the national hydrogen policy was promulgated. From there on, it's a no to export. So if we're supposed to export hydrogen, we'll export in a raw form as electrons. That's where it's going to be worth. Now, there's electricity, there's not as much as we used to, because there are a whole host of projects. The minister has quoted for 18,000 megawatts of projects. This is huge, and it's a capacity which we will not ever be able to build. We will not be able to absorb all. Yes, there's megawatts to develop, megawatts to allocate to different subsystems. Batteries will be a priority. It's strategic. Critical minerals will allocate our megawatts selectively. Not everyone will be selected. If we discuss about something you've all heard, we're all civil servants, so closely related to neutral civil servants. The Premier of Quebec said at the end of the parliamentary session at the National Assembly that the three main reasons why he was in politics, he wanted to say that was clean energy, critical and strategic metals, and the batteries. You see, it is the heart of what we're going through here on this planet. Electricity, yes, to answer your question, electricity is abundant, but not infinite. And new capacities are going to be built in the coming years. Very good. I'm going to continue with First Nations. They were mentioned, they live on the territory, on the land. Eric mentioned that earlier. For a relatively new player in the sector who wants to do exploration claims, of people who made a discovery and want to make it move ahead, how can the government or someone help them facilitate these introductions and guide companies in these presentations to First Nations? There's, of course, an obvious cultural gap. Do you play a role in trying to create rapprochements. Yes, absolutely. As Patrick mentioned, he does this for communities on the Northern Territory, north of the 49th parallel. We do this also within our department, in our regional directorates. We are always ready to support companies and tell them, here we go. These are the communities concerned. We're ready to guide them and train them because it's it's a very important reality, particularly for businesses who come from outside of Quebec. Our Indigenous reality is pretty complex, as everywhere in Canada. It's unique also in Quebec, and we're well aware of that, and we're there to support businesses and tell them there are ways of doing things, and sometimes it's French, sometimes it's English, sometimes you go through the community, sometimes you go through the regional government. For example, I have statutory tables, which I have with the Cree, with the Inuit, with the Naskapis. Those are discussion forums to discuss about different issues relating to the mining industry. And there's all kinds of opportunities like that that allow us to relay information in both directions. It's important. And we have the chance of having native communities. We have our modern day treaties, the James Bay agreements, the Pays des Braves. We are people who are well organized. In Northern Territories, the rules and protocols are well defined by modern day treaties. And so the recipe is easier to follow. In the South, there are other ways to do things, and that's why we're there. Because one of the key factors for promoters is gaining time. Time is precious for them. Sometimes they have a timetable, a sequence, a calendar of activities to go through. The more we can act in reducing intervention times, and we have the Rights Coordination Office in Natalie's team, which is extremely important when a project comes to a certain level of maturity. So if our contribution is there by shedding good light and targeting the right person, the right team where the promoter can refer to, that's so much time that is saved for the promoter to help them meet with the critical deadlines that they may have. We often underestimate that, but we can bring together winning conditions that will be significant enough for the promoters individually, even if it's just being able to identify, for example, all the obligations or all the programs that are available in different government departments. And there are several families of programs. Some of them are pretty similar. And as Jean-François was saying earlier, just getting together and sharing. For example, I remember a file about the Bush airline transportation. Several exploration entrepreneurs had to use exploration people. We brought together all the stakeholders in the government. In one meeting, we had gone around all the services vendors available. So if we're called upon, we can say, here's what exists for Bush airline air transportation. There's a synergy that is different. We have to bring everybody together and sharing the information. Synergies are possible. And don't forget, we have a duty of coherence. We have to be coherent, and we all have to work in the same direction, and we should all have the same discourse. It's a synergy. We're all aligned. There's no discrepancy. Now, did someone think about a particular question in the audience? No? Yes, please go ahead. Go to the microphone, please, just behind you. Please use the microphone. You were talking a lot about our local resources here, but was uranium one of the special metals that would be strategic for Quebec, or something we can dispense with? Uranium, yes. Listen, I spent my life in uranium personally. Nice uranium mines in Saskatchewan. There is uranium potential in Quebec. There have been projects in the past, but there are none right now. It's not our desire to go ahead in that sector. Those are public policy choices that we made. Natalie, you can add if you want. Yes, absolutely. When we established our list of critical and strategic metals, we looked to add the criticalness aspect in terms of supply, in terms of rarity, scarcity of the resource. We also look strategically in what way do these minerals contribute to putting in place and implementing our industrial policies, our government policies in general. And that's when we said, for us, uranium, with the episode we had in James Bay, would not be on our list. Elsewhere in the world, it might be, as we know in Saskatchewan, they do produce uranium, good for them. We have other priorities. Other questions? No? Maybe in relation with topical news in closing. In the back, we were talking about the catastrophic episodes of forest fires, which we're going through right now, which have impacts on several players here in the room for exploration and mining. Where are we with these forest fires? But second of all, couldn't we think about the consequences of that? Do you see that this could have an impact on the development of our lands or the way we think about how we will develop the lands, considering this risk that seems to increase in frequency and intensity? I may go ahead, please. Yes, I was talking earlier about identifying the risks. Random events, whether random events is no longer a theory. It's costly for insurers, it's costly for promoters, it's costly for communities. And in project design, I think that people will have to incorporate that notion, how to protect their equipment, sizing of the camps that are to be installed, a mining camp, or can an exploration camp be a prisoner of anti-fire barriers to protect the fuel sites, to protect the helicopters, and so on? Those are all risk management, integrating risks in project planning. You have a cost involved with that, but there's a cost of not doing it too. That's what we always have to keep in mind. Negligence, it could be pretty onerous in certain respects, and that will become a must in project design and in identifying the risks and the costs associated with them. But at the same time, what I would like to underline is something we've experienced with the pandemic a couple of years ago. The industry was able to be resilient remarkably during the pandemic in 2020. We remember all the measures that have been put in place. We responded to that. Why? Because the main priority of the mining industry is the safety of its people. Always. That's the message we've been hearing constantly. There are contingency plan, emergency measures, plans, and nobody here in the room will say, I will get my people back on the land in James Bay today with the forest fires. No, there are risks. We'll rally to any proposals that we made, but there's a great resilience capacity. And as we did with our sanitary measures in 2020, in the coming years, clearly this is something that will be considered differently. Up to now in the mining industry, we had concerns about climate change, about how to arrange and make arrangements for restoring the mining sites, because we said this was done 10 or 15 years ago with a different and it's back. One road, forest fires, and evacuations. That's also what it means. Financially, status quo becomes more costly than action in those cases. But it's a great source of concern. We hear what you're saying. We receive this, we hear that, and we tell ourselves there are procedures and ways of doing things which we will develop together. But this is a totally exceptional situation. It's unheard of. With that magnitude in Quebec, unfortunately, what we hear in the weather media, this will not going to get better in the coming days soon. But messages have been sent to the industry, and people withdrew. No, they did not withdraw the exception, but they ceased their activities in the most critical areas. Thank you. Thanks to all four of you for having been present with us. That was very interesting. Thank you.
Thank you all. So for this afternoon session, I'm very pleased to present you your host, which is going to be Mary Zhang, my dear partner, who's a director in our investment banking team in the mining group in Toronto. So Mary, the floor is yours.
Thanks, Thomas, for the introduction. We will continue on with our session. Our next speaker is Mr. Robert Wares, Chairman and CEO of Osisko Metals, a Canadian exploration and development company focused on creating value in the critical metals space. The company is developing two of Canada's premier past-producing brownfield assets, the Gaspé copper mine in Murdochville, Quebec, and Pine Point Mining Camp, a past-producing zinc asset located in the Northwest Territories. Please welcome Bob.
Alors, bonjour, mesdames et messieurs. Je vais présenter en anglais
Ladies
aujourd'hui.
and gentlemen, I can make a presentation in English today, even though the presentation came from SP to better accommodate our numerous guests and investors from elsewhere.
With Pine Point in the Osisko Metals portfolio, we're focused on critical metal development with two brownfield development projects located in Canada. Before moving on to projects, just a few words on our view on the future and the importance of critical metals. This was published by Glencore about 2 years ago, but the numbers, in our opinion, still stand. We're going to decarbonize our economy and reach net zero by 2050. Glencore study indicated that we need to double our copper output globally, double our zinc output, and barring any significant changes in lithium-ion MSC battery technology, we might be faced with almost quadruple challenges of quadrupling both our cobalt and nickel output. These are extremely difficult objectives on a global scale. The impact on the global mining industry is absolutely massive. And make no mistake, any change in decarbonization of our economy and our global environment requires a number of critical metals, but nominally copper, zinc, nickel, cobalt, and believe it or not, chromium, if you include nuclear power. But the common element in all of these is copper by far. And the global copper market output is actually roughly 10 times that of nickel or zinc, for example. So the importance of copper is primordial, and you could even argue that copper is the critical metal relative to other metals in the economy, including the importance of grid copper and grid storage. You need 3.5 tons of copper per megawatt of storage. EVs average 8 tons per 100 cars. The demand on the global copper market will be truly astounding. What plaguing the supply side is a discovery drought. In the last 10 years, new copper discoveries have waned and are still waning. In other words, major world-class discoveries in the last 10 years, you can count on one hand. Capital markets are not helping. A lot of speculation on spot price of copper, including shorting by hedge funds. Result is that since the year 2000, the spot price of copper here indicated in the black line has been below what S&P Global refer to as the incentive price to develop new projects. So the orange line is the incentive price, and straightened from average from $1 as a benchmark in 2000. Today, it's roughly $4.50 US a pound. We are not there. And in fact, we haven't been there since 2012. So, and this curve is based on a 15% after-tax IRR for most global projects. There's absolutely no incentive on the spot price for new projects to go ahead. And this is irrespective of jurisdictional or permitting risk. The result is that new copper input into global production has been essentially flat since 2015, with absolutely no indication that this is going to improve unless there are major changes to capital markets and political policies for many countries. As a result, there's consensus starting about 2025, just 2 years ahead, that we're going to enter a permanent deficit environment on the demand side. Now, all this, of course, should result in a significant and permanent increase in the spot price of copper, but it's essentially going to be, in my opinion, too little, too late to meet our decarbonation needs. So let's have a look at the Gaspé Copper. It's one of the reasons we acquired this asset. It was held by Glencore. And Glencore is now more open to doing joint venture deals with Canadian developers, which is good news. It sits in the Gaspé Peninsula. It was a producer for a better part of 44 years. Still significant asset and resources left on site. Infrastructure is in place. It still sits beside the town of Murdochville, which is the original mining town, built in 52. The operation in the Rwanda days included this on-site smelter, 10,000 ton a day mill, nearby town. It was combined open pit and underground mining operation. In its heyday, it was the biggest underground mine in Canada. The room and pillar operation was absolutely spectacular, with pillars up to 35 meters in height. The town Murdochville is still there. Population is obviously significantly reduced since the closure of the mine in 1999. We're looking at about 650 people who live from seasonal tourism, but are still hanging in there. The site has been completely, pretty much completely remediated at a closure cost of about $150 million by Glencore. So the former smelter used to sit here and former mill was here. The garages, administrative buildings are still standing, but in pretty bad shape. And the environmental remediation on the site simply consists of a water treatment plant and dam inspections for the tailings ponds. So our project is focused entirely on essentially an expansion of the Copper Mountain pit. Here's the site of the pit itself. Water is pH neutral, no heavy metals. It's clear. The overflow already goes into the Gaspésian watershed, and the tailings dams have been completely remediated, largely hayfields right now. So this is a satellite view of the site today. Outlined in green is our projected pit boundaries for expanding the system. Town of Murdochville is here, ski hills and wind farms, both on the east and west side. The whole project is rooted in fact that we've been able to identify an inferred in-pit resource right now of 456 million tons of 0.31 copper. That's preliminary resource published last year. We're going to update it this year with the current drill program. So we have a situation where we have a restored site, existing infrastructure, paved roads, port access, rail access, and obviously a resource which we believe, certainly at $4 copper, that we can put into production. The deal with Glencore is very straightforward. We paid US $25 million in the form of a convertible debenture at 40-cent units for Osisko shares, including half a warrant. Milestone payment at US $20 million once we reach commercial production. The objective is to reach that in 7-year timeframe. Work commitment of $55 million US to bring the project to FID, or final investment decision, i.e. shovel ready for those who are familiar with that term. Glencore keeps a 1% royalty on the Mount Copper project and a offtake agreement on 100% of the both copper and potentially moly concentrate. So going forward, our resource was based on a 0.16 cutoff that essentially gave us, again, 456 million tons of 0.31 sulfide copper, equivalent to 3.1 billion pounds copper in the ground, and 1.4 million tons. So this makes Gaspé Copper a tier 2 asset, which is fine. But important to us is we believe this is a tier 2 asset that we will get permitted in a reasonable time frame. And rather have this in my portfolio than a world-class tier one asset in a jurisdiction that cannot be permitted within a decent time frame. So the initial drill program is aimed to converting the entire resource to measured indicated. We're well on our way to doing this. The program started last year. Drilling started this week. So we carry on with the program so that by year end, we believe we can change or upgrade the entire input resource to measured and indicated category, which will allow us to launch feasibility in Q1 2024. Drill intersections from the program were all very satisfactory within or beyond expectations. One of the more spectacular intersections was actually hole 105. We started on the edge of Mount Copper. This is the north-south cross-section, an intersection, the higher grade core of the deposit, which sits directly below the existing Mount Copper pit. So our projected pit is actually going to be 600 meters in depth, significantly bigger than the current pit. That hole 105 intersection, actually a kilometer of 0.46 copper, but more importantly, within a higher grade core, it hit 300 meters of 0.76. So this is the key to the success of this deposit, is to start the project with a starter pit. I would speculate at this point something like 40,000 ton a day operation. To get the system started, that would give us 5-6 years of higher grade processing before we expand the operation to 80,000 tons a day, going into a roughly 20-year mine life. So the actual timeline, 22-23 definition drill program, which is currently outgoing, which we hope to finish this year. Closing the acquisition with Glencore, which is imminent. We received clearance last week from the Ministry of Ressources Naturelles. They approved the bond reclamation, so we're in a position now to close the transaction. 23-27 will be environmental, socioeconomic impact studies, big part of the permitting process, feasibility, including feasibility. 28 public hearings, and hopefully obtaining permits and operating licenses. Lead us, hopefully by then, to a final investment decision, and followed by 29-30, a 2-year period for financing and mine build. So it's an ambitious timeline, but we believe we can do it. And today, to go from resource definition to production within 7 years, we can't beat that anywhere on the planet, really, except for potentially Brazil. Moving on to our second project, Pine Point, which we started in 2015. It's a zinc lead project located in the Northwest Territory, against brownfield site, past producer. Cameco operated till 1988. We've advanced this project right now to beyond PEA. Right now, the project is joint ventured with Appian Resource Group. Again, easy access, rail access to the main line, so no issues. Exporting or potential concentrate to both Eastern and Western markets. We've got a significant resource, measured and indicated, all shallow near surface, about 15.8 million tons, running roughly 6% lead zinc, and inferred resource of 47, same grade. We're completing a drill program again on this project this year to convert most of that to measured and indicated by year end. The agreement we signed with Appian Resource Fund involves Appian over the next 4-year period acquiring a 60% interest in the project, giving us a 40% free carried. We're injecting $75 million to advance the project FID, with roughly $25 million cash injection into Osisko Metals. So that is underway, and we're very confident we can get this project completed to FID in the next 4 years. Pine Point is really exceptional on a global scale, that it would potentially carry one of the cleanest, purest lead and zinc concentrates on the planet, certainly for new projects. And this is consistent with what was produced by Cameco back in the 60s and 70s. But we believe, again, in the critical metal space that we are headed for a zinc deficit, but more importantly, in the zinc concentrate business, clean concentrates are becoming harder and harder to come by. So this would open up a global market for this product when we reach production. Point, we have exploration agreements with First Nations groups in the Northwest Territory Métis Nation, and we have undertaken IBA framework discussions. So in a nutshell, the reason this project attracted APIN is because it's the only project really in Canada that meets 3 criteria of resource, infrastructure, and concentrate quality. So our 23 objectives: close acquisition, gas pay, complete our drilling programs on both sites to reach measured and indicated for the resource, launch feasibility study at Point, launch PEA and environmental baseline studies at Gas Pay Copper. So ambitious year, a lot of milestones, and all this is very important. Canada has to increase its critical metal output. We're not doing enough. More junior developers, in my opinion, have to shift away from gold into critical metals. I'd have to say at this point, the lithium sector is covered. Right now, we got more juniors in the lithium space in Canada that we can shake a stick at. But when it comes to copper, nickel, and zinc, unfortunately, there's not enough effort. Thank you very much.
All right, so next up, we have Mr. James Sykes, CEO of Baselode Energy, who will be doing a fireside chat with Matt Gordon. Without further ado, I'll let them take it away. Welcome.
No.
So am I talking to you or talking to them?
Yeah, I'll ask you questions. That tends to go. Right, but why don't we kick off? Give people a sort of 1-minute description of you, the company, and what you're up to.
Baselode Energy's uranium exploration company in northern Saskatchewan's Athabasca Basin area, which is home to high-grade uranium. Our exploration approach is different from a lot of our peers in that we're looking for near-surface, basement-hosted, high-grade uranium deposits that are amenable to open-pit mining strategies. And in our first drill program, we think that we've discovered one of those with our Akio deposit.
Good stuff, good stuff. I think what people don't realize, every time I speak to you, you're usually wearing a Star Wars t-shirt. So
we gotta find a way to get to the future. We need nuclear energy for that. So gotta live the dream.
Good stuff. One of my favorite uranium CEOs. Right, should we talk about the Athabasca plays, and then we'll talk about where because you're just outside Athabasca, right? Southwest and south of Athabasca Basin. That has got the reputation of being highest grade, best place in the world to be mining for uranium, but you're just sitting slightly outside. So what's your thesis?
The thesis is built on the history of mining in the Athabasca. And if you do look at that history, the Athabasca is a big bowl. And most of the original mines in the Athabasca were all open pits or underground mines outside of that bowl. There's only been 2 mines in that bowl with the sandstone. That's Cigar Lake and McArthur River, both because they're over 300 million pounds and they're both over 25% average U3O8 grade. So they're the unicorns of the industry. They're the most valuable rock mined of any commodity. You can take Red Lake's or Gold Corp, old Gold Corp's Red Lake. They're high grade where they had 2 ounces per ton average grade. It doesn't compare to what they're mining at Cigar Lake or McArthur. But they had water issues. They flooded. So it's in a basin. In a basin, yeah, exactly. Wow. Who would have thought? But so that's the issue. And people are exploring for that because they see the value of the rock. Mm-hmm. But they don't. I don't think that people really understand the whole business side of things, and that what was mined originally in the open pits built all of the mills. And they weren't these massive deposits. They weren't these 20% deposits. They were much smaller in size, much lower in grade, but they were economic. And that was the big magical thing. They were economic, and that's what makes sense. So we've taken that approach and we've applied it, knowing that in Northern Canada, you can't always see the bedrock. it's covered with glacial overburden. So there's the potential for a lot of mineralization hidden underneath that overburden and just never been visualized or conceptualized. So that's the approach that we take, is again looking for those open pit style deposits.
Okay, so we've got with 3 projects. You've got Hook, Catharsis, and Shadow, right?
And we recently staked a 4th project, Bear.
Bear as well. Okay, fantastic. And you recently raised some capital. So where is that being directed to, and what for?
We raised 3 million of flow through the end of last year, and we raised an additional 5 million of flow through just announced a few weeks ago, put us at 8 million flow through. We spent $1 million on our Catharsis drill program earlier this year, leaving us with 7. And we just launched a 10,000 meter drill program on our Akio discovery.
Okay.
We're budgeting about 6 million for that, but I think that's over budgeting. So we're well capitalized to complete that drill program and add meters as we deem necessary.
Okay, so how do you plan all this out? Because if I look at most of the uranium juniors stock price, it's just tracking uranium price, right? That's all it's doing. Whatever you guys do doesn't seem to make a dent in terms of the people's appreciation of what you're doing. So you raise this flow through money, you're going to be doing some drilling. You're not tempted sometimes just to sit back and go, I'll let the market do the heavy lifting.
We did that. We did that in July, August of last year. We still had plenty of finances in the bank. Yeah. We completed 22,000 meters.
Did it work?
Yes, I think it did work because we kept putting out really good results.
Okay.
And the market didn't respond.
Yeah.
So it was the right decision to scale it back, take some time out, preserve our capital, and wait for a better market. That market's not fully here yet, but it is getting there. And after speaking to people in the industry, in the nuclear industry, that this is such a hot market, it makes sense to get the ball rolling now. So we couldn't just sit back and wait another year to wait for the market to catch.
Today now shouldn't really affect you. It's going to be the advanced developers, right? So again, why the decision to raise money?
The uranium market right now is looking a little bit more prolonged. Like it's not one of these historic markets where they're around for about 5 to 10 years and then they just evaporate. This one looks quite prolonged because we've got a lot of build outs happening globally, right. Probably more so than it was even done in the 70s. Well, not quite, because 70s was the boom period, but since then there hasn't been really a big global build out that we're seeing now, which is really being dominated by China.
Yeah,
putting in 5 reactors every year. So that is the push. And if that market is prolonged, then I think that we do have that possibility to get there with Akio. But and that's part of the exploration strategy and the thesis, is that because we are looking for mineralization that is nearer the surface, we have shallower drilling, so we don't need as many meters. We can drill more holes per meters, so everything's kind of expedited on our end. Like we should be able to have a resource by the end of this year after only drilling 30,000 meters.
Yeah, so I forgot. Shallow. How shallow are we talking about?
Mineralization starts as shallow as 25 meters beneath the surface.
Okay. Yeah. So that's interesting.
It's pretty shallow. It's about the width of this stage, maybe a little bit more.
Not a lot of overburden. No. Okay. Yeah. Okay. So just talk to me about the markets, because I think not everyone here is a uranium bull. So we talk about some of the supply demand fundamentals. Most people look to spot price, but it's driven actually by term price contracting that these developers and producers can get in place. What are the other kind of big drivers people here should be aware of?
I would say following the contracts is probably the best bet to follow. Spot price is almost artificial, but it gives guidance to the general market on what uranium is doing. But I would highly recommend follow Cameco, you follow Kazatomprom, the larger publicly traded companies, as they will announce any contracts that they have. Cameco recently announced 250 million pounds contracting. That's huge. That's not a small number. That's quite a lot of uranium that they've got to pump out of the ground and bring into the market over X amount of years. So when you see that happen, and that hasn't happened in 15 years, that's big news. That means that the utilities are getting near the end of the fuel that they have available to them, and they need to get that. They need to start securing supply. And it's not like gold or anything like that. The uranium is completely different. From mining it to having the fuel fabricated, you've got a number of processes that you have to go through. And that's basically a 18 to 24 month turnaround time, if you're lucky, if there's no delays in the in some of the steps in the way.
Okay.
So they have to plan forward for it. And we're starting to see this happening now.
Right, and talk about the role of utilities and also some of the new financial entrants into the market, like Sprott Physical Uranium Trust, Yellow Cake, and I think there's one out of Zurich as well recently as well. Taking this inventory out of market, and the role that that's playing in terms of changing that, this or squeezing that gap between supply and demand.
Well, that's exactly what they've done. They have removed supply, readily available supply from the market, which does put that squeeze on the whole supply scenario. And I honestly don't know what they're going to do with the physical uranium. Obviously, I'm assuming they would sell it, but that's not my purview. So I don't think that's as ongoing as it is now. Like, I think a lot of that has calmed down, but there was a large amount of physical uranium bought off the market. And you could see the market react to that in 2021. If you go back and you can look at the spot price and even follow some of the uranium plays and follow their stocks. There's quite a few big peaks in 2021, and that was as soon as Sprott started buying. And then once they stopped, everything else came down though, and kind of bottomed out again. But
and I think they've got a slight disruption with the Russia-Ukraine situation again, is I guess changing the direction and flow of some of that uranium enriched or otherwise. In fact, you mentioned Kazatomprom. They seem to be doing deals with China as well. So everyone is keen to lay their hands on future supply of uranium, but the market stays steady. It's not reacting to any of this supply destruction that's happening. So when is it going to go?
When people are fed up with lithium. Hopefully it'll come soon. Right, okay. Hopefully it'll come sooner rather than later. It's a game of patience.
Right.
And we got a lot of new players in the space. You have a lot of younger people who are always trying to hop on the next big thing. So cannabis in Canada was a big thing, cryptocurrencies, lithium. There's always these bubbles. Uranium had that bubble in 2021. It will come back.
Right.
It's one of these things that has to come back. Uranium price, there's been a lot of educated people saying that we'll see $80 a pound minimum contract prices, probably $100 a pound, and that will incentivize mining. That's basically a double of the spot price that it is now. So that's a huge bet on uranium, that it has to go up. It's not a question of will it go up, it has to go up. We can't turn off the reactors. We can't turn off power. It just doesn't make sense. So
where's it coming from? Give people a sense of the number. Okay, the demand numbers at the moment in terms of uranium is what? What are we going for?
Oh, I don't know the demand numbers off the top of my head, but I know that it's larger now than it has ever been. Okay. China's building out 5 reactors a year, or at least planning on it. That's a huge build out. Okay. That's basically China's living in the 70s right now, building out the way the rest of the world did. So once they catch up, and then India on top of that, Europe is building out more reactors. Canada and the States are looking at building out small modular reactors, so SMRs. Once those get permitted, which are apparently months away, that we can start seeing the regulatory process complete on those and start rolling out SMRs, that can revolutionize the whole nuclear industry, as they're smaller and deployable in many different areas that you couldn't deploy other type of power utilities, energy utilities.
Well, let's look at some of the things which may help the Canadian Athabasca base. I'm going to bundle you in with the Athabasca guys and gals. It was obviously the critical minerals list, the conversations coming from your cousins down south, and the money that they're making available, not great amounts, but starting to talk a good game with reactor extensions and so forth. Money from DOD, DOE, etc. You guys will be allies. The expectation is that you'll supply into the US market. 25% of uranium consumption is by the US market, which is some £50 million a year. You are working under the burden of long lead times for permits, to be able to do anything, it seems. You've got First Nations issues, ESG issues, permitting issues. It's just red tape abound, it seems. Given the nature of what you're pulling out of the ground, fair enough. Do you need that to change? Do you need government to kind of lean in and listen and help you with that?
It's a very interesting question. Oh, it's a well thought out one.
They're here, by the way. Listen, be careful.
I would honestly think that I do think that the regulatory process is pretty sound for what it is in Saskatchewan, and I think it's a good process. It hasn't been super lengthy. Does it need to change? Honestly, don't know. Because again, I go back to the history of mining, and the last open pit mine, uranium mine that we had in Saskatchewan were the Sioux deposits, and that was 2005, 2006, 2007. So recent. And they, from discovery into production, was less than 10 years. And that's quite typical of northern Saskatchewan turnaround times for mining. For open pits anyway, is discovery to production anywhere from 6 to 12 years. That's the time frame that we're kind of working with. And I think that's a pretty reasonable time frame to work with. I don't think it's not like we're in a different jurisdiction, BC or Labrador or something, where the policies are not in place. There's never been any mining, never any milling in these places. So you have to reinvent the wheel out there. You have to put all these places into these other jurisdictions. That already exists in Saskatchewan. We're good for that. The infrastructure's already there. The roads, the power lines, the mills, everything's already up there. So it's just down to the permitting issue. And in some of my initial talks with some of the permitting authorities is that because of our deposit being what it is, being that open pit style of deposit, there are a lot of things that we can kind of avoid by not building mills and by not having these massive scale deposits.
Okay. Well, and talking of timeframes, we're running out of time. So thank you for that in terms of the market overview. Shallow, high grade, Athabasca Basin. Yeah, have a look, folks. Thank you.
Thank you.
Very interesting insight in the uranium market. Next up, we have John Pasalacqua, CEO of First Phosphate, a mineral development company fully dedicated to extracting and purifying phosphate for the production of cathode active material for the LFP battery industry. Without further ado, please welcome John.
Hello, thank you, everybody. Thank you for having me. So I'm here to speak to you about First Phosphate. First Phosphate is the only company in the world that is dedicated fully to extracting and purifying phosphate for the lithium iron phosphate battery industry. We hold 1,500 square kilometers of claims that are royalty-free in the Saguenay-Lac-Saint-Jean region of Quebec. That's just about 2 hours north of here. We plan to employ a prudent partnership-based model to vertically integrate from mine source all the way to the production of LFP cathode active material for the entire North American LFP battery industry. The phosphate is very special. It's an igneous anorthosite. It comprises only 1% of the world's phosphate, and it is the most pure for the purification of phosphate for the LFP battery. When we look at the world of phosphate, what's very interesting is 95% of the world's phosphate is in sedimentary deposit. This phosphate is good for making, fertilizer, and only 10% of this grade of phosphate can be purified up to purified phosphoric acid, which is the precursor for making batteries, LFP batteries. What we have here in Quebec, in this igneous anorthosite, is 1% of the world's purest rock. 90% of that can be purified into purified phosphoric acid for battery production. So what does this mean is the company can be, fully focused on the LFP battery and the downstream technology clients. We can have a mine size that's 8 to 10 times smaller than a sedimentary mine, and our CapEx can be focused on value add. Lastly, and very important, the gypsum that comes off the purification of the phosphate is fully recyclable and can be recycled into plaster, so we have full circular economy. Okay, so what is LFP battery? So, the lithium iron phosphate battery is a type of lithium ion battery. It's sort of like the NMC, nickel, manganese, and cobalt, just that you have iron and phosphate in the cathode. What we see with the LFP battery is that it has the advantage of being non-toxic, superior fire safety, longer life. It's got an easier charge and discharge without memory loss. And it's also got much lower cost, 50 to sometimes 66% lower cost than the other analog NMC batteries. So much so that all the electric vehicle manufacturers in North America, Europe, and Asia are now starting to move a part or all of their production to LFP battery. And it's coming quicker than what we would think. If you look at something like Tesla, Tesla's now got it in 50% of their batteries. What the media has not picked up on is the fact that as soon as Tesla moved into LFP battery, within months, they were cutting their prices by 10, 20, 25%, and they're really starting to hand it to the other EV manufacturers. So this battery is the battery of reducing costs and the battery of mass adoption. And people better watch out for it because it's coming and it's coming quick. So, you know, we're lucky we're sitting inside of Quebec, obviously great mining jurisdiction. We have the right kind of rock, the igneous phosphate, and we're able to produce a lot of purified phosphoric acid and LFP cathode active material for the industry in North America. This segment is going to be a massive segment. It's growing rapidly. LFP battery is now close to 50% of all batteries in the world. And 90% is made in China. We have to onshore this very quickly into North America. But what are the problems? Problem's not the lithium, right? Phosphate. North American phosphate is already depleting. We only have 10 to 30 years of phosphate left for food. Everything that we have is already destined to the food and the fertilizer industry. There's very little surplus that can go into making purified phosphoric acid. Secondly, what we have is sedimentary rock, so you cannot make a lot of purified phosphoric acid from it. And like I said, the existing reserves are at capacity already in the fertilizer space. So what we are planning and what we're doing, and every day we're getting closer, and it's something that people should really focus on, is in the Saguenay-Lac-Saint-Jean region of Quebec, we're proposing that become the LFP battery valley of North America, meaning that would be the one central spot where all the elements are necessary for making LFP battery, that would be concentrated in that area, and that we'd be able to provide all of the LFP cathode active material necessary for North America. We have an MOU in place with the Port of Saguenay. Port of Saguenay is now actively marketing itself as a second LFP, the second battery valley after Bécancour. There's 700 hectares of open land. Once you're able to put certain things at the port, like a purified phosphoric acid plant, it then opens the space for, you know, cell manufacturer, LFP cathode active material manufacturer. So it could really become the entire battery valley hinged upon the phosphate and the LFP battery. Also, there's been $105 million recently destined by the Quebec government into upgrading the port, the existing port of Saguenay. Secondly, we have an MOU in place with Prayon. Prayon is the world's largest producer of purified phosphoric acid. It's about a 1.4 billion euro turnover business. They are in the food phosphate business in Europe. In Belgium, they'd like offtake on our rock, probably up to 400,000 tons of phosphate concentrate. Also, they have the technology, one of the best in the world for purifying purified phosphoric acid. They'd be willing to do it first time outside of their corporate structure to be able to license that technology to us and to also become partners in the purified phosphoric acid plant at Saguenay. Lastly, they have worked in LFP manufacture in Belgium and also in China, so they'd be interested in entering that market with us as well. When we look at the estimated demand for LFP cathode active material in North America, we're just taking small EVs here, like just the normal passenger cars. You might need up to 700,000 tons of LFP cathode active material. That's a business turnover of about 18 billion. If you were to take buses and trucks, you could just double that. And then if you were to get into a large scale energy storage or small scale energy storage, you could double that again. But we're just being conservative here. We're taking a very conservative number just on EVs alone. I don't know if you knew, but only 5% of that production has already been sort of destined by some subsidies that came out from the US government to the DOE. So there's a full 95% of this category that has to be fulfilled. And there's nowhere in North America to get this phosphate other than what First Phosphate is doing. So we're very comfortable that the company is sitting, right at the epicenter of what will become the LFP Battery Valley of North America, and that we're sitting on, the best resources to do that. So this is how we see First Phosphate and what we believe will be the ecosystem developing in North America. And we believe that we are the catalyst of this ecosystem that's being developed. So what we do is we extract at the mine site at about 5 or 10% phosphate. We quickly concentrate that up to about 41%. The theoretical max of phosphate inside of its host mineral, which is apatite, is 42%. So we get up to about 97% pure apatite, which is 41% phosphate. The next closest thing is 30% Moroccan phosphate. So we're a full 40 to 45% higher than the purest form of phosphate that you'll find in sedimentary world. We announced our phosphate pilot plant just yesterday. We have a recovery of 91%. And we also have secondary recoveries of titanium, that is ilmenite, and also magnetite, which is iron. You can see that on our website. A full 10-minute video of the pilot plant is available. Quite proud to say that that was done here in Quebec at SGS's facilities in Quebec. Now, what we're doing is we're sending a 900 kilogram sample of phosphate concentrate over to Prayon in Belgium. They're going to be processing that to purified phosphoric acid. With those samples, they'll be going out to a number of parties that we're under NDA with, parties that are desperately looking for a source of North American phosphate. That's on the ESG scale, which doesn't exist. We're creating a category here. Once that's done, we have a partnership already with IPL. It's a company out of the UK that's got it's building a pilot plant to make LFP cathode active material. They will be using our material to make LFP cathode active material and potentially some small battery cells. There's a number of other manufacturers that are asking for samples of our product. Once you get to LFP cathode active material, and again, one of the advantages is we got Quebec Hydro, which, it's very hydro-dependent process. So it's great that we're completely green all the way to the making of LFP cathode active material. Then this would be able to be shipped across North America to those that, make battery cells or assemble EVs. So it's really important to think that, across North America, there's only one spot, and that's perhaps right here in Quebec, where we could supply all of the LFP battery cathode active material. It could be something like $100 billion business. And if we took 5% of that, 10% of it, well, we could probably take up to 70, 80% of it. So I just want to flip here. This is the Port of Saguenay. Right up here is Alma. That's where the Rio Tinto facilities are. This is sort of already the aluminum valley of North America. A lot of the aluminum in all the cars in North America is being produced in here, shipped out of here, and goes down to the heart of auto manufacturing country in North America. So we've got great infrastructure in here. We've also got the whole forestry industry in here. We've got a populace that likes to live, work, and play around industry. We're very fortunate for that. We got very good social acceptability. Our first project here, La Coloniale, is about 50 million tons between inferred and indicated. We've got a 43-101 on it. We're moving into PEA, which was telegraphed for the end of this year. It's going to come in earlier. And after that, we'd like to move into feasibility. We're very well supported by CEMAX and Conférence Régionale des Élus in the area out here. They really want to see this development happen. We've locked up all the claims in between the Port of Saguenay and about 200 kilometers north of there. Because we saw a real vision here. We really saw this whole phosphate region developing, and we wanted to own it all. We didn't want any interference. So we started to do surface samples on all of these 15 other areas that we have here. We're finding phosphate everywhere. Right here, fortunately, at 75 kilometers from the deep sea port, 5 kilometers from paved road, in between two ex-forestry villages that are desperately in need of revitalization and want to have the work, we found what might be 3 times the amount of phosphate at La Coloniale, and with higher grade. It might be the highest phosphate that's ever been found in the Saguenay-Lac-Saint-Jean region of Quebec. We're right near hydro. We're very excited for this project. And we continue to investigate on our blue sky properties. We believe this area of Quebec has potentially decades, if not 100 years of phosphate to supply all of electrification for all of North America. I don't know if that really impacts anybody in here, if anybody can really conceive what that is, because we always talk about electrification, we always talk about the shortage of minerals. I can tell you the phosphate is here. All the phosphate that's necessary for LFP, slowly, surely, over time, over the next years, decades, it can all be come out of Quebec. And this valley can eventually be known as, the LFP battery valley of Quebec, and maybe forestry and aluminum might be second or third. So, these are some of our milestones. We're a company that's been working hard, despite the fact that we've only been in life for a year. Got a 43101 at La Coloniale. We're coming out with a DEA very soon. We developed the phosphate concentrate pilot plant in under a year. We continue drilling at Bégin-La-Marche. We've done 4,000 meters. We're doing another 2,000 meters now just to get into our 43101 there. We've done massive surface sampling on all of our blue sky properties. We continue to do that. We know there's many other areas of phosphate within our claims. We're now moving to purified phosphoric acid with the world's largest producer of purified phosphoric acid. We had that deal done within 6 months of being in life. And now we're moving to our PEA at La Coloniale as well, as I mentioned earlier. Interestingly enough, we're also upgrading our ilmenite and our magnetite to make iron sulfate and iron powder, which also goes in the manufacture of LFP cathode active material. So again, key advantages: assembled a world-class team, management team, very broad team, major North American players, major international players, manageable mine size near infrastructure. We're trying to keep the CapEx costs low, and we're trying to keep the value added high. So it's a rare opportunity to go from mine all the way to LFP cathode active material, and we have lots of blue sky properties around us. We're a very tight share structure. 35% is SEDI filed by our management and our board. Other 35% is friends and family. There's maybe a small 30% float that's out there. $25 million market cap. LFP Battery Valley of North America, Saguenay-Lac-Saint-Jean, Quebec, $25 million market cap. These markets are crazy and they're completely dislocated. So that's me. I've got a background in technology. I've got a background in capital markets. Get up every day, work very hard, try to encourage my team, very hands-on. And I plan to see this project through. Peter Kent is our president. He's also the ex-minister of the environment under Harper. He keeps us on the short and narrow, especially as involves the environment. We got Gary Siskos in the audience. Maybe Gary, just lift your hand. Our new CEO and CFO, who's got all the great modeling experience that we need for the next steps here. Okay, that's it. I think I made it just on time. Thank you very much.
A unique and exciting opportunity. Okay. Next up, please help me welcome Derek Wierok, President and CEO of Palladium One. He will be doing a fireside chat with Matt Gordon once again. So welcome back.
Here we go. How are you?
I'm very well, thanks.
I spoke to you this morning.
We did.
I should be good at this. This should be a good one.
You should know all my answers.
Okay, right, here we go. So we're going to talk about green metals more broadly. You've got a kind of a suite of green metals. When you kind of run through the projects, but also briefly overview of the projects, people know what we're going to be talking about. I think we'll sort of dive into the US element.
Okay. Well, yeah, our projects are mainly nickel copper PG sulfides. We've got large scale projects in Finland, Ontario, as well as the Yukon. We're very much an exploration and development stage company still, and building resources.
You are making discoveries too.
Absolutely. Yeah, we've had a great track record on that.
Yep. Okay, well, let's start off with, if we can, Tycho, because one, because of its location, and two, because of the commodities we're talking about, quite important to that kind of North American narrative around critical minerals, but it's early stage. So what do you do? How do you play that?
Well, it's early stage, definitely, and it's really been more of the focus of our attention over the course of the last year, subsequent to our second discovery there. And it's extremely high grade nickel copper sulfide. There's really no PGs in it. It's a large property package, about 30,000 hectares in size. But what we're seeing is extremely high metal tenor in the sulfides. And the two key zones where we've had discoveries, Smoke Lake or West Pickle, we're getting 10% nickel plus, 4 or 5% copper. There's pretty spectacular grades. Now, we don't have enough tonnage at this point in time, and we need to expand those resources. And that's really what we're working on, in addition to looking strategically throughout the property to try and de-risk it.
Right. So how do you get that scale? Because as a small junior, small market cap, not really being looked at too much by the majors yet, despite all these conversations going on. You've got money. You've raised money sensibly and at the right times. So you've got optionality as to how you approach it. So how does that scale come and over what time frame?
Well, yeah, on a pro forma basis, we started the year with about $18.3 million of cash, $5 million of which is flow through money dedicated for the Tycho project in Ontario. Okay. And it's very much the focus. Our objective is really to prove up the geological model that we developed last year on the back of about 10,000 meters of drilling and sampling that we did. There's a large intrusion on the north side of the property. It was emplaced somehow. We believe there are east-west trending dikes or conoliths, as they say in the nickel space, that may have fed this thing. And we've been proving out that model since Q3 of last year. So far, it's working very well. And our activity this year is really going to be to continue to prove that model, that these interpreted conoliths are actually feeder systems, that they host the right type of rocks. And hopefully we see some mineralization in them. And we're starting that process by doing soil sampling over very strategic grids.
Right. Are there any sort of parallels that we can maybe reference here? Because you've kind of got this kind of swarming, you've got to prove out this model, right? And swarming sounds complicated because it sounds like things won't be where you expect them to be.
Quite possibly, but it's an atypical terrain. So if you start off at the basics, you've got this magma intrusion that's coming up from the center of the earth, if you will, and it finds various pathways to get to the surface, and there's deposition. Over the last couple of billion years, a lot of erosion occurred, but there's various pathways exist, and you're chasing that. So if you're looking at analogs elsewhere in the world, you could look at Voisey's Bay, the eastern deeps portion. That was just one of these pathways or conoliths that had hosted the mineralization. Norilsk is another one. Talon Metals is another one. What makes our particular project a little bit more complex from a geological perspective is after that original emplacement, there was a subsequent intrusion of tonalite, which changed the geometry. So instead of having that pipe and just chasing that pipe with geophysics and a drill bit, you got to use a little bit more geophysics to try and find where that mineralization or those rock units may have been shifted to.
Right. So don't want to get too technical. Don't want to lose half the audience here. But I do want to talk about how small companies stay relevant, keep the lights on. You've got a lot of cash. That really helps because a lot of cash constrained companies struggling at the moment in terms of not just in terms of paying the G&A, but also working out what to do next. What's the growth component of this story anymore? The growth component of this story for you is what? Is it going to be North America? Because you've got the Finland assets, you've got the Yukon assets going on out there. So how do you play it?
Well, right now we're prioritizing North America and the Tycho project. Right. That's where we've got, we perceive the least amount of risk to track that property. We've got permits on it. But we see ourselves fundamentally as a nickel copper PG sulfide story with multiple assets that have the opportunity to host large depositions.
Right, and I kind of want to give people insight in terms of the way you think about stuff. So you're not casual with your thinking. The Finland projects, they're big, they're meaningful, but you don't think they're relevant in the current market? Is that
we have two projects in Finland, one of which, the KS project, we really haven't touched. It's an extremely large anomaly that has only got one drill hole in it that the Finnish Geological Survey did about 2 years ago, but it's a higher risk, it's a deeper target, but it's one of these conolith or feeder dike systems. Where our focus was previously was on the LK project. So it's bulk tonnage disseminated at surface. And we came out with a fairly large a resource last year with extremely advanced metallurgical work. And in all categories, roughly 4.1 million ounces palladium equivalent. Most of the economics focused on palladium, secondarily copper, and then nickel, because these are polymetallic settings. So you've got a mix of metals. But quite frankly, that came out in April, just as the market was starting to roll, and there hasn't been a lot of interest for that style of mineralization. So what we've done is we've pivoted to our efforts to Ontario, specifically on Tycho, but to hedge our bets a little bit more, we also acquired the Canalask project in the Yukon.
Well, why don't we talk about that now? Because I want to come back to Tycho. So, okay, the Canalask project, what did you pick up? How much did it cost? Why did you do it?
We picked it up because it's another one of these systems where you've got a large dike or conolith. The geometry is preserved from the time it was in place. It's very close to the Alaskan border on the mafic ultramafic trend.
Right.
It has a historical resource, about 400,000 tons, 1.3% nickel. They never reported the copper. It actually was a property being worked by Falconbridge. And when they were acquired about 15 years ago by Xstrata, they dropped their exploration package. And this was one of those assets, and it went into a junior and sat there dormant for 15 years. And we've acquired a project that has this unexplained deposition. It's got untested geophysical targets on it, and it's a simpler project than we have on Tycho. So for $25,000 of cash, it was a pretty simple deal to pick it up. From $25,000, there's some equity involved as well, and deferred consideration. But it's a very interesting option for us, and it's low lying. There's no mountains where we're targeting on the property. We're within 4 kilometers of the Alaskan highway. So from infrastructure perspective and the ability to execute a cost-effective program, it ticks all the boxes.
Okay, so I guess you're attracted because it kind of meets a sort of an asset profile or style that your team understands. There is that. Just this is really interesting because you're building up kind of portfolio, small company, building up a portfolio, which hopefully has some future value. Is this because you think if you've got a bit of money, you can do enough to make it interesting to someone else to JV with, or you can do enough to spin it out? Because yes, alternative financing is the name of the game at the moment, right? When markets are like this, we don't know how long they're going to last. We've, all sorts of conversations about, banking's role in mining and, what that could look like in the future. Companies have got to start taking control of their own narrative, but also control of their own destiny in a way. So alternative financing, call it what you want, but looking at different ways of financing. Portfolio construction for you, that's going to work?
Well, I certainly hope so. That's the plan. We are very much believing in the fundamentals of sulfide nickel. There's a huge demand coming with the transition of transportation to the battery electric vehicle.
Yeah.
So positioning ourselves with highly prospective assets of scale at low cost seems like a wise thing to do, because then you're in the game. If you don't have the asset as that cycle is coming on more and more with more and more strength, you're going to be left behind. So tactically, we don't want to dilute ourselves by, trying to explore every asset we have or every project we have, because that doesn't make a whole heck of a lot of sense. We've got several companies, if you will, with regards to our projects, but we're focused very much on a risk-based approach and start with one, advance it, do a little bit of work to keep the other ones going, and maybe we get that JV or maybe we get that spin-out opportunity as the nickel price responds.
Okay, so you're going to show something. You show that you can make something work. Tycho's the golden child there. You're not going to pick many other projects up with 25K, one suspects.
It's sulfide nickel. No.
Are you looking around? Are you seeing cash-strapped companies wanting to have conversations with you? And would it have to be wholly owned?
Well, in this market, there's not a lot of cashed up juniors, right? It's very tough. So we're a little bit different from that perspective. So we are well positioned to be able to go look at those that don't have the same balance sheet that we have. We just recently announced a strategic partnership with Glencore. They've come in and taken 9.99% interest in the company.
But you'll maintain that as well, haven't they?
Yeah, they topped it up. They came in, we subsequently closed a small acquisition, and they maintained their anti-dilution provision. So, yeah.
It's sounding a bit more like a financial play. Do you know what I mean? You're coming in as like almost private equity, you're a public company, but you know what I mean? In terms of the attitude to kind of building up a portfolio of products, which they can then flip out, monetize at some later days as some kind of protection mechanism.
Right, but also, this is a high risk endeavor, exploration. Not every project is going to win. The vast majority are not. So just as we had with, a very large resource being published last year in Finland on the back of extremely good network as well, the market yawned, right? Then the whole market went down. So maybe you got to pivot a little bit and say, okay, well, we've got this other thing that looks really good. If the market's not receptive here, perhaps this will be more receptive. And certainly, with the amount of discoveries we've had over the last 4 years, I think our team, and I'm not a geologist, I'm a financial guy by background, but the exploration team is getting a little bit of recognition for being prudent with the allocation of capital, taking a very scientific approach to the exploration activity, and not being wholly driven by the market whims of the day.
It's interesting to me. Yeah, I like that structure. Okay, back to Tycho and the team. I know you said they're kind of getting on with it. Just talk to me precisely what they're going to be able to achieve with the capital that you've given them. Also, what have you set them the target of achieving with the capital that you've given them?
Yeah, so we have 3 zones identified on the project that this year's exploration program is going to be targeting. They're fairly large areas. We're starting off with a very detailed mapping, soil sampling program. I think we're already up to probably several thousand soil samples where we're looking for anomalous values of nickel, copper, and cobalt. Once we have that data in and fully processed, we're going to integrate it with our geophysics, whether it's the electromagnetics or the magnetics in 3D modeling, and then start drilling. So our plan is to drill 8,000 to 10,000 meters this year, in addition to what we've done previously. But what we want to do is de-risk these conoliths and make sure they are actually the right types of rocks.
Okay, well, thanks for the update. Appreciate it.
Thank you very much.
I like the strategy. Interesting.
Thank you.
Okay, cheers.
Lots of exciting catalysts to look forward to. Next, we have Power Nickel. So please help me welcome Terry Lynch, President and CEO of the company, a Canadian junior exploration and development company focused on nickel, copper, gold, and other battery metal prospects in Canada and Chile. The company's flagship asset is the NISC project in the James Bay region of Quebec, a high-grade nickel sulfide asset. Welcome, Terry.
Good afternoon, everyone. Pleasure to be here. Quebec City's such a great city. I love it. So I'm going to talk to you about Power Nickel's focus on our NISC exploration project in Nemaska, Quebec, and our quest to make it the world's first carbon neutral nickel mine. We're not going to tell you anything we don't believe is true, but it's always good to do your due diligence, and we recommend you do that. We're here to, learn some investment ideas and things that could hopefully make us and our families wealthier. I find for myself personally, when I invest and I get the macro right and the micro, that's when I have the biggest wins. And I think that opportunity exists today in Power Nickel. On the top left, you'll see the commodity to equity ratio, and you can see on the bottom right, that's where we're at in the commodity chart. But it started to turn, and I think it's not just on the graphs. I mean, we're seeing it in real life and in terms of the investment. I think there's something like $50 billion being invested right now in the battery metals construction of complexes across the eastern United States and Canada. So it's not just theoretical anymore. So they're going to need commodities: nickel, copper, cobalt, lithium, of course, rare earth metals. It's all coming. So what's driving it, of course, is the government move to decarbonize our economy, the IRA in the US, different programs in Europe and in Canada. I think we have to give the government a lot of credit, both federally and provincially here in Quebec, for the really amazing moves they've made to enhance exploration. And in the last budget, I think we sort of got lost, with the Silicon Valley Bank crisis, but The budget basically provided federally for a 30% tax credit to build critical mineral mines, and in Quebec up to 25%. So, I mean, it's really unbelievable in terms of support. Markets have not responded, but you know, these things will end. Slumps will become rallies, and that's when you want to be positioned. So when you move into the micro and you look at our project, you'll see we compare ourselves to other nickel sulfide mines around the world, and we're significantly undervalued. Like, we're trading at, I would say, between a 4th and a 20th of our peer group, and we're not slagging any of the peer groups. They're all fine companies and probably good buys. The overall nickel complex has not been where the momentum has been, but it's going to be where the momentum will be in the coming future. And you know, for us, we've got a number of critical things happening news-wise. You know, lots of drilling going on. Updated 43-101 coming in the end of September, where we expect to show that this will be a commercial mine, and we think it's going to be big. We're thinking Lynn Lake was 22 million tons, Voisey's Bay is over 50. We expect to be in that category. We're obviously in Quebec. It's without question the best place in the world to be exploring for critical minerals today. 3 big reasons. Obviously, infrastructure. We're located off of Route North, and just across the road is a major Hydro-Quebec substation. We're outside of Damascus, 8 kilometers outside of the town, where there's a nice regional airport. So that's fantastic. Quebec government's done an amazing job of working with the Aboriginal communities, in this case, our partners, the Cree, and they're, you know, very pro mining. So you can tell that by the number of projects. There's about 4 mines within 100 kilometers of our project. So that's fantastic. And then, of course, the financial incentives, which I alluded to already earlier. We position ourselves as, you know, aiming to be world's first carbon neutral nickel mine. We are the first ones really to offset our drill program. We used a program called Drill Green with Carbon X. So we've fully offset our drilling program for 40,000 meters in 2023. And you know, going forward, obviously we've got the benefit of having, you know, beautiful hydro Quebec, clean green energy to power our mine. We have an ultramafic deposit, which naturally happens to sequester CO2 and can be enhanced. And we're doing some things on the design side that will minimize the even the go forward plans of building the nickel plant. And we think that at the end, this will be very beneficial. I've been to Asia, spoken to some of the bigger, you know, battery companies, and they're all very keen to get clean nickel in their program, because there's a lot of dirty nickel out there, and they're looking to minimize that in their overall portfolio. The environmental platitude's not, you know, everyone wants to be good for the environment, but if you can't make the economics work, nothing's going to matter. It always starts with a deposit of having grade and tonnage. We started with a great one, 3.1 million tons of a historical resource, about 1.5, 1.6% nickel EQ. Followed it up with 8 holes that basically confirmed that resource. Some very good intersections. We'll see more. And then we kept on delivering the goods. We've been delivering, you know, since last September. This was the first set of assays. We put out 40 meters of 1.6% right in the middle there. That's a trophy hole, top 5 hole on nickel anywhere in the world last year. Followed it up with 10 meters of 3%, 16 meters of 1.6, you know, 15 meters of 1.5. This thing is a beast. It really is. And this is just one pod. So we expect this pod to produce something in the neighborhood of 8 million tons. That'll be enough to make us commercial. We expect to get that out by the end of September. This is a side profile of how that looks. This is a top-down view. So it's a very nice river of nickel, you know, and we expect to find many of them. Interesting enough, our land package is about 45 square kilometers. We've done a very nice airborne EM over that package just recently. Just got the preliminary results back. It looks very exciting. Airborne EM is actually quite a great tool. But we've got some other interesting things that we've learned. We stepped out about 5 kilometers from our main package, which is, you can see the concentrated drilling on the lower left. Up to the top right, 5 kilometers away, we saw an ultramafic sequence, and we basically drilled it, and we found, you know, almost 8 meters of 1 ounce PGMs. I mean, it's a bonanza hole. You know, so that was exciting for us. A couple of reasons. One, obviously, grade is fantastic, but it also is, that's what you get in these big nickel PGM complexes like Norilsk, like Voisey's Bay. You get these pooling of Raglan. You get the pooling of the you know, of the high grade palladium and platinum above the structure. And so we think now there's this whole thing's connected, and you know, there's been a massive nickel movement here, and this is going to be, in our mind, a very big complex to develop. How are we going to find the other pods? Because this is sort of, you know, this is how the nickel is collected. In addition to using the standard stuff like the airborne EM, the downhole EM, IP, gravity, the usual toolbox, we're doing something new. It's called ambient noise tomography. And it's basically these little silver geodes are put in the ground. They're actually being deployed this week up in NISC. And they send sound pulses down in the ground about 2,000 meters. Comes back as a sound map. So, for example, where we had that hole of 40 meters of 1.6% nickel, that's a very particular spot in the earth. We know exactly where that is. That'll correlate with a sound map. So that sound map becomes a signature of a massive sulfide, and that's what we're looking for. So we'll basically take these signatures that are correlated to our massive sulfides and look through our land package, and we think this will really expedite our discovery process. So this is something Talon Metals is using in North America. That's where we learned about it, and it's been used very successfully in West Australia by and it was pioneered by Fleet Space Technologies, and Elon Musk actually put them into the satellite business. And that's where they sort of collect a lot of this data from the ground. So it's a pretty impressive technology, and we think it'll really expedite discovery at NISC. This is, I consider it the money slide. This is where you either become an investor in Power Nickel or you don't. And this is, you know, if you believe our drill assays, which are obviously QC'd and, you know, unimpeachable, then you're going to know that we're going to have a pretty serious upgrade in our 43-101. And we're going to find a lot more of this stuff. And these are our high-grade nickel sulfide comparables around the world. The math is pretty clear. If you have a high-grade nickel sulfide mine, you're worth somewhere between 100 to 600 million, and today we're worth 25. So I don't know of a better risk-return value proposition in the nickel world anywhere. So, I mean, I think this is a pretty compelling slide, and I encourage you to look at it in detail. The action plan for NISC is pretty simple. We're going to keep on drilling, keep on proving up more tonnage. We're going to use all of our tools to, you know, expedite that process as quickly as we can. We're fully funded to start this next 15,000 meter drill program. We'll finish off our metallurgical study by the end of August, early September, and that will allow us to report our inaugural 43-101. And then we talk about delivering a PEA or better by Q2 of 2024. Or better is, we're in discussions right now with a strategic investor, a big, you know, nickel processing company that basically wants to do a full feasibility study at NISC. So it's an aggressive move, but they're big believers in the project. So I suspect something strategic could happen at NISC over the summer. You generally buy Power Nickel because you believe in the nickel story. The great thing is, as investors, you're going to get some benefits. We're going to spin out our copper gold. We've got some pretty cool copper gold projects in BC and Chile. Basically, we're right in the heart of the Golden Triangle. This project is basically Mount Rainy. It overlooks the town of Stewart. It's never been drilled. 3.5 ounce gold at surface. I won't get into a lot of the detail here. The valuation package probably will spin this out. We'll get between 10 to 15 million for it. We'll raise $1.5 million. So it'll be off the Power Nickel budget. And that about 25% of that will go to our shareholders, and then subsequently over the next 3 years they'll get the balance. So that's a way to provide our shareholders a nice kicker. In addition, we'll also acquire in that new pubco our Chilean package. It's just more efficient to do that. Chile's quite interesting. Obviously, it's gone through its own political turmoil, but it seems to have righted the ship now. You'll notice this is a desert picture where we've got some vast land tracts in the desert, had some interesting hits. Desert exploration is tough, but the ambient noise tomography tool we're using at NISC is actually very effective in the desert, and it's going to change desert exploration. So just as soon as we're done with using it at NISC, we're shipping it to Chile. So that's got some upside to it. Final point on the asset package. Again, we have this, you know, amazing royalty that nobody really knows we have. We sold a project to Teck for $3 million and a 3% NSR. It's, you know, it had 100 million tons of ore grade copper moly. Never found the supergene, so it's likely to get better. You know, that we're in discussions right now on selling that, and we'd expect to hopefully monetize that in in Q3, and it'll probably, give us, $5 million or so. So that would be, it's worth more, but it's, from our perspective, less dilution at NISC is what's critical at this point. The team is pretty lean, just myself and Jimena on the operating side. We're going to start to staff up a little bit here as NISC is now requiring a full focus, and we're about to make some hires in that respect. The board's been very committed. They're one of the bigger players. They got about 4% of the company. On our shareholder side, myself and my family have about 20%. Critical Elements about 10%, the Stern family 10%, and BT Global and Palace about 3 or 4% each. That group has generally been the biggest investor the last 2 rounds. So basically, I've led each of the last 2 rounds. So and I've encouraged people to buy the stock, and some have listened. Obviously, some have not, and we just firmly believe this is going to be a mine, and this thing is going to go much higher. So just to wrap up, we've made a major nickel sulfide discovery in probably the best jurisdiction in the world, in Quebec. We're trading at a deep discount to our peer group. The evidence is out there in terms of the assays. The land package is impressive. It looks like there's massive room for exploration upside, and that we're in a full complex of battery metal products, both nickel, copper, cobalt, and of course the PGMs. The spinoff will be a nice kicker for us all, and generally speaking, we're looking forward to the balance of the year, which is going to be very much news event driven, updated 43-101, the outlook of probably a strategic deal. So it's a great time to be looking at Power Nickel if you've got some investment capital and you're prepared to wait a little while and make 10 and then some times your money. So anyway, that's the Power Nickel story, and I have a booth here. If anybody's got any questions, be happy to take those then. Have a great day. Cheers for now.
All right. Next up, we have an exciting panel discussion on the topic of energy and renewables, carbon footprint reality. The panel will be moderated by Christina Lopez, my colleague and mentor. She is Managing Director of Investment Banking at National Bank, focused on the energy transition and clean tech industry. Joining Christina, we have a panel of experts, including Mike White, President and CEO of IBK Capital, Ed Ho, Energy Transition Expert, Lisa Davis, CEO of Patriot Securities, Mark Selby, CEO of Canada Nickel, Bob Wares, CEO of Osisko Metals, and last but not least, Phil Baker, President and CEO of Hecla Mining. Take it away.
Thanks, Mary. She saved us about 20 seconds from my intros, so it is helpful that she was able to put that together for us. So the topic today is a bit broader in scope. And so the transition to net zero world is highly dependent on a need for greater electricity generation, transmission, and usage. As has been addressed throughout the day today, the reality of moving away from a world of fossil fuels means we're moving towards a world that is increasingly dependent on critical minerals. How do we ensure that the environmental and good social governance remains front and center as we increasingly rely on the mining and production of critical minerals? So to discuss this topic today, we have 6 industry heavyweights, and so you guys have already been thankfully introduced. We do have a large panel and a limited amount of time, as that big red clock tells us. And so it will feel a little bit like speed dating, and like any good speed date, we need an icebreaker question. So I'm going to throw out the icebreaker for each of you to use up to 3 words to describe the environmental and economic reality of mining and the world's net zero emission goals. So we'll start left to right. I promise I'll break it up a little after that.
All right. So I guess I'm on the hot seat.
You're on the hot seat.
Can everyone hear me? Great. Perfect. Yeah, I think for us, it's a motto that we use at IBK Capital all the time, and it's perseverance pays. And what I mean by that is where there's a will, there's a way. So when it comes to our effort to transition to a net zero carbon footprint, when it comes to our efforts to do more with ESG and do more as a mining community to better ourselves, the stakeholders, governance, environment, all that, there has to be a will, and where there's a will, there's a way.
Now, I can't tell if that was the 3 words or a lot more. So it was
No,
perseverance.
perseverance pays. That's it. Perseverance pays. Perseverance pays because we all benefit. We all benefit at the end of the day.
All right. Ed, over to you.
I'm going to keep it to fewer words, I think, but I think it's faster. I think faster permitting, faster environmental assessments, faster regulatory changes that need to happen to make things go faster, I think is important. And not that I'm agreeing with the Osisko people or Ileana from this morning, but copper, of all the things that I see in the world. I'm an outsider from mining, so I'm not tied to anything. The most important thing that we need to look for is copper.
All right. Faster or copper? Lisa, over to you.
So, I thought about those 3 words and I came up with 3, but I think you sort of stole my thunder because I was thinking not fast enough. And I mean, from my perspective, the government's done some great things lately to help foster, faster exploration and development and processing, what have you, of critical minerals. But at the same time, there's just so many areas in which they could kind of get out of the way a little bit and make things move along more quickly.
All right, Mark.
Yeah, so I think great Canadian opportunity. Fundamentally, we take for granted how much zero carbon electricity we have in this country. And we're one of the few places in the world where you have zero carbon electricity and minerals right next door to each other. So, this is, again, a tremendous opportunity for this industry. So hopefully we take it.
Robert, over to you. Your speed date reply.
Yeah, so if you really want to focus on the challenge of net zero, I was going to say challenging, but I'll switch that to challenging and also discovery drought. Those are the major issues.
Yeah. And then Phil?
It's the foundation of this change to net zero, the metals that we produce. Copper, certainly, you've got nickel, cobalt, and silver. So people don't think about that. So they're foundational and not enough. We don't have enough deposits. We don't have enough coming into production. The permitting is too slow. All of those things, we don't have high enough prices, frankly. The prices of these products are going to have to go higher in order for the capital to be deployed.
Like anyone who's a great student, they always stretch the boundary of a question on a speed date. But Phil, I'll sort of have you kind of expand on this now. So Hecla is obviously a dominant producer of silver in North America. In your sustainability report, the company speaks to having reduced emissions by 33% from your 2019 baseline and having achieved net zero scope 1 and 2 emissions. Speak to us about the environmental reality of mining silver and the importance of reducing emissions while producing one of the forgotten workhorses in the solar industry. And with that, we also speak to not enough. So how do you build that foundation? How do you get enough, all while trying to keep that environmental lens in place?
So the reality is silver is a fundamental element necessary for this energy transition. And why is that? Because its use in photovoltaic. Solar panels all have silver. For a gigawatt of solar power installed, you need 500,000 ounces of silver. And the growth rate on the demand for silver has been about 11% over the last 5 years. So it is now 140 million ounces of silver that gets consumed. So these deposits, more deposits need to be found. They need to be developed. And that gets ever more expensive to do that. And they need to be done in a way that uses less carbon. And we've been fortunate at Hecla that we do have that hydropower. We have it in the United States as well. And so all 4 of our mines are powered by hydro. And so and they're all underground mines, and they're all really high grade, low tonnage mines. So as a result, very little carbon emissions. We're less than 100,000 tons of carbon emissions. So that's why we're net zero for scopes 1 and 2. We take what little bit of carbon we have, and we do purchase offsets for that. And to me, that's the path that we have to go on as much as we can, using green energy to power our operations, and then trying to have as small a footprint as you can have.
Mark, I think that this dovetails nicely into what you guys are doing at Canada Nickel, because you've committed to a net zero metal. Speak to us about your carbon reality of nickel, cobalt, and iron, and the path that Canada Nickel sees towards a more environmentally friendly production of these important metals.
Sure. So the big opportunity in the nickel space is that more than half of global supply now comes from Indonesia, and unfortunately, to produce nickel in Indonesia, you're basically using huge amounts of electricity that's coal-fired with a pile of coal to make that nickel. And so, a lot of the production in Indonesia has anywhere from a 50 to 80 ton of CO2 per ton of nickel footprint. There are some other paths in the country that are somewhat lower, but you're still looking at anywhere between 10 and 30 tons of CO2. Again, in Ontario, we have low carbon electricity. We can design a mine to utilize electricity to the maximum extent possible. So you can build a mine with a relatively low carbon footprint, even though the grade of what we're doing is low. But the big opportunity with this class of ultramafic nickel deposits, and not just us, there are half a dozen other of these in the country. They're hosted in rock that has this great property that the rock and tailings spontaneously absorb CO2. We developed a process where we inject CO2 as it's going through the mill, and so we can store 1 million tons of CO2 per year. So we'll be one of Canada's largest carbon storage facilities, as well as one of the globe's largest nickel sulfide operations. So again, when you can take advantage of some of the inherent properties of what you're mining, it's a great spot to be.
Robert, you are focused on 2 brownfield operations to bring both copper and zinc to market. Can you speak to the importance of looking at these brownfield opportunities and trying to address the looming supply gap for critical minerals, and then the environmental realities of brownfield versus greenfield?
Yeah, no, there are obviously big advantages to working a brownfield site. It's already impacted. It doesn't take away from all your permitting requirements. But generally speaking, unless there's nasty environmental legacy, such as acid mine waste and so on, and hence pick your brownfield site very carefully. And when you do pick a brownfield site, you have to go through the environmental assessment early on to avoid outrageously expensive costs. Generally, the permitting process will be easier, but it won't take away, of course, from your responsibility or obligation to maintain a low carbon footprint in your development cycle. So there are advantages, but there's absolutely no point in going to a brownfield site, even if it's environmentally benign, if you don't have a significant residual resources. So when we scoured Canada for base metals, stranded assets, and base metal opportunities, it's not a coincidence that we came across Pine Point and Gaspé Copper. They were both iconic Canadian mines for decades, but it turns out that they both had and still have significant resources left in place, which allowed for careful look and eventually a decision to acquire. And it's worked out very well so far. Those resources are very real, and they're not negligible. I mean, combined, we're looking at over 11 billion pounds of zinc, copper, and lead in the ground. And we're going to march both of those projects towards feasibility and production decision. But having said that, again, the challenge of reducing carbon footprint on each mine site, and it's different for every site. It depends on access to hydropower. That's a big one. I mean, anyone can buy offsets, sure, but anything you can do to avoid generating the CO2, including bringing in electrical jumbos, whatever, underground equipment, trucks. When it's a bulk tonnage, I still don't think there are 400-ton haulers, they're electrical, but certainly the shovels are, and there's abundant hydropower certainly in Quebec. So these are all solutions we can work towards. And fortunately, Gaspé Copper, since closed down, there are two wind farms producing 60 megawatts right next to the site. So we're assuming we can tap into that. And these are all measures that you can take, and there's more and more innovation really going on into reducing carbon footprint of mine sites. Probably one of the final challenges will be to get 400-ton haul trucks electrified, but that's not for tomorrow, I don't think.
Yeah. It'll be using your own production to then help create the batteries that might be needed to be able to do things like that. So it's a bit of a circular reference here. The three of you have been operators for a number of years now, and the focus on emissions has definitely been something that's been a large shift in the way that operators have to think about their extractive businesses. Can you briefly sort of speak to how that has changed in your industries and how that changes the way that you look at future operations? I'm going to give each of you less than 30 seconds for that answer.
I'm not sure it's changed anything in the way we operate. We've all, part of it is it is reduced costs if you can have lower emissions, generally speaking. So been trying to be on hydro everywhere we can. At our Greens Creek mine, we have periods of time where we're having to operate with diesel generated power. We try to limit that as much as we possibly can. That's been true for decades now.
But you have to admit, 20 years ago, emissions were not a big topic.
No, but costs were.
Costs were, exactly. So the decisions were mostly cost driven.
Yeah.
Today, you got to juggle cost with the impact of your emissions. And of course, if your emissions are too high, then you drive away certain investors and your ESG profile gets tanked and so on. So it's much more challenging today to balance your emission profiles and your carbon footprint with cost reduction.
I guess just two ideas in 30 seconds. One, the pace of equipment innovation is happening far faster than we'd see, again, in discussions with the big truck guys. They are getting pretty close to having some operable solutions in the not too distant future with trolley and batteries. And I think the other second piece is, taking advantage of some of the new technology that's being invented. So again, now underground mine, if you go to an all electric fleet, your ventilation requirements, are significantly lower, which again reduces your capital, reduces a lot of your operating costs. And so again, if you can start to think differently with the equipment that's coming, you can get a twofer in terms of improvement.
We'll shift gears a little bit here. Ed, you have done a master's in energy policy and climate. And when we look at that and we look at the reality of remote communities today, often these mines are located in remote communities, but they're heavily dependent on fossil fuels and in particular diesel to provide fuel for transportation, electricity, heat. How can the mining sector intersect with remote communities to provide clean, affordable, and reliable energy, which is really the trifecta everyone's looking for, while also reducing the climate impact of this energy?
Right. So I'll add one more word to my three words, and that's nuclear. And I sort of tipped my hat at lunch, but I am a fan of nuclear, and I did my thesis on nuclear supply chain. Despite it being a climate program, it's a viable non-carbon source of energy. And when you're talking about the evils of diesel, that's the only way that most off-grid can power themselves. It's a dream to think that you can do it with solar and wind. So when you asked the question about the communities, and it really is obviously the mining industry's responsibility to do better and bring services and possibilities to communities, or at least do no harm at the very least. But the nuclear opportunity is a big one, and with answering the social justice side of things and the community engagement and Indigenous engagement side of the equation, nuclear power is clean, and it can do a lot of things beyond electricity. It can offer process heat for mining operations as well as can do district heating for villages, and it can also provide theoretically district heating for greenhouses. So you can actually create farms in the far north under greenhouse that are provided heat by nuclear generators. And people look at me funny when I say talking about nuclear in the context of mining, but it's happening. The Mining Association had a lunch this week where they actually spoke about nuclear, which I was sort of happy about because nobody's really talking about it. But from the other side of things, from what can nuclear do, the technology side of it is the technology is not far-fetched. It's not science fiction. It's here. And I'll give some examples at the end of my minutes. But basically, the reactors that are being designed right now aren't your legacy reactors. They're not the CANDUs. They're not the big pressurized water reactors. They are small modular reactors. James had talked about them in his presentation for baseload. And these reactors are sized for anywhere from, the micro reactors can be anywhere from 1 to 10 megawatts, which is perfect for the application of mines. And if you need 30 megawatts, well, we can send you 3 of them, and they're easily put together in packages. For example, OPG, Ontario Power Generation, is doing a project right now at Darlington, which is a 300 megawatt reactor, and it's big. It's grid scaled, and it's based on existing reactors. It's a pressurized water reactor, and it's not sexy in technology, but it's sexy in the sense that the path to regulatory approval is fairly predictable, and it will be coming into operation in 2030, best guess. Being in the mining business, you're used to timeframes of 5 years, 7 years, 10 years. So there will be reactors coming that will be in operation, commissioned by 7 years from now, 8 years from now. So that could fit into the time scale of a new potential build somewhere that's off grid, where you need to provide power. So I wouldn't bet on it today, but there will be much more visibility. For example, when OPG has another venture that's with Canadian Nuclear Labs in Chalk River, and they're putting up a 5 megawatt reactor, and it will be in operation by 2026. So once you get that going, and you build your second one, you build your third one, you build your nth one by the early 2030s. Again, that's in sort of a mining time frame that it becomes reality. The biggest challenge isn't the technology, isn't even the financing, and the economics make sense because the levelized cost of energy for nuclear microreactors is cheaper than diesel, and that's even diesel prior to the extra cost of carbon that's coming and coming fast. So that's the exciting part. That's what makes me excited. But the regulatory framework has to change. We need to be able to say, well, okay, I want to put a reactor on my silver site. Well, it's not quite that easy today, but we're going to get there. And these are not reactors that you need operators for. These are basically nuclear batteries that you place in that come in the size of a container, a shipping container that you can put on a truck, you can put on a barge, you can stick on a plane, and it's fairly easy to operate because there is no operation. It's remotely monitored. You never open it, and you plug in your whatever you need. So it's exciting for me, and I do believe we're there. And as I'm steering my new career into this field, that's where I'm going to be focused for the most part, is making that happen. So but it's really a policy driven thing that's going to change, that needs to change to make it realistic, but it's coming.
Yeah, and policy is such a big part of anything to do with the energy transition, be it for the extractive resources and being able to get the necessary critical minerals that we need to be able to then actually build new infrastructure, which is a huge piece of this. And district heating is something that we don't do a lot of in North America. It's much more widely used in Europe, but can be a game changer for some of these remote communities, which they will freeze without their heat. So we do need to find a way to make this affordable and, again, reliable.
Yeah. And when you paint a picture like that, where you can do all these things, and you start to think, well, I don't have to pay $10 for bananas. I can get them. I maybe not grow bananas, but your own greens and your own tomatoes and whatever. That it paints a fairly benevolent picture in that, and you can't not have the discussions. You cannot have the consultations. But it paints a rosier picture than saying, hey, we're going to load up with 14 3 megawatt
Yeah.
These are generators, let's go.
Yeah, especially when you have that base load heat that's not being utilized maybe
For sure.
necessarily in the summer.
And you could potentially produce hydrogen theoretically. You know, I'm not a huge hydrogen
if
fan,
you need
but
it. Yeah. And so, but speaking towards that intersection, Lisa, between policy and finance. So that's obviously a place that you deal with that intersection quite a lot. You know, in Canada, what is that role of finance and policy within the mining sector, and how can policy help facilitate the capital needs of the energy transition?
Well, I mean, traditionally, it's been huge in Canada. Like one of the key foundations of the sort of success of the kind of mining industry ecosystem we have is the flow-through share regime. That's been around for decades. And just last year, or just over a year ago in the 2022 federal budget, there was a new exploration tax credit introduced specifically for critical minerals. You know, mining, like early stage exploration financing is like venture capital at its riskiest, and we need incentives. We've seen how successful this regime is, and when this additional tax credit was introduced a year ago, which is double the normal sort of grassroots exploration tax credit that has been around for a long time, it was like startling to see how effective a policy tool it was, because virtually overnight, I mean, well before there was even proposed draft legislation out there, we were doing transactions like literally within weeks. And I don't think we sort of went back and like checked to get the statistics over, 12 or 15 years. But when Patriot started in business and pretty consistently for, 13, 14 years, probably, at least 80% of what we were financing was gold or, precious metals. And we went from that sort of 80 to 90% mark within months. It completely flipped on its head, and lithium, uranium, copper, I mean, I'd say, at least 2/3 of what we were financing was in the critical minerals list. So we've been I really applaud the federal government for that. One thing though that I think a lot of people aren't aware of is that in the most recent budget, there was sort of a vague proposal to change alternative minimum tax rules. And that actually can have a pretty significant impact on the raising of capital for mineral exploration. Without getting into details, it increases the minimum tax burden on people that are accessing tax benefits, like through the flow-through share system. It increases the capital gains inclusion rate. It increases the inclusion of amounts that are given donation tax credits. And most of the flow-through financing now is done through this so-called charity format. And the bottom line is that if they implement these proposals as they've initially put them out, I would say we would lose about 1/3 of the capital that we have coming in now that has been so fantastic because of the critical minerals credit. And so be good for people in this room to understand that and have the government understand that, because with what they're giving with one hand, they can take away with the other.
Yeah, no, absolutely. And Mike, I purposely left you to the end to sort of wrap up some of these thoughts, because Lisa spoke to the financing, but throughout the day today, everyone has been speaking about, starting with Elian, our fearless head of mining this morning, speaking about not necessarily a capital drought, but definitely less capital in the marketplace than what is needed to really develop the resources to accomplish an energy transition. So during your 30 years with IBK, you've been financing mining companies. What have you seen as the evolution in the mindset towards the metal space, and what really needs to take place today in order to really truly facilitate this energy transition?
Yeah, so it's interesting. I began about 30 years ago in this business, and it was very much as an investor in exploration companies. I have a degree in geology and was always passionate about earth sciences, but it wasn't until I joined IBK Capital that I realized that there was this ecosystem of public markets and that you could actually make money investing in junior exploration stocks. And so my friends were all, of the same sort of generation and mindset. Back then, reflecting on back then, it was really more about just an interesting investment, right? To make money. And it's no different for the next generation of investors coming up. They want to make money on investments. But what's changed is that they need more of a story behind that investment, right? They need more of a narrative about the opportunity that aligns better with what they care about in life, right? It's not just enough to say, hey, the tech sector is interesting, or the exploration sector is interesting. I think I'll make a few investments and hopefully I can make some money. They want an opportunity that resonates with them, and so that's that's what we are trying to do at IBK Capital. We're trying to be relevant with our investment opportunities to what they care about. And right now it is the environment and it is social responsibility. It is this next generation that pushed the Apples of the world and the Facebooks and the Fords and the Teslas to do better with their supply chains. And that is happening. We've heard a lot about that today yesterday at this conference. We're having a consolidation of supply chains into Canada. It definitely is an opportunity, Mark, in Canada to do better. And also with deglobalization, it's forcing governments to respond. And so we are aligning ourselves with these narratives so that our investment opportunities can be, I guess, an easier investment for that next generation. And what I mean specifically by that is you have to be involved in battery metals, as an example. We all have, silver is one. Electrification of the world. It's not just battery metals. I'll correct myself. Electrification of the world, and that includes alternative energy, so solar and wind. You have to be involved in that, and it should be back home in Canada for at least the folks that live here in North America, because they want to see the betterment of their backyard as well. So we're investing. We helped Mark Selby out in the early days in the founding of Canada Nickel. That was Ontario Nickel. We want to have the next big nickel discovery be in Quebec, again, to help out with the supply chain on the nickel front. But we're also very much involved with carbon credits, the creation of carbon credits, to help with the gap between where the exploration and mining companies are now and where they have to be in terms of this organic growth towards a net zero carbon footprint. But we're making that opportunity even better by aligning ourselves with a junior company called Big Tree Carbon that's working with First Nations. And they are very specifically working with First Nations to preserve and conserve the boreal forests of Canada. They're starting in Ontario. The Canadian government is passing framework hopefully this summer. That's what we've been told, which will outline exactly how you can create carbon credits from the preservation and conservation of boreal forests. And you can actually create a lot of carbon credits, and we're going to make them available to the mining communities that are operating in North America. And so that it helps with them. But maybe more importantly to what's been discussed on this panel, 75% of the proceeds of those sale of carbon credits, which is literally starting out in the tens of millions, but it goes to hundreds of millions to billions in terms of the growth plan. This is really big business. 75% of that goes to the First Nation communities that have the contracts, the forestry contracts, and have decided to conserve rather than cut down the trees for the timber business. And 25% goes to the public company. So it's empowering First Nation communities in the sense that they have a new source of revenue. Perry Bellegarde, who was the Grand Chief of Canada, I had the opportunity to sit down and have dinner with him, and he got it right away. He said the drip that now goes in terms of financial support and programs to these communities can become a river, or it can become Niagara Falls. And so these are opportunities that we think will be relevant to the next generation of investors to get them to perhaps take a little bit of that money away from Bitcoin or from the online gambling, which has become rampant in this country, right? And put it into what really makes sense, and that is to better ourselves, better our environment, better the communities that we live in.
Well, and look, Canada is, as everyone has stated here and has been stated throughout the day, there's a lot of unique opportunities within Canada. And despite the fact that our forests are on fire right now, the reality is forestry maintenance is important, and Canada's government is looking at ways to make those offsets be applicable in the compliance market as well. So that's
key. You said that, and I forgot to mention compliance. Yeah. This is all about the compliance
credits. Yeah. So with that, we are out of time. This has been a great and incredibly diverse panel. I appreciate everyone's participation in it today, and look forward to carrying on the conversations in the future.
Thank you.
Well, thanks, Christina, and thank you to our panelists for a very informative discussion on renewable energy and carbon. My name's John O'Sullivan. I'll be your next moderator for the remainder of the day. I'm a managing director, Global Mining and Metals at National Bank. And it's my pleasure to introduce our next speaker, Yves Rougerie, President and CEO of Vision Lithium. Vision Lithium is a junior exploration company focused on exploring and developing high-quality lithium projects, including the PEA stage Cermak project right here in Quebec. Yves.
Good day, everyone. I'm here to speak about our lithium projects. Vision Lithium, a company established in Quebec, based in Val-d'Or for the technical team. We acquired 3 significant lithium properties over the course of the last 5 years. We started out with the, what have I got here? We won't go through any of this. We'll just jump. So this is the capital structure of the company. I can see it down there. $300 million shares fully diluted. We only have a $25 million market cap right now. It's been quite significantly higher than that in the past. So these 3 properties that we're speaking of are based in Quebec and Manitoba. As you can see on the left side, these are large properties, 5,500 to 19,000 hectares, which equates to 55 square kilometers to 190 square kilometers. We also have some base metal properties in Eastern Canada, in Quebec and, New Brunswick, including the Dome Namur property, which is historically recognized as a Gaspé copper lookalike, except nobody's found the copper yet. Jump to the James Bay area, which everybody is acquainted with here at this conference. In the top of this slide is the Corvette property. So there's like a couloir or a corridor of potential lithium dikes over there, several tens of kilometers. And that's where everybody is going bananas right now. And with good reason, of course. And further south, there's a band of deposits, Galaxy, Nemaska, Critical Elements, and eventually Moblan, which are being brought to production over the course of the next 2 or 3 years. And just to the west of the Moblan deposit of Sayona is our property, which is the Cermak property. We acquired that property in late 2016, early 2017 from Nemaska, and it's a little broken up still in the claims. So there's a donut in the middle that we're trying to acquire. We have about 75 square kilometers. Again, 40 kilometers west of the Moblan deposit. So we're in the same greenstone belt. We're the only 2 lithium occurrences in that belt. They have expanded their resources this year to over 50 million tons, if not 70 million tons. We have a deposit which is called the number 5 zone on the property, which is a 300,000 ton deposit within a field of dikes, which are quite sizable and show a lot of potential for discovery of additional and more significant, hopefully, lithium deposits. As of last year, there was a lot of interest shown to us for acquiring direct shipping ore from the property. So this deposit that we have is sitting at the top of the hill, and it could be extracted very simply, quickly, and at low cost with tremendous revenue in return. And I'll talk about that a little bit going forward here. That's the project we're essentially pushing the most on right now, and the other two are a little bit on the sidelines, waiting for this one to develop. So at the regional location, you can see the Sirmac property at the top of the slide, and just 40 kilometers west of Moblan, we have road access on either side, either to Chibougamau on one side to the east or to the Chapet on the south side. That's the highway that joins Val-d'Or to the Saguenay-Lac-Saint-Jean. So either towards the Sayona mill to the southwest, or towards the tracks and the ocean-going vessels in the Saguenay. Those roads can all be used by heavy trucks up to over 100 tons, so we can transport mineralization at a very low cost. Excuse me. In the area we're at, there's a large forestry camp only 20 kilometers from the property, which ensures that we don't have to build any infrastructure on the site whatsoever for this phase of exploration and development. This is a picture of the dike pre-Nemaska, if you wish, in 2012. And then Nemaska actually did all the deforestation and stripping and cleaning of the outcrop to prepare it for extraction. Then they gave it up for different reasons. So this is what the dike looks like today. And as you can see, it's well above the lake that is about a kilometer away. And so it's not at all within the water table, not affecting the water table whatsoever. And the dike itself and the mineralization is already prepared. So there's no work to be done to extract this material. This is what Nemaska did back in 2012. These are all 25-meter apart sections across the outcrop, and each of the red dots is over 1% lithium. So this is a zone. So we're working on advancing this towards a direct shipping program. So we would like to, because of the high value of lithium ore today and the demand, which is very great from all sides, we've been doing the work trying to advance this towards production in as short a time period as possible. And we've attracted a lot of attention by other potential small producers. So instead of being a large producer in the short term, we have 300,000 tons sitting on surface, ready to go. We think we have a lot more to be found on the property, but we don't have it yet. So to take this out and to monetize it is not going to affect the future exploration. It's actually going to help us because it's going to save us the trouble of having to raise more financing to do more work on our different properties. So as of last fall, we started applying for permits for bulk sample extraction for as much as 50,000 tons. And we also started a PEA, a preliminary economic assessment, which came out in January and which showed tremendous value for the mining of the entire 300,000+ ton deposit. We had the mineral resources reconfirmed, and as you can see here, there's about 330,000 tons at an average grade of about 1.3%. And this is very clean rock with very low values in iron and mica and other metallurgically difficult elements. So the PEA came out in January, done by a company here in Quebec City. And as you can see on the second line, we got an after-tax NPV of $100 million with a rate of return of 485%. And the reason for that, of course, is that we have no CapEx because everything is ready to go. We don't have to build a road. We don't have to do anything. All we have to do is operate a quarry, essentially, and put the material on a truck and ship it out. So that makes for the internal rate of return is going to be very high in that condition. So over the course of the mining of this deposit, if we could mine it all out, at today's typical prices, we could make as much revenue as $250 million with an operating cost of only $50 million. So a potential net revenue of $200 million pre-tax. So the deposit, the work done in the PEA suggests 4 small pits. There's really one big pit, and it's in positive relief, so easy to get to. As you can see, there's roads all the way up to it, and the whole thing is already ready to be extracted. Actually, you can see on the right-hand side, it's difficult to see, but there's a bunch of white spots near those roads, and those are all spodumene dikes. We put a couple of slides here for the cash flow scenarios for the mining and the revenues. And if I go down here to the next one, so we can see the total operating costs in the upper half for the OPEX is $45 million for the 320 or 30,000 tons. And the CapEx, the important part, is at the bottom. It's only $3 million. So there's basically little to no cash to be put out in order to start and even finish it, because that's going to include the reclamation costs as well. Whereas the revenue is missing there, but it's going to be $250 million, leaving taxable income of 205. And then depending on the taxation, we can drop down to only $120 million left, but that's still almost a 500% rate of return. The sensitivity, again, will not change other than for the price of the material that we get to sell it, because, again, no CapEx, and there's very little variation. The mining cost is not going to change, and the transportation cost, that would be the one that could change if we changed anything at all. And this is like a last couple of slides showing the potential. So there's the big dike in the middle, which is where the deposit is as of now. And to the right, you can see all of these large dikes that have good extension and that have the potential to host significant mineralization, we believe. The big dike may host some further at depth as well, so we have to work on that to develop that. About 5 kilometers to the east, we have a zone that we call the East Zone. And it's a zone of smaller dikes that are only 5 to 10 meters wide. And we stripped them and cleaned them off a little bit a couple of years ago, and took some channel samples. And as you can see, the results are pretty good. It's not very wide, and there's a lot more work to be done there. But what that demonstrates is essentially that potential for the expansion of the resources within all of these dikes that are present on the property, especially if we go excuse me, into comparisons with other properties where they have multi-dikes. The next property I'd like to look at, I better go faster, is in Cadillac. That's just west of Val-d'Or, and it's the blue property on the south of the map here. So we're just south. The black line, broken line, is the Cadillac break. All the yellow stars are the major gold camps, mining camps of Val-d'Or. Noranda on the left, Val-d'Or on the right. And the Cadillac property is south of the break in the Pontiac sediments, it's called. This is the property. It's almost 200 square kilometers. And it hosts, in that little square at the top, there's a small granodiorite about 1 kilometer in diameter, and it hosts a half a dozen dikes or more of lithium-bearing material. And we did a lot of work on the ground last year, the first year we had the property, and we've identified several areas for follow-up exploration to determine the presence or not of spodumene dikes. This is just a couple of pictures. You can see the size of the crystals we have in these dikes on the right-hand side. They're very significant in terms of size, and that's a problem when it comes to trying to get representative values from the assaying and drilling of the property. This is just a quick shot. We use LiDAR to try to pick off the dikes because they tend to be harder than all the surrounding rocks. So they stick out a little bit, even though it's only a few meters. And using that, we can identify the dike structures, and we can go in and drill those in areas of high wooded excuse me, content. The Goslyth property is our last of the 3, maybe the most important, but not right now. So it's in northern Manitoba. As you can see here, it's 230 kilometers east of the year-round road access. So there is a winter road that does that access, and that would have to be upgraded in any eventuality of a mining operation. This is a close-up of that road. The road joins, just that section of the road joins about 6,000 to 8,000 First Nation people who don't have any other full-time, year-round access to the mainland, you could almost call it. This right there on the shores of this lake, Inco back in 1960 discovered this deposit, drilled about 25 holes, determined that the dike was well over 2 kilometers long, and that it was mineralized economically for about 1.5 of those kilometers. Very significant occurrence. This is a type section. As you can see, the grades and the widths are in the 10 to 15 meter width, and one, in this case, very high grade, 1.5 to 1.8% lithium. So it's a very significant occurrence. The longitudinal shows that most of the holes were done down to only about 400 feet, and the deepest hole at 800 feet, 240 meters, was 1.5% over 12 meters. So very good continuity. Based on that, they had established that there was almost 9.5 million tons of historical short tons at a 1.2% on average. We believe that number can probably be doubled based on the longitudinal we were looking at. So we think that there's the potential for getting to 15, maybe even 20 million tons with a significant work program. So we're working with the local Cree First Nation to try to sign an exploration agreement to allow us to go in there and drill as soon as possible. Finally, in finishing the exploration programs for us going forward is to advance those 3 properties, principally in the short term, the Sirmac property, and secondarily the Cadillac lithium property, and God's Lith, whenever we'll have the opportunity to sign an exploration agreement with the Cree, we would fast track exploration of that property. Thank you very much.
Thank you, Yves. Now let's welcome Stuart Harshaw, President and CEO of Nickel Creek Platinum Corp. Nickel Creek Platinum, located in Yukon, is a mineral exploration and development company focused on advancing its 100% owned Nickel Shaw project in the Yukon. Stuart.
Right. Hello.
Hi, how are you?
We're going to talk with nickel today. Always start with a 1-minute summary of you and the company. Go for it.
Absolutely. Stuart Harshaw, president for Nickel Creek. I spent 27 years with Inco and then Vale at different levels in the organization. So nickel's been in my blood for something like 35 years now. So
okay.
The project is a nickel, copper, cobalt, platinum, palladium project. Located in the Yukon, very large. You've heard about the lower grade, so it's a lower grade project.
Sulfides.
Sulfides, yes.
We'll get onto that. Get onto low grade.
Yeah.
I kind of want to help people here to understand the dynamic of the nickel market, because obviously nickel prices sort of come off. It's come off a lot since last year. I think it's kind of finding sort of steady state at the moment. But 3 big players: Indonesia, Philippines, China, over there. I think some people feel that Indonesia is going to be able to fulfill all of our nickel needs going forward. So what's the point? What do you think?
You know, I think that's been talked about a lot by lots of different groups. I think fundamentally we need them to keep growing as a nickel industry. They are the main source of nickel that we can get at, but it's not enough. They're stretched. Infrastructure is a challenge for that type of country where you're trying to get power. It's not easy to get the power to the right place. So now you're building coal plants. Now you're starting to see degrading ore grades. So, you know, where they started at 2%, they're down to 1.5. You know, these economics really start to impact them.
Okay, and with regards to how the West kind of plays that, because obviously most of that nickel heads straight up north to China, right? And there's a big kind of European ecosystem for automotive manufacturers, battery manufacturers, Korea, Japan as well. There's talk of also bifurcated markets. You have clean nickel, dirty nickel, all these sorts of quite combative type language going on. I mean, how do you feel about that?
I think the world is trying to come to grips with it. I don't think they've really got their heads around what low carbon means and how we're going to actually see this play out over the next 10 years. The one thing that is a constant is that the EV market is coming. There's a huge commitment to do it. The challenge is sourcing the clean nickel to get there. And the European Union is ahead of us in terms of, from a North American point of view, and actually prescribing lower carbon to go into batteries. So they're much more geared to that versus North America hasn't stepped up to it, and China doesn't do any of that.
Right, but lots of battery conferences happening at the moment. There was a quite a good one down at DC a couple of weeks ago. A lot of government in attendance, government departments in attendance, lots of battery manufacturers. It's very, very popular, and people are kind of starting to throw money at the back end. So, well, one to industry, not necessarily at mining yet. I think Talon perhaps the beneficiary that we know about. Money side of things for miners at the moment is difficult, right? It's a great conversation, but not a lot of action. It seems from the financing side of things. So, what's got to give?
Oh, so it's like everything. People like paying, low prices for their pair of jeans. Like people like paying low prices for their cars. There's a whole conversation around what's the right pricing for commodities. Commodities need to be priced so that there's a renewable source of the actual commodity. So you need to actually have it priced so that it naturally pushes the lower carbon type projects forward. So from a mining industry, that capital has always come through traditional routes. It's only now that governments are starting to recognize that if they're going to get ahead of the curve, they need to start to act now. And so Canada's put in reduced taxes type thing. The US government through the DoD, Critical Metals, has got grants and different options. And I know Australia just announced theirs. These are just small steps. It's not enough to change it. And the biggest challenge with nickel is when nickel moves, it moves. And so when it goes into shortage, you saw that when it got up to, we had the big short, if you call it. But in general, when it gets short, it moves very quickly.
Which one with the LME?
LME, yeah.
Yeah, and it fell.
Yeah, exactly.
Violently. So let's not talk about that. Okay, let's talk about your project. So tell us, what we need to know. In fact, what you know about the project now.
Yeah, certainly. So we've been around for a while. A lot of people know our name. The project is at the stage of just about putting out a PFS. So we're planning to get the PFS out sometime this summer, and really it's moving along the development. So really, I want to get this into being at a feasible stage. And the reason is that I firmly believe in the next few years, you're going to see nickel take off. And I want to have a project that is ready to go and that people can say is investable.
Right. But what's the market cap at the moment?
It's low at 14 million.
About to do a PFS. About to do a PFS?
Yes.
Say? Right. Okay. Let's talk about the PEA then in terms of how that's constructed and what people need to believe. So in terms of grade, I know it's a sulfide, low grade sulfide project, but how low grade are we talking?
So it's 0.26 on the nickel, but on the nickel equivalent basis, because of all of the byproducts, we're about a 0.5% nickel equivalent, which kind of takes us up a little higher in the notch from a per ton of ore. And the other key thing to know is we put out a resource on it. So just a few weeks ago, so we're 2.5 billion. It's the new, the new number that you have to have in the nickel industry. Everybody wants 20 plus years of significant production. And we've hit that with the new resource. The key though, for a project like us is if you've been following the nickel business, projects that have byproducts tend, or to do much better once they go into production long term, and the seniors know that. Sudbury is an example. Sudbury was always profitable even in low nickel price environments, and so that was always driven by the byproduct credits.
Right, and what else does the PEA tell us in terms of the economics for the project?
So we don't actually have a PEA, so we're going
straight to PFS?
right to PFS.
Okay.
Part of the reason is that we did all of the detailed work for a PFS quickly, and so instead of actually downgrading the work we've done, we've decided to go directly to a PFS.
Okay, so that's terrifying for you people?
Always.
Okay. But not you.
No, I think it's the right way to go. I like telling people what's going on. I come from a production point of view. I've done market and sales type roles, and really my focus is to get the facts in front of people and then let people make the decision on the project.
Right, but they're also going to start looking at nickel price and what are the other byproducts in there?
Copper, cobalt, platinum, palladium.
Right, and so the 43-101 that you've done, were there any assumptions made in there?
Yeah, there'll be prices done for the resource itself.
Right.
Yeah. So based on long-term pricing, the resource is calculated based on those pricing, and then your PFS is done with different prices.
Okay. Yeah, because I think I saw that. So it's long-term pricing, because I think you're using over 12.
So really, the key thing with all long-term prices is the gold industry, for instance, always does a 3-year trailing. In the base metals, you look to the past for a few years and forward, because it really is supply demand driven so much in the base metals, whereas gold I always find is less on the supply demand balance. It's more on the economic
right. I mean, it's a little bit of you thinks, well, look, I don't want to do a PA because I don't really want to put a number out now, not in this market. We're seeing companies get crushed because the assumptions are your margins will be, well, destroyed, quite frankly, with some of the costs that we've seen off the back of inflation, etc. And they're coming off, but they'll get there. Was there a little bit of that? So what's the point of putting ourselves through the pain and maybe not being able to recover from people's perception of where we are today and go straight to, the PFS, which will be a little bit further down the line? Gives a bit of breathing space. Nothing wrong with that. I've seen companies do it, but what was that part of the thinking?
So part of the thinking is really to get ourselves into the feasibility side. Right. So the rationale for that is you got to kick off the permitting. It's the slowest part of the process. Okay. You need to firm up where you're going to put things and start that process. So everybody's always worried about the permitting. In Canada, we've got decent permitting, and each region is different as compared to the US projects, which are a bit more challenged on the permitting side. But it's still important to start that process as soon as you can, because it does have a time component to it.
Okay, interesting. I've got to come back to the size of the company, because you got to you got to play the market a certain way. You've got some good shareholders in there. I think RCF is one, and Drake that I recognize.
Yeah, and Electrum is our major one. Yeah.
Right. Okay. And so, are they here to stay? Or are they here by dint of grandfathering? I mean, why are they in the project?
They've been long-term. Electrum has a very long-term view of investments. They're into gold and silver, so Nouveau Gold and stuff. And so they're at 36% of it.
Right.
RCF, as you know, is a process for long-term investment. And Drake has been in the story for 6 or 7 years and is still committed to it.
Right. So they're obviously bought into it. Maybe that you don't need their permission, but 36%, I imagine this conversation went on about, okay, straight to PFS makes sense for us in the current market. Yeah. It allows us to get on with the hard business of actually putting the pieces in place. So there's a lot of variables that you've mentioned there in terms of permitting, etc. But the market also needs some care and attention as well. So what do you think the market needs to understand about your project? What do you think you need to say to the market? Say, look, this is not going to be a kind of casualty of the downward movement in equities at the moment. We've got a plan. We know how to get to the end point. What does that look like?
Yeah, well, we're financed till next year, and really
how much cash have you got?
We're good till the first quarter. So about 1.8. And to me, the message to the market is the nickel is undersupplied. The time is coming for the nickel. Like you've heard a lot about the EVs, heard a lot about Indonesia, but you know, the time is going to hit, and it's going to hit in a you know, I would say the very short term. So when do you buy, you know, a company? You don't buy when it's already hit and things are going crazy. You should be buying right now, all companies. So resource companies right now are a lot of them, as long as you buy good ones with good in-ground measured assets in good jurisdictions, it's going to be a good investment at this time.
Right, and let's address it again for the non-initiated with regards to nickel sulfides. Whether it be 0.26 nickel or 0.5 nickel equivalent, the comps for that in terms of companies successfully mining, extracting economic nickel, where would you point to?
Oh, I mean, to me, like in general, all of the lower grade deposits like this, they all need longer term prices that are sort of what we saw last year and the last bit. And that's really, to me, a feasible long-term price, because that's what the market did when it got short. And that's what it's going to be. So to me, people got to realize that, you know, companies like us, we are going to be profitable and be built under that kind of regime of.
But you're saying is, don't worry about the grade.
Yeah.
The price of metal's going to go up, so everything works at a higher price.
Yeah. So, well, just remember, it's just the mining cost. So it's just you're offsetting mining costs because the concentrate you produce. So everything smelting, refining is the same. So it doesn't matter if we start at 0.26 or you start at 2, the smelting and refining is essentially the same. So it's really just your mining costs. So it's the energy component.
But you're not building a smelter, right?
No, that's what I'm saying. So for us, you know, the key thing is going to be we're building a mill. It's the capital costs are going to be large right now. So when you see our PFS, they're going to be reflecting that big. It's going to be a big number, reflecting the current market. Whether that's going to change and go down, that really depends on a lot of things. But the driver is energy and the capex is going to be the driver for a project like ours.
Good man, appreciate it.
That was really good.
Good insights. Thank you.
Thank you, Stuart. And now we'd like to welcome Ian Campbell, President and CEO of Harfang Exploration, who will be doing another fireside chat with Matt Gordon. Ian.
On yet?
Oh, right. I'm back again. Sick of the sight of myself. Right. This is a private company, isn't it?
No.
No.
No, we're a public company.
You're a public company?
Yes.
Oh, wow. Tell me all about it. Well, actually, give me a summary. We'll pick it up from there.
Well, we're a junior mining exploration company, so we're in the pre-discovery stage, looking to strike it rich yet again. We have a team that has got a good track record for sure, right? And primarily our center of gravity is up in James Bay.
Okay.
I'm sure you've heard about James Bay on the lithium side. Our, part of our history is in gold up there. Our ex-chairman at Harfang was the president and CEO of Virginia Gold and was the pioneer up there, and got people to buy into the program and discovered a gold mine.
Right. Okay. Yeah. So what have you got today?
Well, we got a number of exploration properties up there. So we're into gold and lithium.
Right.
And two elements I really like. I think the world could use more of both of them. They go a long way to clean up the planet, gold financially, and then obviously lithium on the environmental side. So lithium's quite popular now, and for good reason.
Okay, you really are going to have to debrief me because I didn't know I was going to be here. So on the market cap today,
12 million, 12 to 13 million range.
12, 13 million range. Went public when?
Well, Harfang went public in 2017.
Right. And
we merged, Harfang merged with another company called LaSalle Exploration last year, which had gone public in 2000. I was the president of LaSalle at the time.
Right.
The roots with LaSalle were with discoverers of Lakeshore Gold, which is sold for $1 billion. So we were up in James Bay and we were side by side, and we decided to merge. We had the same corporate culture, discovery, exploration, geologists, and hopefully make shareholders a lot of money.
Okay, makes sense. Cash?
cash right now is around $7 million, not including tax credits. So
right,
we're in pretty good shape that way. We have good, really good shareholders in the Quebec funds. All the Quebec funds are in on us. They bought into the program and cheering us on. And, we were in gold mostly, but we got into lithium last year. I was in lithium before,
right,
back in, say, let's call it 1996 to 2001. So that was probably one of the first lithium stories. It was in Ontario. And I saw what could happen. Actually, we that was post Bre-X, so everybody gold was in the tank kind of thing. Sound familiar? Well, gold sentiment's in the tank. Gold's not in the tank. And so we discovered the lithium deposit, and we also had accessory tantalum. And what happened there was because we had put that news out, an end user of tantalum in the States, making of computer chips, capacitors for the financed us actually. And so I think that's the small scale. In geology, one of the rules is small scale reflects large scale. And I think that was the small scale, but it tuned me into what can happen. And we're now experiencing, I think, the large scale. I mean, last week and 2 weeks ago, or in May, you saw Ford come into Nemaska. When was the last time you see a motor company come into a mining project? And last week we saw Rio Tinto, one of the world's biggest mining companies, join forces with Midland. So I think that's just the start that we're going to see in James Bay. James Bay was known for gold and other exploration, but lithium's put a whole new perspective on it. It's quite exciting.
It is exciting.
Well, I guess the reason, so I had some experience with lithium, so I just took over Harfang last year. So I said, we better get better exposed to this now.
Right. So where's the money? Well, I know you merged, but where did you raise the money from?
Well, it was from the Quebec funds upon the merger, but some came over from LaSalle. In fact, Crescat was a shareholder of ours. They were financing one of our gold projects in Ontario.
Okay.
And so we brought some money, and then Harfang had some money, and then we did a financing on the merger when it closed. So that was largely the Quebec.
Are they still involved? Crescat?
Yes, they're still a shareholder.
Okay.
I keep in touch with them. They've been a good support of ours on that specific project in Ontario, but they certainly like what we're doing.
Okay.
As far as the lithium goes.
Cool. Okay. Yeah. So sorry, there's so much said there.
Yeah, sorry.
I usually like to start with the team. You give me an indication of you, a little bit about your background, but in terms of the team that you've constructed or the team who remain, what are the kind of success stories of the past in terms of like building successful junior mining companies, exiting?
Okay, so on the board side of things, we had Andre Goma. He was the chairman of Harfang, and then he moved to be a director. He created Virginia Gold and discovered the Eleanor gold mine. So we sold that for $500 million to Gold Corp, and he kept the royalty, and then he sold that for another $500 million to Osisko. So that's a big success. He's mining man of Quebec for a couple times already. On the LaSalle side, we had Dan Ennis, who was the founding chairman of Lakeshore Gold, which was based in Timmins. And they found two gold mines. One was on the west end of Timmins, where people said there's nothing over there, but sure enough, they discovered the West Timmins mine. They also discovered the down plunge of the Bell Creek mine. From my side, I was on the discovery team for Imperial Metals first mine and the Goldstream mine in Revelstoke, north of Revelstoke. Was also the exploration manager the first 2 years for Rainy River, which was ultimately bought by New Gold. And with Lakeshore bought my company called Temex, we had 2 million ounces outlined on a property south of Timmins. Plus we had a joint venture with Gold Corp in the center of Timmins. And I think some of the resources we'd outlined are now in the mine plan. So we're all about discovery. That's the fun part.
Okay, so you got a capital, you got two different asset classes. I know you've talked about lithium because it's the metal of vogue at the moment. Is that where you're going to put your attention and your capital just because it's kind of in vogue right now?
Yes, I think so. I mean, because we're in James Bay already and we expanded our portfolio there, it's incumbent upon us to go and explore for some spodumene dikes. I mean, it's nothing simple in exploration, but at the end of the day, we have, a couple dozen catalysts in my mind that could really do wonders for the share price. Go out and look for these LCT type pegmatites. When I was in Northwestern Ontario, I mean, the center of gravity for lithium was the Tanko mine. And I learned from some of the experts over there at the University of Manitoba. We hired them actually to help us on the exploration side of things. So we've got good experience there. But getting back to your original question, our team in James Bay, which I really like to brag about, has a lot of experience in James Bay, operational experience. So I think, Harfang is is well set up here.
So okay, what just before we come to gold, the lithium. What do we know about the lithium before all of this activity starts? What do you know today?
Well, what I know today is I try to keep it simple, and I know there's 4 deposits there already, and the Corvette is the 5th one. It's going to be the biggest and probably the richest. I know there's a market cap of 1.5 billion. And I know that James Bay has not really had a serious look overall for spodumene. I think it's unusually endowed with these pegmatite dikes, and James Bay is a big area. It looks small on a map, but you can drive 400 kilometers that way and 400 kilometers that way. I know James Bay is underexplored because our gold projects that we merged on, we have 50 gold showings in areas that were hardly mapped by the government at all. So there's all kinds of unexplored turf up there. And even if you look at Corvette, it was explored for gold. And now there's probably the 100 million plus and growing pegmatite deposit there. So that's on properties that were explored.
Right, and you're going to spend how much money on the lithium doing what? To what end?
So
you're talking about being market focused, which is interesting because some companies want to focus on geology and they're kind of missing the market piece. You're saying, look, take advantage of the market momentum, focus on the lithium. So, which is nothing wrong with that. So, what are you actually going to do there?
So there's absolutely nothing wrong with that. Shareholders get into junior mining to make money, and that's our bottom line. And so the gold market is, there's not much of a breeze brewing, but there's a hurricane for lithium, right? So one thing I didn't mention, and this is a bonus, and actually kind of mentioned it with Corvette property, is that a lot of our properties have potential for both gold and lithium. So it's a dual potential. So I'm not sure what the split is. Maybe it's 50-50, maybe it's 60-40 lithium kind of thing. For that, but you can discover either or on a lot of our properties. Now we have 1 that's specific or 2 that's specific to gold. We have 11 properties up there, so let's call it 1 or 2 specific to gold, and then I would say 2 specific to lithium, where we don't think there's any gold potential. There's potentially good hunting grounds for lithium and everything in between.
Just in terms of answering the question, with the money that you've got,
yes.
What are you allocating that to? I get you're hunting lithium and there's gold byproducts, if you want to call it that. But what are you actually going to do with the capital to prove that you've got, good grades or a lot of it or whatever it is that you think?
Well, first off, we'd like to find something. So what we're going to do is most of that, we've got $1.5 million outlined for the summer.
Okay.
All right, let's call it $1 million for the summer, and then another $500,000 outlined for the fall.
Okay.
And so it's basically the fun stuff. It's boots on the ground.
Cool.
Go find us a spodumene dike. That's it. That's number 1. But we've also got to follow up on our Monarch property, Lake Monarch. It's a gold property I really like. Actually, it reminds me of the Timmins mining camp. It just hasn't been explored.
Okay, so the brief is make a discovery.
Yep.
Lithium discovery.
Yep.
Okay.
That would make me happy.
How much do you say? $1.5 million at that? How much do you say you spend?
Well, we're going to spend $1 million in the summer as soon as we, hopefully it's the fires have stopped us from exploring, but let's forget that for now because we can't control that. So $1 million is going to go a long way. So it's a low capital expenditure for a big prize.
It's early stage. Okay, so we're early stage, but we've got lithium in the title, so it'll be good. Gold. Let's go back to gold.
Sure, let's go back to gold.
That was kind of, I guess, was the golden child.
Well, gold's always been our roots, and I'm not abandoning the roots, but if the wind is blowing in the lithium, we're going to do that.
So are you going to park up the gold in that case? Are you not going to spend money on the gold?
Well, we are going to spend money on one of our gold projects. It's called Lac Monarch. We did some drilling in the winter, and we had some pretty interesting results, actually, but we also did some geophysics, and we want to put this property together. It was actually the listing property of Harfang. And, I took a look at it and I said, the geology is very similar to Timmins. It just hasn't been explored. So we want to bring that one to the drill stage, let's call it.
Right.
Yeah.
So, and what's happened since the merger? What have you been spending time doing?
So we last summer we worked on this Lac Monarch property. We got onto it. We also worked on the properties that we merged on, and did some more technical surveys on that. Hopefully, bring some of those to the drill stage. I did a little bit of work on the Ontario project with the Crescat money because I wanted to make sure we spent all that.
Yeah.
And the Ontario ones have kind of been on hold. We're in good shape with all our projects because we're not going to lose them. All the assessment credits are there, so there's no stress that way. So it's a little bit of a pause on the gold, but let's go big time on the lithium this summer.
Okay, so it sounds like I'm trying to work out where the market who you are conscious of addressing.
Yep.
where they value you, because it's such an early stage with the lithium and with the gold, it doesn't sound too advanced either. So with regards to, what would you say the market cap was? About 13, 14 million, right?
Yeah.
How do you kind of move that dial? Because you sound really super stoked and excited, but the reality is the type of data that you're going to come back, Mark, with probably won't seem that exciting. So how do you frame that?
So one thing I haven't mentioned actually is some of the work that we did last summer on the Serpent Radisson property, let's call it. Not getting too many names, but we did discover some pegmatite dikes.
Okay.
And they're already anomalous in lithium, cesium, tantalum, so LCT type dikes. We found some beryllium with them, so we know we're not in the specific area, but it could be 100 meters away. It could be half a kilometer away. But we do know we've got the geological environment, from my experience, that's completely favorable to find something and something big there. So that's on one of our gold projects. So
what are you doing about it?
Well, as soon as we can get out there, we're gonna go follow up on that.
Okay.
Yeah, absolutely. We
2 lithium projects.
Yeah. So I mean, that was last year, and so we had just got there, so we did a little bit of lithium exploration, right? And but in my view, we got off to a great start. So we need to follow up on that. The other thing we need to do corporately is make sure that the rest of the world knows we're in lithium. They knew that when we announced all those projects, and we did some really good trading, got some support in the US. So we just got to keep at that. That's partly why I'm here.
Stick it in the company name, don't you? That's what everyone else does.
Yeah, so it's okay. I've been in exploration business for a long time.
Good. Well, I appreciate that. Thank you very much. For coming on stage. I guess the world now knows.
Yeah, no,
you're in lithium.
Yeah, it's going to be exciting, and we got all kinds of catalysts coming up in the short term here.
Perfect. Thank you very much.
All right, thanks.
Thank you, Ian and Matt, for another great fireside chat. Now it's my distinct pleasure to introduce our next keynote speaker, Rita Jo Lewis, President and Chair, Export-Import Bank of the United States.
Actually, thank you so much, John, for that very warm and kind introduction. It's really an honor to be here with all of you and to have the privilege to be talking individually with so many of you who I know our team has begun numerous conversations over this last 8 months as we have prioritized this particular sector. Really want to thank our Minister, Vézina, for inviting me to spend some time with you today, and the government of Quebec for hosting all of us. I would be remiss if I didn't also acknowledge our Consul General right here in Quebec, Danielle Monason, and to let you know that right before joining all of you, I spoke to our U.S. Ambassador, David Cohen, who I had the privilege of speaking with before joining today, and also the privilege of speaking with and working with over the years. I know that the ambassador and the CGNI, all of us, appreciate that to achieve ambitious emission reductions, we need to accelerate our transition to clean energy. Recently in May and a couple of weeks ago at a big conference called TXF, which is a big exporter conference, I had the privilege also of continuing to connect with my ECA counterpart at EDC, Moray, at the heads meeting in Rome, and then in Portugal a couple of days ago. The G7, especially ECA heads, have acknowledged the increasing need to secure critical raw minerals that are instrumental to both the continuity of industrial production and the energy transition across our nation. This conference today provides me with a few short minutes to share with you what US XM is doing to build secure, sustainable supply chain using our planet's natural and finite resources. We all know that mining has provided the raw materials necessary for technological advancements and economic growth. So being here today, gathered in Quebec City, we witness the direct importance of the mining sector to the north, and particularly across Quebec, where it serves as a cornerstone of economic development and prosperity. So we know that the demand, as all of you have heard from the different panels and speakers, that the The demand for critical minerals and metals such as copper, cobalt, lithium, and graphite, just to name a few, which are vital in the manufacture of clean energy technologies, is set to soar. So we believe that it is truly where export credit agencies like USXM's financing can also help fill in the gaps that might be needed. You know, USXM, for those of you who do not know, but I know you have relationships here at home and with others, we are an independent federal agency that serves as America's official export credit agency. Our mission is twofold: to support America's jobs through facilitating the exports of U.S. goods and services. And I have to emphasize services because so many people leave that part out. You know, in 2019, when USXM was reauthorized, our U.S. Congress asked us to make more financing available in 4 key areas. And that was in addition to everything that we do, because we invest, we have financing available no matter the size, no matter the sector. But these were 4 areas that they also wanted us to prioritize: to make more financing available in the renewable energy space, especially energy storage and energy efficiency; to make more financing available in sub-Saharan Africa, as well as with small business along the lines of definitely women and underserved communities. And then to make more financing available, they created a new program for us called our Transformational Export Area. And we like to call it CTAP because, you know, we're the government agency. We always got to have an acronym. So as we call it, it helps us, that CTAP program helps us level the playing field for American exporters facing fierce competition around the world, especially from the PRC. You know, we offer direct loans and loan guarantees and insurance products backed by the full faith and credit of the United States. And we also help to make and sure that globally competitive financing is available to support the purchase of America's made goods and services. So I'm really excited that I also have our Senior Vice President, who many of you have met, Adam Frost. Please raise your hand. He has joined us today to continue the engagement that we have had, especially here in Quebec, as we continue to look at prioritizing projects that definitely support the 10 transformational export areas. You know, that mandate that Congress gave us asked us to make sure that we understood the AI and semiconductors and biotech and renewable energy and storage. We know that the critical minerals are vital to the transformational export area that Congress asked us to make more financing for. We believe that Canada, both as a key central U.S. ally and fellow member of an initiative that was started with G7 countries and others, about 20 other nations, called the Mineral Security Partnership. We know that as members of that MSP, that and with Canada's geographic proximity to the United States, it provides an opportunity to decrease U.S. reliance on the PRC-dominated battery supply chain. We know that the demand for critical minerals will continue to grow exponentially. And we also understand that there are numerous geopolitical and project risks to bring new mines into operation, often, as we hear, makes the process difficult, slow, and expensive. So like many commercially viable sectors seeking investment or financing or government support, we know can be critical at the outset because we want to help crowd in the private investment. And that's where we believe that XM can add significant value by providing financing for mining and processing refining projects anywhere in the world, especially here in Canada and definitely here in Quebec. So you might have to ask, why is XM here? You know, we know that this demand, as I said, is not only soaring, but we also know that we need to create secure and stable supply is what's going to be paramount. You know, US and Canada and here in Quebec, we know that our critical minerals are fundamentally rooted in both of our country's national security interests. We recognize that access to these essential minerals is critical for so many industries, also defense, telecommunications, renewable energy, and advanced technology. So about 7 months ago, I joined for the first time. XM was asked to join our Secretary of State, and our Undersecretary of State and senior ministers from 20 nations, of which Canada was brought to the table as a part of that, for a multi-level discussion on that new mineral security partnership. So for those of you who may not be familiar with it, it is an initiative that all of us, all nations of the partnership have signed on to support the security, diversity, and resilience for supply chains of critical minerals, which we know is essential in driving the clean energy transition. We know that it is going to be through these types of partnerships that USXM is going to be working alongside key stakeholders to support the development and expansion of reasonable mining projects and ensure the availability of essential minerals vital for so many areas that I just named. We believe that by investing in foreign mining ventures, we seek to reduce dependency on foreign mineral supplies. You know, we can look no further that right here in Quebec, that we have issued a letter of interest right here to Dumont Nichols, who I actually had a opportunity to meet some of the leadership today. And we are delighted to have issued that LI for a $206 million for the purchase of U.S. equipment and services. This past spring, we also signed an MOU with our Quad partners, which is Australia, India, and Japan. And as our president highlighted during the G7 summit in Japan this May, that these are the types of MOUs that are going to create, hopefully, a one-stop shop facility that will provide joint support for Quad export projects. So it doesn't matter whether it's the Quad partners or the G7 partners, the Indo-Pacific partners, we at XM is trying to step forward every step of the way to ensure that we can use the tools at XM to assist in the financial support for critical minerals transactions. Also, we believe that today, not only was that LOI issued, but in terms of the 8 months engagement that we have had right here with Quebec, whether it was in US, whether it was in New York, whether it was in Toronto, the conversations that we are having with all of you is to send the signal that projects that are in your pipeline, that XM wants to work with you to support critical minerals projects where there exists a U.S. export nexus. In Quebec alone, we know that throughout Canada and in Quebec, that these mineral deposits are stretching from coast to coast, and it makes the nation a strategic partner in the global supply chain. But it is important for us to understand, and I think we do, that we need to work together. We want to work together, and that we can pool our resources, share best practices, and push the boundaries of what is possible in the critical mineral space. Another example of how XM financing can also be used is working with us with our XM Engineering Multiplier Program. It helps to also finance feasibility studies, pre-construction design, engineering, architectural, and environmental services are done prior to the implementation phase of a project. And so with that program, we can support the development of technical and environmental and social information required for XM's eventual consideration of a project. You know, another way, and working with our embassy team, working with our consulate and our foreign commercial service right here in Canada, is that to work with them, to work with our CG here and our ambassador and our foreign commercial service officers to understand also how to leverage what we call Title III of the Defense Production Act. It's an act in the US which is earmarked for critical minerals, and it is allowed here in Canada. It's allowed during the pre-XM application phase to fund bankable feasibility studies and other pre-application third-party validations. So right here, we understand that with that type of a validation or with that type of study, once the application phase is completed, we can then use XM financing for actual projects. So it's great to be here in Quebec I had said to the ministers that I have been meeting with, and I have had a relationship with Quebec for a number of years, just as I have with the country. We encourage mining companies, both large and small, to explore the various financial solutions and support mechanisms that XM offers. So we are excited to be here, to be able to connect with you one-on-one, to be able to offer opportunities to use our virtual platform. You know, virtual now is so accepted. And so, yes, we would love to see each of you in Washington, but we can use the virtual platform with different groups and organizations in your membership to explore opportunities, just as we can use the virtual platform to explore opportunities with individual organizations. Forging partnerships and exploring exciting projects that contributes to the growth and sustainability of both of our countries in this industry is what is paramount. We look forward to continued conversation, and I look forward to continuing to be with you all tonight. Thank you very much.
Well, thanks again to Reta. It was a pleasure. It was great to hear about the USXM support of critical mineral development, both in Canada and right here in Quebec. Now it's my pleasure to introduce our next speaker, Belinda Labatt, President and CEO of Lomiko Metals. Lomiko is a graphite and lithium focused company, primarily focused on a La Loup project, graphite project here in southern Quebec. Belinda.
Right. Oh, those are bright lights. Bonjour à tous. Good afternoon. So you've heard
to all.
undoubtedly, more than you need to know about the energy transition today. And if you've looked at your LinkedIn feed, that's all that there is on there. Well, today I'm going to walk you through the investment thesis at Lomiko and how we are looking at the multiple ways to win in creating this climate success story. And I think it's an absolutely unparalleled time that we're living through. And as somebody who has been in the mining industry for 15 years, I don't have that, 30, 40-year track record, but myself and the team that came in 18 months ago, we made the switch and the intentional switch to work in the energy transition business, which is a different business. And we also intentionally decided to work in one of the best jurisdictions in the world, which is where I grew up, in Quebec. The disclaimer, you're all familiar with the forward-looking information that I'll be discussing today. What we would like to start with is first principles and first things first. So acknowledging that we want to work the land and the resources in Canada and to do so responsibly and to do it right. And we acknowledge that the land and projects that we are located on are on the traditional land of the Algonquin, Anishinaabe, and Cree-Iyu-Itche people. Today, I'll be focusing on our graphite project. Natural flake graphite is all over Algonquin land. We have acknowledged this, and we have acknowledged it directly with Chief and Council. And I'm very happy that we have two First Nations advisors, ladies who support us on this journey to building trust. The Bourrier Lithium Project is located southeast of the Iyu-Itche James Bay territory in Quebec, near Nemaska Lithium and critical elements. So the investment thesis here, or the multiple ways to win, is to look at where do we want to be 5 years from now. So every day that I go to work, I'm looking at taking the actions and working on the execution of that plan. And that is to be a people-first, respected operator of choice in southern Quebec. We are building a strategic stockpile of graphite. We've heard about battery factories opening up everywhere, but we often dismiss the hard work to get the hard rock out of the ground. And so our challenge is to develop that picture in southern Quebec. And what we have done here is offer a 3 million tons of in situ indicated graphite to investors and 0.7 million tons of inferred. The nice story behind this is about a 100% conversion of inferred resources to measured and indicated that we completed in a drill program this summer. And we have also added 7 regional graphite projects to look at a hub and spoke production model for the company. We acquired Carmen from Silkwem, and Silkwem remains a shareholder today of Lomiko. And we have a scaling opportunity in lithium, working on the Nemaska lithium belt. We are currently in the process of earning our 49% ownership in the Bourrier asset with critical elements. So how are we going to do all of this? Leading with vision and values. That is to say, working within the Quebec framework. We like working in Quebec. It's an amazing place to get to know people and to develop partnerships. And we have developed many partnerships that I will talk about. We are Ecologo certified, and we are going to continue on our quest to bring in communities and as many diverse people to represent the graphite opportunity in Canada. The bottom line is we need a lot of graphite. So we need 97 new mines. It is the most in terms of absolute number of projects from all of these critical minerals or metals. And we want to be one of them and a mine of choice in Canada. The graphite shortfall, and this is really going back to the investment thesis here, is do we have that gem in southern Quebec that has been left aside because the growth in the anode market didn't exist until very recently. So it's very nice for investors to know that we are a new management team focused on the future, not looking back at what was and what has been. And this growth trajectory here tells you that we could, with our right financial partners and a permitting system that we can rely upon, be in the business of producing graphite by 2027. Now, why do I take comfort in this graph? Not because it's issued by Benchmark, but because we've had conversations with many automakers and cell manufacturers in the last months, and they bring their full teams to the table and ask us what we are doing, how they can help, and how we are going to move forward. We know they need natural flake graphite. We know they want it from Canada. We know they will pay for it. So we are in the right place at the right time. Gordana is here. We generally like to do our meetings together. We are a team, we are a strong team, and a lot of this work has been done on the operational front because we believe in execution. So all the money that has been invested in Lomiko, which is about $5 million since we came into the business, including our own personal money to support the business, has achieved these various milestones. Many studies have been completed, 13,000 meters of drilling over the summer. The NI 43-101 updated mineral resource estimate is out, 12 months of baseline studies. And very exciting is the metallurgical works, because this is really to show that we are feeding into the anode market of the future. And we need to show the automakers that we can get there to that high purity graphite that they're looking for to replace the synthetic graphite that they are currently using, at least a portion of it. We acquired in the region, and very important to developing a business and sustainable business in Quebec is working with the community and mayors and answering their concerns directly and transparently. So what can we do overall? Again, going back to the multiple ways to win, we've got a captive audience for graphite in North America. There is more than 769 gigawatts of capacity. And what's interesting about this fact is we used to look at this map and look at pipelines. What we also know is this map would be even more crowded if it were positioned in China. China is not going to be exporting their graphite, nor can we afford to do so because of Scope 3 emissions. So this is our customer base. This is where we are going to be creating our climate success story. We've done some math based upon our PEA, and that is to show our community members and stakeholders and First Nations that this is a project with utility. We can feed up to 300,000, 315,000 of EVs per year with our natural flake graphite, assuming everything is technically correct. We also know that the internal combustion engine, we always talk about the fact that they're still on the road and they're still going to be here because of issues with the grid, et cetera, et cetera. But there is one fact here. It is not a growth market. That market will decline by 20% in the next 3 years, and the growth market is going to be in EVs. So if we look at the PEA and what we have done and achieved and where we're going with this is we have a 15-year mine life, which is highly expandable given the work we've done to expand our presence in the area, a responsible operating plan to go from 15 years to more, looking at a 95% carbon concentrate, which is exceptional, particularly when you know that you can purify that to 99.9% with just 3 cleaning cycles from your flotation plant. We also know that we have a small footprint and we want to continue to work on these 2 deposits, which are open on extension and have now, we've shown, have graphite in the marble zones, which makes for a nice open pit scenario with a lower strip ratio of 4:1. We recently added this acquisition, which is Carmen, and you can see here lots of little dots, lots of work for us to do to move from a historical reserve and resource to something more current. Certainly worth the effort if you look at these grades at 10% and 13% in Site B. So this is work ahead of us, adds additional resources, adds to the investment thesis that we can be that strategic stockpile in southern Quebec. It is a nice mine plan layout. I think what I want to focus on here, we are not looking at a wet tailings facility. This is 85% dry. There is more work that needs to be done, and we are 50% of the way through the PFS to make this more robust. And I would like to thank, and I can't name them here, but we have some excellent partners, consultants, contractors that has shown huge support to move us forward, because what we know is that there is a gap in capital for companies at the resource stage moving to reserve, and we have to fix that. We are very proud to see that we've moved our inferred resource to the indicated category, and I'll just focus on the 2 numbers here, going from 1 million tons of in situ graphite to 3 million life of mine, knowing that overall, by 2040, they're saying you're going to need about 8 million tons per year of graphite in the market. So this is a project worth paying attention to and worth studying to the next PFS phase. The key to all of this is making sure that we are accommodating and understand what the automakers are looking for. And whether that is a German automaker or our partner in Japan, what we do know is we're looking for friendly ally companies that are going to build and support a Quebec story, Quebec investment, and a North American climate success story. So the metallurgical testing has shown we can get to 99.1% in reconciled grades with lock cycle tests. And what you can see on the bottom graph here is that when you're looking at natural flake graphite, you want to have a high prominence of fine flakes. That's what we have, over 60%. By purifying all of that, we are a very good candidate to move to the anode phase. And right now, we are looking to establish an investment and work with partners in Quebec to do more testing for exactly that, which is getting our material, our flotation concentrate, and doing 1,000 kg samples that will allow us to do more work on these trials and anode tests. The NPVs, you can talk price as much as you like, but the reality is we're creating a new market for natural flake graphite in North America. So we can start at 916, which is what we did, but we can see visibility for a clean energy and premium product going up to 1,500, which is currently being sold for the larger flake product. And our NPV there and IRR goes from 20% to over 40%, depending on those variables. The advantage here, we believe we are a tier 1 asset because we are in North America. We are developing for Canadians and the North American solution with a moderate CapEx of not $1 billion, but just over 200 million and a high concentrate product. Finally, to go to the lithium stage, so we're both, we're offering investors exposures to both the anode and the cathode. We see more opportunity here, but being at the very tip of the lithium Nemaska belt here allows us exposure to what is happening at Lamar, and we are currently looking to get our 49% as mentioned. If you know me at all, you know I'm very active on LinkedIn. I'm very active on all social channels. Actually, it's not true. I'm not on Twitter and I'm not on Facebook, but Lomiko is. So give us a follow, communicate with us, ask us anything. And Gordana and I are here this afternoon. We're actually visiting with some of our Quebec City government partners, but we are here all day tomorrow. And it was a pleasure. I don't think we have time for questions, but if there is one, I'm happy. There's time, I'm happy to take questions.
Thanks again, Belinda. It's now my pleasure to introduce Sean Cleary, CEO and Chairman of Strategic Resources. Strategic Resources is a mineral exploration and development company principally focused on its flagship Black Rock project located in Quebec, which is a fully permitted and ready to construct iron, titanium, and vanadium mine, concentrator, and metallurgical facility. Sean.
Right, we're ready.
Okay.
Okay, so there's a new story to me. So in fact, for the room, just a 1 minute overview and I'll pick up some questions.
Yeah, Strategic Resources just completed an RTO of the Black Rock project. So we're a Lumina Group company, Ross Beatty's development company out in Vancouver, major shareholders, Quebec government and Orion Mine Finance. Fully permitted, will produce 500,000 tons of high purity pig iron, 120,000 tons of titanium slag and a significant amount of vanadium slag per year, 39-year mine life based here in Quebec.
39, wow. What was happening before the deal happened? What was the company doing?
We were developing privately, so backed by Orion and Quebec government. So we've invested a considerable sum and gone through all of the exploration stage, the permitting stage, social acceptance, full IBA in place with the Cree Nation government,
right.
As well as development agreements in place with 3 different bands of Innu.
And those done in a private vehicle?
Yes.
Right, okay. And so which vehicle did you use to do the transaction?
Strategic Resources was the existing name of the vehicle that we used. Prior to that, it was called Black Rock Metals.
Okay, well, tell us about the deal because obviously it's the kind of core to what you're doing.
Yeah, so we've ended in the Black Rock project into Strategic and raised 14 million Canadian at the same time. About 4 million from Orion, 4 million from Quebec, and 3 million from Ross's team.
Okay, so the share register looks nice and healthy, but how did you value the asset? Because what was the market cap now? We're sitting at?
Yeah, so we're trading at about $120 million Canadian market cap. We have on the Black Rock project alone, we have $2 billion NPV, 18.5% IRR after tax. We also have assets in Finland, similar iron vanadium assets in Finland. So that's those valuations excluding those assets.
Okay. So I guess there's an expectation that money will be easy to come by because Ross is involved. You've also got obviously local, got Quebec government involved. So you're not too worried about the outlook going forward. But between now and build, you've got a few things left to do.
Yeah, we've got a little bit of detailed engineering to do. We just published a new 43-101 at the end of November. We updated all of the costs for, as we went through the COVID inflation, et cetera, as well as added a number of months to the project execution, just in case there was supply chain disruptions. But we're pretty much ready to go. We probably have, another 4 or 5 months of that engineering work to do, and then we're completely shovel ready. And so what we're working on right now is finalizing the project finance.
Right, and in terms of the different commodities, the different assets and different commodities in there, how does that sort of break down in terms of your focus? Because given the sort of ever-changing markets, lithium seems quite popular. I'm surprised you didn't throw that in there. Should have thought of that.
Think about it.
Should have thought about that. So let's talk about the 3 different markets that we've got. Okay, so Go for it.
Yeah, so our biggest revenue producer is our iron product. So it's a high purity metallic iron. So the steel industry and the foundry industry is going through decarbonization. The Canadian government has invested over $1 billion just to turn off the blast furnaces in Ontario and switch them to electric. As they do that, the use of scrap and the use of pig iron, the use of DRI and other metallic iron is going up significantly. We had already had supply disruptions with Russia and Ukraine, which were big suppliers of those iron products into North America and Europe. So, you know, the industry is really looking at this project to come on stream and fill that gap.
Right. And so the MPV was, what was it you said?
2 billion.
2 billion, right? CapEx?
CapEx is 1.5 Canadian.
And is that the sort of, I know you said you kind of recently reviewed it. Was that you reviewed it post inflation coming off a bit? Is it more up to date?
Yeah, so we were very conservative. Our shareholders are very conservative. And so we assumed the worst case in terms of no inflation coming off.
Right. Okay. I know your shareholders are all very, very rich, but there's the kind of retail portion looking in. They'll kind of want to see some nice, sexy numbers, good margins and so forth. So is that coming down the line? Are you going to review?
Yeah. Definitely. You know, we're a tier 1 producer on the iron and on the vanadium. You know, this project alone will produce about 500 million of EBITDA per year and throws off about 350 million of free cash flow per year and it's a long life asset. So yeah, it's a nice project.
Crazy long. But you got to get it financed. I sort of jokes about your access, your ability to get access to capital. I'm sure you can, but you're also going to have to look at most efficient ways of doing that. Right. So what does that look like for a project of that size? Can you expect like a disproportionate amount to come from government? Are they going to be backing you?
Yeah, so we've had significant sponsorship from government today. And, we have an expectation that they'll continue to support us, as they have in the past.
But okay, the amounts till now are kind of derisory in the scheme of what you're going to have to spend to build this thing, right? So what I'm asking is, will they be there for the big ticket items? What do you need to prove? Are you in conversations, in fact, about this with the various departments of the Quebec government?
We are, and I think that not just related to the capex of the project, but as well as related to the infrastructure that surrounds the project. So there's power lines that have to be brought to the Port Saguenay, where the metallurgical plant. So we have a lease at the Port Saguenay on an industrial park there. So there's electrical lines, there's a gas line as well that has to be brought, and there's conveyors that are being looked at to go down to the wharf, et cetera. And all of this is, important related infrastructure.
Okay. And if I just look at the commodity prices as well, in terms of what were your assumptions? So what have your assumptions been so far?
Yeah.
Because most people kind of like to do, looking out at the distance.
Yeah.
So you've got vanadium in there, fairly erratic behavior over the last few years.
Correct.
Also, I know there's an expectation that it will grow.
Right.
VRFB batteries.
Yeah.
Big part of what people see going forward.
So we were pretty conservative. We went with the long-term mean in terms of the vanadium price. So, which is pretty much currently spot right now.
Okay.
And we got third-party studies done on all of that by, the reputable, marketing groups.
Right. And so how do you ensure that you don't kind of give away? I know it's 39 years, it's long.
Yeah.
So in a way, you kind of maybe don't care too much about being too efficient upfront, because you play catch up with cash flow quite quickly.
Right.
But let's say you are. How do you maintain control of as much of the capital inflows into the company as possible? Not giving away stuff on NSRs or takes or.
We don't have any royalties today on the project, and our target capital structure is 50% equity, 50% debt. We may have to get creative in terms of some of like the last mile capital, but we're going to be as conservative as possible.
Okay. Yeah. So what are the options available to you given the scale of what you're talking about in terms of the equity portion?
Well, there'll be a public common share piece, I think, as well as convertible debt piece.
Okay. And so anyway, so the trouble with, I think, anything with Ross Beatty is like, it seems like a done deal before it's actually been put together because past performance, etc.
Right.
So what are the kind of the potential bumps along the road? You're a conservative group. You must be looking at mitigating risks. What are the risks that you're looking to mitigate?
Yeah, I think the big risk is really just the project execution on construction, the people risk, supply chain issues that may linger from, the pandemic, et cetera. Those are the big ones. And, everything else, I would say, perhaps inflation, depending on what happens.
It's taking a lot longer to come off, isn't it?
Yeah.
Right. Okay. You're not talking about any market factors with regards to the commodities, though, I noticed.
I think we're pretty confident about where the market's going in terms of the vanadium and in terms of the, demand for metallic iron. I mean, we're in a shortage today on scrap and metallic iron for these transitions. And, there's really a coming shortage on the vanadium because of the growth of the battery space.
Right. Okay. And with regards to the team of putting this together, clearly, I'm assuming you're going to tell me lots of them have done it all before, have they?
Yeah. Well,
okay.
We have Lumina Group. That's one of the reasons why we did this deal with Strategic and, really added to the bench strength with a team of that have done it many, many times in the past.
Right. Okay. And you're undervalued. We'll take that off.
Yeah, we're definitely undervalued.
So, but what do you?
I mean, we're trading at sort of 0.1 times NAV or less than that. So.
But you've kind of moved quite quickly. I'm not sure you've given people time to sort of breathe and assess what it is that you've got. So you're busy 5 months coming up. So in terms of those that messaging to markets, it's what are we looking for? What's good going to look like?
Well, I think the announcements around the debt first, and then finalization of the equity piece, and then notice to proceed, and then we're into construction, and we have about just under a 3-year total build, start to finish, including ramp up. So that's what we're at, and we're also looking at some corporate development. So we have quite a bit of activity. We've got a very good, activity overall in terms of what we can add into the mix.
Right. Okay. And the game plan being what? Obviously, when you're throwing off cash, that's a kind of 39 years. That's a big annuity stream of cash.
Yeah.
Which I'm sure Limited Group would love to kind of forward sell a chunk of at some point. So is there kind of an understanding between all parties as to what the exit strategy looks like and when that is?
I would say, to be determined. We have a lot of interest on the offtake side for the materials. And so there's a lot of discussions going on with different groups in terms of, their interest in the overall project.
Okay. And is there anything you can do to kind of enhance the project? I mean, what does it look like? You focus on the build. Clearly, is there much blue sky after that? As if
tremendous blue sky. This is a company building project. So, and we want to use this as the way to build a great company. So we have a second pit that we've already drilled off. So we could double production at the mine. We've also done bankable feasibility study on the titanium to basically produce a very nice pure ilmenite concentrate, as well as there's a number of different levers, I would say, at the metallurgical complex at the port, where we can partner with different groups, and we're looking at all of those angles.
Okay. Do you need the titanium and the vanadium for this project to work?
They're really the gravy on top. So the iron pays all the bills, and it's a nice project from that perspective to have 3 revenue streams. To have everything paid by the iron, which is going to be a very secure revenue stream. And then we've got volatility with the vanadium, as you mentioned. That provides some interesting upside.
Terrifying.
Yeah.
Well, it sounds like the game for you is to kind of let us know what's going on, how things are advancing when you kind of move through the FID and clearly, obviously, the financing of all of the above. So appreciate that. Good story.
Thanks, Matt.
Okay. Cheers.
Cheers.
Thank you. Bye.
Thank you.
It's my pleasure to introduce our next keynote speaker. His name is Robbie Diamond of SAFE. Robbie.
Hi, everyone. I'm Robbie Diamond. I'm actually born and raised in Toronto, but I've been living in Washington, D.C. for 23 years. So I'll have to put on my Canadian hat and my American hat at different times. I wanted to talk to you about SAFE and our view on what's going on in Washington and in the allied world about what you've all been talking about today. But when we started SAFE in 2004, there was a war in Iraq, Afghanistan, and a global war on terror. And really what concerned us is we were fighting these wars for resources. And everything in Washington was went down to the great beer debates in the light beer category. Tastes great, less filling, or drill more, use less. And that was very frustrating. And so what we decided to do was to recruit 4-star admirals and generals and CEOs of major companies to talk about what was needed to end the economic and national security risk of oil dependence. And what we said was we should use more and have higher environmental standards. We should use that as efficiently as possible, squeezing every dollar of GDP we could out of a molecule, and then finally move to electrification. Because electrification offers something that that our dependents, our being hostage to one fuel source in cars did not. We could use domestic, diverse, and abundant fuels. But also that electricity is basically stable in price, mostly in North America. As you can see, the bottom line is the price of electricity. The other lines are the price of oil, CNG, propane, and diesel. So this offered something. As one great airline once said, I could run an airline at $20 a barrel, and I could run an airline at $140 a barrel, but they'd be two totally different airlines. And when decisions are being made in the desert or in Vienna by OPEC, it is very hard to run a company. And so we proposed electric vehicles. And of course, in 2008, we started the Electrification Coalition, which is our sister organization. And this was a time when environmentalists hated electric vehicles. They would come to our office and complain, these are vehicles that will only run on coal, we should not do this. But thankfully, they had a change of heart, and we now have a massive market growth in all area segments. Really, we have a policy arms race going on in the world between the European Union, China, and the United States, whether they be incentives, whether they be mandates, whether they be subsidies. Somebody at a federal level or at a state level or at a provincial level is mandating or telling someone to do something. And everyone is trying to outdo each other. Now, unfortunately, a funny thing happened on the way to the forum. We started going from the Saudi frying pan into the Beijing battery fire. That is what concerned us at SAFE that started as this group that wanted to end our dependence. And really what we're creating now is China will be not just OPEC, but OPEC squared. When one looks at the diversity of players inside of OPEC, and then one looks at, of course, the processing in particular of all these minerals and metals, what you see is we are creating a much bigger problem. Hopefully we will solve that problem, but this is of great concern. So it's not all these players that are going to be negotiating with each other, but one player. Of course, adding to that, not only did we see these supply chain issues during COVID, but we had these, but we've of course, Europe in particular has experienced what it's like to be dependent on another power for their resources. So really, we've set up, I think, in the Western world, Summit for Democracy, or really a war of democracy against authoritarianism. And I think that that speaks very much to the moment at hand. You know, this is what happened in in the Second World War. Really, if one would be sitting there in November, who would have thought that the United States would have totally changed its entire economy? Now, of course, that could not have happened without Canada. And we see a lot of the aluminum up here today is still from that time. So really, we are talking about a new arsenal of democracy. And what I wanted to show was looking at the supply chain today. And if you can see this, Really, it just lays out the different players that are currently giving to the United States different parts of all the parts of the battery, the lithium, the nickel, the cobalt, the manganese, and the graphite. Now, you've been hearing that all day. That's everyone's sales pitch. This lays it out, and it's like one would want to tear their hair out, pull out their fingernails. This is a terrible situation. But the truth is that we can have an allied supply chain. And it is frustrating sometimes to see the players, even in Washington and other places, trying to, of course, get the cheapest product as fast as possible to deal with climate change or for some other reason, as opposed to taking the time that is needed to build out the supply chain. If one looks at the largest players, now Canada, and I'll get to in a moment, is not the largest player in many of these areas, but if one took the allies that the United States has, then one would see that it is not only, it is very possible to do this if one just took the right amount of time. And so I think there is a hopeful picture here. Now, whether in the United States they actually live to the words that we say, what we want to do, or what other countries say that they want to do is another question. It's much easier to write a 100-day supply chain report than actually to do it. Now, I think, although, as I said, Canada wasn't on all those, top tier places, Canada is, of course, the greatest asset that the United States has, not just because they sent me from Canada to the United States, but all your other resources besides myself. Now, it's a good thing my name is Diamond, and suddenly I'm in the mineral business. But looking at Quebec, looking at Canada, really, it's an incredible fortuitous thing for the United States. Now, that being said, and I think you've heard it from the Ex-Im Bank, head of the Ex-Im Bank. You'll hear it from Gary from the Commerce Department soon. But so I will not lay out why Canada is so special. You probably all know. You do hear about the Defense Production Act. You've heard about how the materials here are considered domestic materials, part of the Five Eyes and everything else. So I think that the opportunity, of course, is massive. Now, it is hard. As someone who went down to the United States, I certainly know that the United States is a difficult partner to have because when they sneeze, you catch a cold. So it's always quite difficult. But what really concerns us is not just that you can do the mining and that you can build the products, but we at SAFE are worried that there's a longevity to these because the player on the other side, China, is not playing the same game we are. We are playing a certain set of economic rules, and they are playing a totally different set of economic rules as a totally integrated partner, integrated country whose companies and government are really the same thing, and who are now clearly not prioritizing growth, but prioritizing power. And of course, in the United States, we have, of course, aren't shipping them semiconductors. So there's a day in the near future where they say, sorry, we will not sell you the minerals until you have to buy the whole battery. And sorry, we won't sell you the whole battery before you buy the whole car. And at that moment, the end of the industrial base of the Western world is over. And so we think because of this problem, we need to have radical transparency in our supply chains because everyone here is operating at a much higher price. And and when you have this actor that can manipulate the price because they have such vertically vertical integration on their supply chain and such a big player, that puts us at a risk, especially when we have these markets. So what we need to do is create radical transparency in our supply chain, infuse our values into that supply chain, and then allow us to have both enforcement mechanisms. So everyone has their ESG reports, everyone says they're doing all these things, everything is voluntary, but in reality, everyone just wants the cheapest price. And so over time, this has to be the next wave after World War II, we created the World Bank, we had created the IMF, we created Bretton Woods. This is the future. And especially if you are in this business, from the mine all the way to the final product, there has to be a premium, and everyone needs to know what your human rights, your labor standards, and your environmental standards are. And if we don't do that, and we do not have enforcement mechanisms, I fear that we will build things today that will go bankrupt in a few years or 10 years when it's no longer in vogue. And so I think that we need to be thinking bigger, bolder, and we need all countries to be doing this together, whether it be the United States and Canada and Australia, Europe, Korea, and Japan. And that is really what we're trying to work on. Opaque supply chains are the friend of the authoritarian regime. Transparent supply chains are the friend of a democracy. So what's next in Washington? Well, the IRA was passed, the infrastructure bill was passed. We're throwing tons of money at something, but right now the rules are being written. And I certainly have concerns that although the tinker has shifted to this sort of domestic allied discussion, the rules are being written to be watered down every day. And I would just say, I would not panic. I'll get to that in a moment. But, everyone is in there trying to say, oh, CAM materials should not be part of North America. They should now be like, actually, there's no category for them. So who knows? Or the foreign entity of concern provision that's supposed to allow us to know what's going on should be like maybe 51% and 49%. Well, of course, that's a perfect recipe for everyone to, manipulate their books when companies could be on 0% by China in particular and yet be totally controlled. So for us, this is a big issue. Everyone's running around creating partnerships and clubs and all these things. But what does it come to? We are at this moment, I think, of real questions here going on. Now, the reason I say not to panic is because China politics is a bipartisan wave in the US. Maybe it's in other places too. And I think that all those companies, when I have a chance to brief many boards of directors of many of these companies, that battery, car, and others, I sort of say to them, if you think your battery is going to fit into some nice box at the moment that is defined by the IRS, and you just fit in, I'd say that is probably a bad decision. Because you are making multi-billion-dollar, multi-decade decisions in an environment that is incredibly volatile. One just looked at, of course, what happened in the Ukraine, but one just has to pick up the paper every day. And then one just has to read what every politician in Washington in particular, who love to outdo each other, are saying. And so I think that over time, this will be like a tsunami that sweeps over your current plans and lay them to waste as the wave goes back out. Before leaving, I thought I'd spend the last couple minutes on move off for 1 second, just batteries. And I think we have gotten too into the battery and the electric car, which is something we care deeply about. But we do also have this technological convergence, this convergence of large telecommunications.
Convergence de grandes télécommunications, les big data, les capteurs et les batteries. Et c'est agi de mettre toutes ces choses ensemble. C'est ça qui va nous permettre de préparer l'avenir que nous voulons.
In the mineral sector for a lot of these other technologies, as you all know, whether they be the semiconductors, some of the other renewable energy, and sensors and everything else. So I think this is a big deal. And the way we are trying to think about it at SAFE is really this holistic approach. So what is the allied approach to have a transparent system infused with our values? How do we say to ourselves in the top right-hand quadrant, I guess, about materials? How do we make sure that we use all those technologies together to create the most efficient use of these materials? Because there's a lot of materials that we're going to need, right? So we can if you have autonomy, you have other types of technologies, you can right-size vehicles, you can make them smaller, you could purpose-build vehicles, you could, whether they be micro-mobility, everything else that goes with that. You can create the nega chips that are not needed because you now have things like Zoom and everything else. Then the question is, how do you make sure you have all the materials that we need, whether they be new mining laws, whether they be using old mines and tailings, whether they be the global south and what we need to do there, the transparency that I've talked about, and then finally the circularity. And I think black mass is the thing we need to talk about. What happens if we have all these cars and we then want to recycle them and then we ship all that back to China? The question is, should North America be keeping this here? Should NATO be keeping it, all their black mass? And I think that's our next debate. And then finally, I'd say, because we're in Quebec and you have such great hydro, what people do not understand in Washington is that it is really about energy. Energy is what is needed to crush rock, to process, to do these things. When you look at aluminum and why they've just closed the last, 2 more smelters in the United States, it's because we do not have the energy. So it's not just about the materials, it's about the energy. And so I just end by quoting a great artist, John Fogerty. It's deja vu all over again for me. Every time I think we've pulled ourselves and have a solution, we just get dragged right back in to the authoritarian regimes. But I leave on a message of hope. I think we can do it. And we look forward to working with all of you in Quebec with all your great resources to work and build this allied supply chain. Thank you very much.
Excellent. And thanks again to Robbie for that very engaging discussion. It's my pleasure to introduce our last keynote speaker of the day, Gary Stanley, the Office of Materials Industry, U.S. Department of Commerce, International Trade. Gary.
Well, thank you so much. I want to begin by saying a very special thank you to Joanne and to Jennifer and to the folks at THE for the invitation. It is truly an honor to be here with such distinguished folks and to hear the marketplace of ideas, as well as not only the challenges, but the opportunities. And as you see on my slide to begin with, United States and Canada, we are global partners in the world's energy transformation. And as introduced, I'm actually now, since November, I'm actually the director of a absolutely brand new office known as the Office of Critical Minerals and Metals, and applause to the Biden administration for understanding the need for a singular sectoral office specifically focused on the critical minerals and the metals area. So who am I and where do I come from? I'm in the International Trade Administration at the U.S. Department of Commerce. And as you see on the screen there are three primary operating units. The one in the middle is the one that I represent, which is the Industry and Analysis Unit. And we're all about sectoral coverage. We're looking at global competitiveness. And particularly in this administration, we are looking at issues of supply chain resiliency, looking to the future of exactly how do we create what is oftentimes said as reliable supply chains and sometimes resilient supply chains, but there's one factor that isn't talked about enough, and that's affordable supply chains. Because you can stand something up and you can do something for a period of time, but if they're not affordable, if your customers, your offtake agreement folks, your OEMs, your next stage in the processing area can't afford it, then exactly how long will they be resilient and how long will they be reliable? On the left, you'll see a unit called Global Markets. I mentioned them because that is our boots, if you will, or at least our dress shoes on the ground around the world. And here you see the slide for our Commercial Service Canada folks, which are here in the great country of Canada. And we have 4 offices. We have one in Calgary, we have one in Ottawa, we have it in Toronto, and of course, Montreal. And so this is a local source for folks that want to learn more about what the federal government is doing and what resources are available. And all you have to do is go to that website and you can avail yourself of all of our services and our information, but also our staff for the various offices. So at the beginning here, you hear terms that are thrown around, I think, too oftentimes without real depth of understanding. Sometimes the phrases get too cutesy in my view. One of them is whole of government. So when I present and I tell people, well, when I say whole of government, what is it? Whole of government is what you see on that slide. Basically, you're looking at 15 federal agencies in conjunction with the White House, all of which that have critical mineral related services and programs. And so this has been the approach of the Biden administration very early on. Early in the administration, the president released Executive Order 14017. That set the stage for so much of the work that is not only being done by the Commerce Department, but as you saw earlier with our friends at the Exim Bank, but there's also the State Department, there's Department of Energy, Department of State, and all of those other units that are represented on that landscape. Why? Well, as you'll see in a moment, this is in fact not only a whole of government approach, but it's also a whole of industry approach. And to be able to be strategic in your thinking, you have to bring the best minds together. Executive Order 14017 required 4 100-day reports, one of them being on critical minerals. And if you look on that chart, I could have gone through the whole litany, but these were the ones that really stood out to us, which is the long-term solution to this problem has to involve a combination of domestic processing, but also investment and trade with allies and partners. Again, back to that whole of government approach, you go back to the previous slide, you saw all of those executive branch agencies and programs of the government. But there has to be done the right way. Let's face it, folks, there are a right way of doing things and there's a wrong way. The way to do it right is to promote and stick to the highest of environmental, social, and governance standards. That way you show the world a better way, a different way, a way where it's sustainable, where you take into consideration those disenfranchised people that don't feel like they have a voice. We have to be that voice. We have to be the one that stands up for them, speaks to them, and represents their concerns. It also is looking at a supply chain problem. Critical minerals isn't the problem. It's the supply chain. It's looking at it from extraction all the way through processing and then to complete the loop for recycling and reprocessing for the future. Government support has to involve what I have called for years as above ground mining. It's recycling. It's those sources of secondary materials that are no longer used by the consumer or by the industry, but is a valid source of critical minerals. Thirdly, this surprises so many people when I share this data with them that US-Canada in the area of critical minerals and strategic materials trade exceeds $76 billion. That's not a typo. It's literally billions of dollars. And the importance of the relationship between Canada and the United States cannot be overestimated. I think it is the single most effective, most powerful strategic country-to-country partnership in the world. And again, I think we can do it as good, if not better, than anyone else. These were the basic recommendations that came out of the 100-day report that was actually led as the U.S. government's report through the Department of Defense, but all of those agencies on that screen were able to participate. And you see key themes that are here in Canada, just like they are in the States. Particularly, I want to draw your attention to number 3, which was talking about the use of the Defense Production Act and the use of other government funding sources to support these supply chains. I also draw your attention to the 7th one, which is where we avail ourselves of the experts around the world, but around the hemisphere as well, on getting the best, most current information, because we have so much to learn from our folks here in Canada and elsewhere. We were excited at the State of the Union address. Now, that's hard to believe. How many people was the last time you heard somebody said they heard something at the State of the Union address that excited them? Well, I did. I watched because I had a sense that there was going to be something said about the supply chain issue. And I pulled 3 quotes from the President's State of the Union address that for our office was both invigorating and encouraging, because the President in his remarks specifically talked about critical minerals and how they fit into technologies and innovation of the future. And particularly, we're investing in our alliances and working with our allies to protect those technologies. Among the things that we have to have as part of the conversation, if you're going to be honest in the conversation, is you have to talk about mining. You have to talk about the controversies and the challenges associated with refining the U.S. mining policy that has not been updated since 1872. Now, if this was Jeopardy, rest in peace, Alex Trebek, I would say, what was the event that led to the creation of the first and only U.S. mining law? It was actually known as the Gold Rush. And at that time, it was determined that there needed to be policies that didn't discourage mining, but encouraged it, and did it in such a way as to do it, even back then, in a sustainable manner. recognizing the impact of mining. As mentioned earlier by President Lewis, we have gotten so much feedback on the Defense Production Act. And specifically, as was mentioned earlier, the fact that Canada, as we'll see on the next slide, is considered a domestic producer and supplier under the Defense Production Act. Again, going back to those recommendations from the 100-day report, it specifically said deploy the DPA and other U.S. funding government programs. I flagged this because in February of this year, the president updated the determination on the Defense Production Act funding. For more than a year, there was what we called the Big Five, the battery technologies and the battery critical minerals of lithium, nickel, cobalt, graphite, and manganese. And he said, no, we're going to expand that. And now you have greater funding opportunities across a number of the sectors and materials that are represented under Executive Order 14017. Won't delay here on the Inflation Reduction Act. It was mentioned earlier and appreciated Robbie's comments about it as well. It is on the books and it is something that has impact not only on our domestic capabilities, but also, again, our trade with allies and partners. I would get shot if I didn't mention the CHIPS Act. It is commerce's biggest funding mechanism out there in the area of critical minerals. But of course, it does move dramatically beyond the five battery critical minerals and goes into things such as rare earths. We're now having conversations about helium, about noble gases, about germanium and gallium. These are just areas that we're looking into now. We're anticipating another funding opportunity announcement, perhaps later this summer or early in this fall, that is looking at materials that go into making semiconductors. The partnership with Canada is one that is to be lauded. It's to be celebrated, and it's to be worked at. What we're doing is hard work. If it wasn't, everybody else would be doing it. But quite frankly, the partnership that we feel with you, as I hope you do with us, is the idea of being able to leverage these relationships, not for a year, but for a generation. I said the other day, this generation's got the hardest job of all, because it's transformation of a kind nobody could have even envisioned just a few years ago. And the partnership with Canada is one that is to be celebrated and frankly should be leveraged to the maximum. The limitations are us. Say again, the limitations are us. There's nothing we shouldn't be able to work through together. Supply chain working group, specifically highlighted by the two presidents recently. There is, as you can see on the screen, specific areas talking about critical minerals, electric vehicles, and batteries. But again, look at number 9. Again, it's emphasizing that aspect of recycling, recovery, reuse, and repurposing of batteries. There's so much for us to learn and to share in this arena. Focusing quickly on Quebec, it is a tremendous potential in this province. I've been absolutely impressed to a way I can barely put into words of how passionate the folks that we've talked to, both from the consulate, but also from the provincial government folks, the industry people, absolutely impressed with the passion and the commitment that they have for this. And I just wanted to highlight just a few of the major projects that have come, particularly in Quebec. And again, this is an expression of commitment and pushing against barriers and creating new opportunities that a few years ago never even could have been possible. We also know of that Tesla had recently made amendments to its offtake agreement with Piedmont Lithium, and of course GM and POSCO support for a CAM EV battery project. Again, it's these kinds of projects that we believe are the kinds that set the stage for investment. This conference's focus is about investment, about not only government investment, but venture capital and financial investment. We also have, as I said, mentioned, we have also a consulate in Ontario, and we also receive a lot of interest about the Ontario province as well. And again, just a couple of things just to heighten. And you'll notice at the bottom there, during PDAC, there was a U.S. government, our agency hosted a roundtable at the consulate in Toronto. I had a chance to participate in that. You can't see me, but I'm the little guy right there at the far end right of the picture. But it's that kind of conversation where you have a very frank, honest, open dialogue about what are the challenges, but also what are the opportunities? What can we learn from one another? And what can we do better going forward? As mentioned earlier about the Mineral Security Partnership, again, this was the launch of the MSP in June of 2022. The work in that area continues. State Department does have the overall lead for that on the federal government, but this is an activity that obviously that involves industry as well. I highlight the highest environmental, social, and government standards because, again, that's doing it the right way. There are too many places around the world, in Asia, in Africa, and even Latin America, where these kind of standards are not being held up. And there's a price to be paid for that. Other funding opportunities are available. EXIM is here, and as you saw earlier, the president was here. I think it's where imagination as well as the boundaries that are there are to be respected and appreciated, but also they're to be updated and changed accordingly to make sure that we make every single opportunity we can to put funding to the right projects at the right times. Thank you so much for your time this afternoon. It's absolutely a delight to be here. I thank you, Joanne, and everyone else for their participation. Thank you, folks, for staying around this afternoon. Enjoy the rest of the conference. My pleasure.
Hello, everyone, and thank you very much for staying to the end of the day. Gary, that was great, super insightful, certainly insightful. And of course, this ends our incredibly packed Critical Metals Day today. Before we leave, once again, we would like to thank all of our sponsors for their amazing support for the event. And please remember to join us for cocktails this evening, hosted by Laurentian Bank and Troilus. And that will be at 6 to 7:30 p.m. at the Frontenac Rooms. For those of you who were there yesterday, it's the same place. And then we're going to have an After Dark event again at the Sam Lounge. And this will be sponsored by our friends at Steeple GMP from 9 p.m. to midnight. It was a packed house last night. So please bring your badge. Remember, no badge, no drinks. Not my fault. Got to bring your badge. And finally, just a little note. If you could please help us support young girls in developing societies with our Chico initiative. What we're doing is we're supporting them with their education and startups by donating a portion of the proceeds from the event to that cause. And we have a donation box. You can just put whatever you want in it. Put your business card there. You have an amazing chance to win a painting by Bertrand Tramel, who's our artist here. Many of you have seen that. And if you could help us with that, that would be amazing. And so with that, I will call it a day. Thank you for everyone for joining us, and we'll see you tomorrow morning. Thank you.